there. Keep an eye out for United Spirits in case it is doing well on a half decent day today. And IndiaMart Intermesh, I'm not sure. It came into the conversation because of Pulak Prasad buying into it, right?
The interest, but largely I think it's mixed.
No, the numbers, I mean, okay, Sharad has put it well actually, it's mixed because I'll tell you why. December quarter results beat estimates, but they lost about 1,000 paying subscribers. It had added 2.8 thousand paying subscribers in quarter 2. So therefore this mismatch continues for IndiaMart Intermesh, and the company noted that because of zero subscriber addition, the zero subscriber addition might persist in quarter 4 as well. And I think Jefferies, in a note, while they've upgraded the stock, they say that collections growth is unlikely to sustain above the 15% YOY levels because of the inability to add subscribers. Remember, as we said, that this stock came into conversations because Nalanda, which is owned by Pulak Prasad, upped their stake there, but the numbers don't inspire too much of confidence. Their commentary doesn't inspire too much confidence either.
That's correct, but Neeraj, an interesting stock I've taken is Embassy Development. Just to put in perspective, it's Indiabulls real estate, and after the reorganization, the name change, and driving around Bombay, a lot of advertisements are also coming, and after long, like after 5 to 6 years, I'm seeing the brand coming back, and that's why I picked up this news flow. They have launched 3 residential projects in the MMR region. The gross development value stands at roughly 12,000 crore rupees. Now these launches, they are planned in the 4th quarter of FY26, and the company plans to invest roughly 4,500 crore to increase its Mumbai footprint. The stock has been, seeing a big massive selling pressure we had seen earlier, and this trading at around 63. So major correction has definitely happened in the stock, but you can definitely have a look at this. The second stock, it's JSW Energy. The arm has signed a power purchase agreement with West Bengal Discom, and this is roughly for a 1600 megawatt thermal power plant, and the total thermal capacity that will increase to almost 10,658 megawatt. It's a kind of a stable stock, a stable business model, and that's why I've picked up in because of so much uncertainties all around. But there is some value unlocking also, and that's where I get you the third stock. That's the Edelweiss Financial Services. Its subsidiary EAA India Alternatives. They have filed a DRHP with SEBI to raise up to 1,500 crore rupees through an OFS. It's an alternative asset management platform. It's one of the largest in India, but of course the valuations is something which the street will be looking out for. There has been instances of value unlocking from Edelweiss Financial Services. Earlier it was Nuvama. So that'll be pretty much interesting to see what happens to the stock in the initial hour of trade. Well, then now there's a time for a short break, and on the other side we'll get you the top trading strategies for today.
Is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying.
Back with India Market Open right here on NDTV Profit. Pull up the implied open and just see what's the quantum of green that we're seeing. Actually, not much, just about flat. But you know, this is welcome after the literal carnage that we had in the markets yesterday. The question only is, as I noted, as Sharad noted as well, and as Hiral spoke about too, the worst start, RSI indicators oversold. More importantly, you look at any stretch of imagination in the market under normal circumstances could be a screaming buy. Just that these are not normal circumstances. Kush Bora, Parag Thakkar with us in the studio as always. Gentlemen, thanks so much for joining in. Parag bhai, today I'll start off with you. I alternate every time, right? So I'm going to start off with you. Are the hands itching to put money to work?
Itching, ekdam thumping that I don't know where to thump.
Okay, now describe this, Parag, because you've seen this tape play out many times in the past, right?
As you rightly said, see, there is unprecedented geopolitical tensions, right? And bond yields spiking up globally. So all this is very scary. But during this time only you get a good value for a good blue chip companies. But if you have to hold for medium to long term. You have to ride through these unprecedented times. And that sometimes is difficult. It tests your patience. It is testing my patience as of now. But I would say that, so for example, ICICI Bank ADR was down yesterday 5%. Okay, now there is no problem in ICICI Bank, right? Now growth from here will pick up, asset quality will remain robust. They are optimizing on OPEX control also. So I would say that, and Mr. Sandeep Bakshi, people forget, we will say that 3 years nahi hua, but he is there till October 28, it is 2.7 years from now. So I would say that ICICI, HDFC Bank, even Godrej Consumer kind of companies, I would say that Oberoi Realty, for example, for luckily I was not holding, I was just liking the stock. Yesterday it has fallen 7%. And now we are getting closer to new launches in Oberoi Realty. So I would say that there are many companies, blue chip kind of companies, which have fallen and rogered completely and which are screaming buys. But you have to gradually buy because geopolitical tensions are too high. And bond yields, most important.
Yes, sir. Parag bhai, the realty space, that it's been punished a lot. It's down 5% yesterday in the Nifty Realty Index. Is this too much of overreaction happening in the realty space, or what is it happening?
So I think, see, on ground, if you see, demand has reduced a bit, definitely. That is for sure, because the wealth effect might be fading away because stock portfolios are down and sentiment is down overall. That is okay, but I would say that in a reducing interest rate environment, at some point, some good developers will start doing well.
Okay. So that's broadly the pain in the market. Now, can that turn from a trade perspective, Koshpura? That's the question. Do you have the guts to go long in what could be a screaming buy market?
One word answer, yes. But before that, ये cheating है. आपको हमेशा कैसे पता चल जाता है मैं क्या बोलने वाला हूँ? And just for viewers' benefit, I never share my script with anyone here, especially Neeraj. But when he says ये tape तो आपने पहले play out होते हुए देखी है, right? Let me ask you something on very similar lines, right? If Trump were a movie, okay, and be honest, would you really go and watch the sequels?
I will get out in the interval only.
That's a good answer. That's a very good answer. See, so let's just decipher the plot, right? A high stakes world-ending announcement, okay? Then big theatrics, okay? Then you have a global market sell-off. Then 2-3 weeks later, there is some sort of weak reconciliation, markets back to all-time highs. We are seeing that tape play over and over again, right? If if the money weren't involved, and the only reason I say this is a high budget movie is because world over investors' money is being, like Parag Bhai said, rogered, every now and then. Yeah, that's the only reason this is a high budget movie. But otherwise, this is a very, very repeated, predictable plot. The short point here is, in a scenario like this, I understand there's a lot of panic because you're seeing your profits and portfolios go down drastically every day. The idea is very simple. Focus on your long-term to medium-term objectives. Ignore the daily noise, especially that is coming out of US, if you can, correct? And just try and be a little objective about it. Right now, do you go out and buy in the market? Like Parag Bhai said, if you can, you should buy in a staggered manner. There is every data point screaming that this market is oversold. Let me just give you a quick, numbers. PCR at 0.64, Nifty RSI below 30. 70% of NSE 500 stocks below the 200 DMA, 80% below 50, and almost 90% below the 20 DMA, right? So, and FIIs also, by the way. 3 lakh contract shorts, which is very close to the record levels. So any kind of positive trigger could lead to a very sharp pullback rally. Does it happen today? Does it happen tomorrow? Maybe not. But from here on, positionally, the risk-reward ratio becomes very attractive for a long trade. It's just that because of all the noise that's going around, where do you enter? That's the big question. Like I've mentioned in the past, for the past few sessions, don't be preemptive. Let the markets rebound. It's okay to miss the initial 200 points because you've got the next 500, 700, 800 points of rally. So don't be preemptive and play for the rebound. That's the idea. Just a quick word on Bank Nifty. Beautiful setup here because the big heavyweight private banks are oversold and the PSU banks are in a structural uptrend. So I prefer the Bank Nifty over Nifty for a long trade. Again, just don't be preemptive. When you see that rebound, go out and buy.
Now, we have the management of J&K Bank waiting by, but it's important to just quickly finish off this circle and Kush, figure out the stocks on your list as well, because a lot of people would want to know if you're playing stocks right now. Very quickly.
I am 3 stocks, 2 segments of strength and 1 of weakness. JK Cement and Dalmia Bharat, are a buy. JK Cement for targets of 6030, 6190, stop loss at 5740. Dalmia Bharat, it's a repeat call by the way, 2230, 2285 targets, 2120 is where you keep that stop loss. ICICI Bank itna gir gaya hai, screaming buy to banta hai. 1415, 1455 are your targets, 1355 is your stop loss. This is more of a positional bet. Even if you do get any kind of a dip today, consider this as a buying opportunity.
Okay, so in some sense, you're talking about banks and a dip could be a buying opportunity. Fundamentally, Parag Thakkar has said that he's wanting to buy into ICICI Bank. You are buying ICICI Bank for a trade as well.
Absolutely. And look at what I mentioned.
What are the stop losses?
The stop loss for ICICI Bank is 1355, but look at HDFC Bank. Yesterday we said that the RSI is below 30, it's oversold. That was the one big bank that actually ended in green amongst the market carnage, right? So somewhere fundamentals and technicals will come to play.
So ICICI, HDFC, both of us are positive.
Okay, perfect. Well,
but
gradually. Okay. Well, nothing gradual about J&K Bank though, and let me get in Vishwanath Nair to talk about the quarter and take it forward with the management as well. Vishy.
All right, so J&K Bank actually delivered a mixed quarter with softer NII but higher profitability for the bank alongside continued improvement in the asset quality scenarios. Of course, sequentially, both gross NPA as well as net NPAs have improved. I've got Amitabh Chatterjee, the MD and CEO of the bank, with me to discuss the numbers and take it forward from there. Mr. Chatterjee, welcome to this conversation. Let me start off with what actually contributed to the rise in profitability for you this quarter, considering that the NII has not been quite soft.
See, if you look at all the components, we have improved on all the components. Since we had a very robust credit growth, so the average advances went up. That led to a very good interest income. That is one. Second, we had a very good recovery in lost assets, I would say, NPAs which were fully provided for, so which resulted in reversal of provisions. Then we also had a very good recovery in written off accounts. That also contributed. It is and the other income also contributed. Including these things, other income also contributed largely towards the improved profits. I would say the cost of deposits went down slightly from last quarter because of the transmission of the interest rates happened gradually. I would say all the components have shown improvement in the bank.
Sure. This quarter has also seen a sharp increase on the credit growth front. Can you tell us a little bit about what you're expecting for the year? Earlier, you had said 12 to 15% credit growth, but are you expecting to end the year higher?
See, we have YOY, we have grown by 17.28% gross advances. So it is much above the guidance that I had given. Obviously, I had said the initial beginning of the year, the guidance was 12%, but by the end of second quarter, I was very confident about the pipeline that we had. So we have comfortably crossed 17% YOY. However, I think we still will maintain that we will be around 12 to 15% end of the year. Looking at the subdued deposit growth that has happened in the industry so far. So I would say that 12 to 15% I'm absolutely certain of achieving. So if we look at the year-end targets also, we have achieved 9% of that. So the 12% guidance is almost, a month away from here. So that is not a problem. But yes, 12 to 15% would be good. But this, up to this quarter YOY, the growth has been 17%, 17.28%.
You talked about the subdued deposit growth across the industry, but specifically for J&K Bank, that gap between advances and deposits is quite large, the growth rate gap. How do you actually aim to bridge this? Because 700 basis points is large.
True. But this gap is in the third quarter. I said 10 to 15% in the advances and maybe 1 to 2% additional growth in the deposits that will narrow down the gap. Say 12% growth in deposits, maybe 10 to 12% and 12 to 15% in advances. So the gap will be narrowed down, but the gap will still be there, and it is there for every bank if you look at the numbers.
Let me just try and understand this credit growth scenario a little bit better. What exactly is contributing to this growth? How do you push it forward? Is there any specific segment that you're looking at? Considering specifically because of the GST cuts that have happened during this quarter, the impact of that and the rate cut that has happened in December, how is that helping you?
See, our bank has primarily been retail focused. So the retail growth has been 57% YOY, and the corporate growth has been 43% for this financial year. And if we look at the contributors, Jammu and Kashmir would have contributed 57% of the growth, and 43% of the growth has come from rest of India. So initially that our strategy was to ensure that we have sufficient contribution from rest of India branches. We are present in 22 states. So that is already started happening. Now, if we look at the individual sectors, primary, the growth has come, double-digit growth has come from both agriculture as well as corporate banking. On both of these sectors have given double-digit growth. And car loan, as you mentioned, the GST cut, car loan has grown substantially well during this quarter and sometime last quarter also. So three components which I can say have given robust growth are these three. We still continue to do well in the retail advances, primarily the personal segment, unsecured loans also, which contributes a fair amount.
Quick understanding on this recovery as well. This quarter, you mentioned you've seen a very high recovery ratio during this quarter, which has of course helped the profitability. Large accounts, or is this also smaller accounts showing that better recovery for you?
We had a very substantial recovery during this quarter. You would have noticed the credit cost is nil. So there was substantial provision reversal because of a large value account getting recovered. So that continues. If we look at bad loans getting recovered, I would say high value recoveries have been to the tune of 150 crores this quarter. Both on account of NPA as well as return of accounts. So the recoveries are coming, and the focus of the bank on recovering bad loans has been very steady for the last, I would say, 9 quarters, and it continues to be so.
You know, your auditor has talked about the merger with J&K Bank that you did during this quarter. You've also made some provisions against this. How do you think this is going to pan out? Do you think that you will need more provisions going ahead to ensure that this merger helps you going ahead?
So that is the best part and the worst part. The best part is we have made all the provisions that were required, and the fact that we had to provide almost 180 crores because of this, considering a total profit last year we had 2082 crores, is a substantial amount for a bank like this size. So we had to take this hit. The amalgamation was a decided thing. It was not a decision by the bank, but we have managed to take into our stride, and we have made all the provisions, and the amalgamated entity has started doing well. Last quarter it did well. A few old expenses, previous quarter expenses were squared off this quarter. So this quarter it hasn't shown maybe that kind of a result. But by the end of the year and probably in 2 quarters time, this amalgamated entity will also be doing well. So no further provisions. All the hit that we had to take is almost 180 crores. So all the hit that we had to take, we have already taken.
Okay, Ms. Amitava Chatterjee, thank you so much for joining us on this conversation, sir. It's a pleasure as always talking to you. That was Amitava Chatterjee, the MD and CEO of J&K Bank. Mixed set of results, but credit growth looking very, very strong. Back to you guys at the studio.
Thanks for that, Vishy. Mixed set of results, but credit growth looking strong. Paragba, you understand banks really well. Is J&K Bank in the list, or right now the others are available?
No, right now HDFC ICICI is occupying most of my mind. Of course, Axis is also looking good.
Axis is also
yeah.
But not J&K, you would kind of...
Yeah. Right now, but the price I saw, 98, price is looking good.
Okay, there is one stock that has come up in our conversation this morning, Credit Access Grameen, because the guidance is good, and a couple of notes that have come out have said that could this be the start of an up cycle again, and is Credit Access Grameen the best place within the MFI place? What is your thought here?
So I have said that Equitas business update clearly showed this, that MFI stress is now, stress is peaked out, worst is behind. And Equitas is a really, I would say, a turnaround story at 1.1 time book. So you are not paying anything for that turnaround. So that is something which is in my radar. Credit Access, of course, I have to look at it, but it has already recovered and it is slightly expensive also. So it might go up definitely, because market shares is earning momentum, right? Even if you see the results of EU Small Finance, that was also very good.
Yeah, true.
The credit cost has fallen below 1%, growth is 26%. So a lot of these lenders who were lending, and this is the clear message, right, that India is doing really well on the ground in terms of, because all your retail, credit card, personal loan, MFI, all those unsecured segments are also showing, I would say, stress picking out and normalization starting to happen.
Okay. So that's Credit Access Grameen. Restaurant Brands Asia is what we were talking about yesterday. And now there is confirmation that the stake will be acquired by Lenexis Foodworks. Now you're talking about an acquisition which is happening at 70 rupees per share, which is at a premium to the current market price. What are charts indicating, Kush, if you have to look at a Restaurant Brands Asia, because the price is at what, 70%, a 10% premium from yesterday's closing. Do you see that upside coming in?
So unfortunately, the entire pack hasn't participated in the market rally that came about. RBI in particular hasn't. Yes, there is good volume accumulation. Yes, there was a minor uptick, but then you saw supply pressures around that 68.70 zone. So I wouldn't really be too gung-ho about it. if at all in the broader QSR space, if I have to mention, one stock that is starting to look interesting after heavy hammering for the last year and a half is actually VBL, which I think has a few positive brokerage reports also going for it. Price action also starting to show some uptick. If at all, I will keep this on my radar, but not the rest of the QSR pack. Haven't really done much, in the market uptrend as well.
Parag bhai, a quick view on this one. I know we spoke about it yesterday as well, but now you're talking about a 900 crore infusion that is coming in. Equity is around 900 crores and 600 crores is through warrants. Does this mean that this will help RBA to scale, turn profitable, fight competition, and thus it becomes a re-rating candidate then?
It becomes a re-rating candidate. The thing is that, see, the leverage will get reduced because of the infusion into the company. Then I think the new promoter has also said, somewhere I read in the sales note, that they are planning to sell Indonesia business. Now, Indonesia is going through very tough times. So it is very difficult to find a buyer also, in my view, in such times. But suppose if it gets sold and the entire restructuring happens, then your balance sheet is completely under control and your valuations are very attractive. Now, the real, as Kush said, there is no pickup in QSR. Now, if that happens, then stock can give you very good returns. So, I think the base is formed, worst is behind. When it will start doing well, it depends on the QSR business outlook.
That's true on that. The QSR industry itself is suppressed and new competition is also coming in the private equity space and coming in the listed space as well. But moving on, let's focus on Lupin. The company is moving ahead in the diabetes and obesity segment with a new global partnership. The pharma major has signed a licensing and supply agreement with Galenism Health to commercialize injectable semaglutide across multiple markets. Varsha joins in with all the details.
Well, I would say this is a weight loss drug season wherein Lupin has signed a licensing and supply agreement with the Galenicum, which is a Spain-based company. Now, the partnership covers finished formulation of injectable semaglutide. Now, semaglutide is nothing but a generic version which is used for your anti-diabetes and for weight loss management. Talking about the division of responsibilities, Galenicum will develop, manufacture and supply the injection, and which is heavily invested into GLP-1 development pipeline, while Lupin is responsible for regulatory submission and approval and will also handle commercialization and distribution of the product. Now, how this is going to benefit Lupin is, one is this leverages its established global commercial infrastructure and expands Lupin's diabetes and obesity portfolio beyond India, and Lupin will commercialize semaglutide across 23 countries. About Galenicum, if you see, it's a Spain-based company, operates across 70 plus countries globally, which develops generics and value-added generics products, and it has strong presence when it comes to Europe, Latin America, Asia and Africa. So overall, of course, it's a positive deal considering the good growth momentum in GLP-1 products.
Yep. Varsha, the standout part of your piece for me is that this is the season of weight loss drugs, and you put it so well. So thank you so much for doing that, Varsha. And yeah, it clearly seems to be the case that it is a season of weight loss drugs, and a lot of them will come on the anvil. I read a post recently which said that in India and a few other Asian countries, the cost of these weight loss drugs could actually come down to as low as $15. It will not happen in the US, but for Indian customers and a few other customers, we are seeing the possibility of that happening. Now, the reasons, I haven't gone into them, but that is something that one should watch out for as well.
Well, yeah, Neeraj, interestingly, I also went into one of these events by the doctors who are there in this weight loss segment, and they have also stated that there will be a pricing pressure coming in. But one concern is definitely there, is if it's not registered. That's where the concern keeps coming in, and now everybody is talking about it.
Yeah, should be interesting. We'll talk more about this for sure. But let's focus on the here and now and try and understand what are the other stocks that you should keep on your radar this morning. Now, from amongst the newsmakers, and one of the big newsmakers is something that we believe is the big story of the last 24 hours, which is the EU president saying that she's going to travel to India for signing what could be the mother of all trade deals. They are very close. Some work needs to be done, but she said yesterday that we are very close to a trade deal with India. Now the point is, I'm bringing a couple of sectors into focus here. The first one is textiles. And the reason why textiles is because the Jeffries note lays it out beautifully. They say that the FTA bringing Indian textile duties on par with South Asian neighbors will be a key positive simply because EU imports about $125 billion of textiles and apparels, of which India has only a 5 to 6% share. And India loses out because India has a duty versus Pakistan and Bangladesh not having duty.
Not having a duty.
Now, if this were to happen, one would presume it's positive for your Indian textile companies. They have been beaten down significantly for the right reasons. Are they a good preemptive buy if this were to happen, or even if you preempt that this is going to happen? To both of you, either of you can answer.
Yeah, so my view is that, see, something like, for example, a garment, like KPR mills, what they do, and they have already supplied to Europe, right? So there it can be beneficial immediately. For somebody like Welspun Living or Gokaldas Exports or Indocount, who are like into ready-made garments, Gokaldas and Welspun and Indocount home textiles, right? Their US sales to US is 70% of the revenues. So there to shift from US to Europe that much, if in the absence of tariff reduction, is looking slightly difficult to me right now.
So which are the ones that you believe could gain? So you just repeat it for our viewers.
If
this were to happen.
FTA deal happens with Europe and it really happens, as you rightly said, that duty on Indian goods goes away, which makes us in line with other competitors. And of course, I don't own it as a disclaimer. We are just discussing. KPR mill can be a.
And just before Kush comes in, the only reason why, guys, I think that this could be a given is because India currently realizes that the textile and the gems and jewelry sectors are under stress. The employment out there under stress as well. So therefore, the one thing that you would gun for amongst everything else, because of the near-term issues, is the textile sector.
And even Neeraj, auto ancillaries play as well. There also we can see some kind of a good European exposure.
Already exists, right? Yeah, you're right.
A
lot of them.
Lot of them exist. But textiles, auto anchors, Kush, textile stocks, let's start with them. Are they bottoming out? Are they showing some signs, or difficult to say that?
So they're massively oversold.
Massively oversold.
Massively oversold. In fact, what happened in the last 2 to 3 sessions has actually brought them to oversold territories, at least on RSI, on the levels where they weren't even touching close to the or rather for the entire of 2025. So point being that they were already hammered, now they're oversold. So a technical rebound is anyway on the cards. Plus, if there is a positive fillip, because of this news, you could see an uptick. So I would bet on something like an Welspun Living. Here you've already seen a capitulation, support near 110 levels. So there could be a rebound on on Welspun Living. And the other one, Gokaldas Exports, mild positive RSI divergences from oversold territories. Volumes on the way down on the last 3 sessions has actually reduced substantially. So this is one stock. Again, not a big bet. You want to take these trades with a small quantity and a tight stop loss. So you could consider some of these names, Welspun Living and Gokaldas Exports. Don't expect a V-shaped recovery, but yes, an uptick from here on, very likely.
Okay, so that's textile companies like a Welspun that you should be watching out for as well. Couple of other companies on the back of earnings. We've spoken about Credit Access Grameen. We've spoken about Persistent. No, I don't think so. We've spoken about Persistent Systems so far yet. Persistent Systems, PTC India Financial, a weak set of numbers, Supreme Petro. These are a few of the names which will be in focus in today's session. Parag bhai, your view when it comes to Persistent Systems as well, because it's always been over-delivering, right?
Yeah, 100%.
So with the way the numbers have come in right now as well, do you still think there is an opportunity to buy?
So basically, see, right now, unfortunately, the market is in a phase where if the stock is already expensive, even good results are being sold into. So you cannot have a 1 or 2 day view into it. 1 or 2 day view, so LTI entry was a good example. Reason, there was nothing wrong with the result, stock fell 7%. Let me be honest, I don't own these stocks. But I am saying that, so Persistent, fantastic numbers, I would say. EBIT growth of 25% YOY, QOQ CC growth of 4.1% with margin expansion, and which has beaten consensus also. If you see the adjusted PAT number, it is 500 crores. If you remove that labor code expenses, So I would say that superb numbers. The company is really benefiting from AI. But at 41 times FY27 earnings, with this kind of market backdrop, it looks difficult that it will outperform in near term. Of course, in long run, it's a good company, great company, and real beneficiary of AI, I would say.
And Kush, what about Coforge? Because that's one of your picks which you always take with that.
Both of us.
Yeah. So it's there. So what's there on Coforge?
Buy or hold. If you have a position, you should continue to hold. If not, look at the fact that the stock had already been hammered. 1630 was the 78% retracement level from where we had said that it's a good idea to start entering. The stock's very comfortably holding above that level. So Coforge is either a buy. If you don't have, if you have, you should hold. But just to complete that conversation on persistent, maybe versus let's say Supreme Petro. How do you read stocks in a market like this? Whatever's been falling before the capitulation came about is something that you avoid. Supreme Petro, that is a case in point. But something like a persistent, it was already riding on a high. There was some consolidation. So that is something that you pick up when the market falls like this. So there is strength and there has been a capitulation due to whatever is happening geopolitically. So that is something that you consider as a buy. Supreme Petro, I would rather avoid.
Okay. So, well, viewers, for our experts here, if they had to bet on IT, it would be Coforge. Persistent, despite its really good show, the valuations prohibit. Let's bring up, as the markets kickstart trade, some of the usual suspects today and try and see if there is any moves there. So, ICICI Bank would be first of the block, underpaying for the last few days, but the ADR was low, down and out. These might be initial rates. I doubt ICICI Bank will be 5% lower, by the way, even if the ADR was down 5%. But yes, it could be in the red, so keep that in mind. But if ICICI Bank is in the red, also keep in mind that it will be substantially, it will have a substantial impact on the Nifty as well, because it's a heavyweight in that sense. So keep an eye out for ICICI Bank, keep an eye out for Credit Access Grameen, Embassy Developments, Persistent Systems and a few others. Credit Access seems like starting off okay. Embassy seems like starting off okay. It's a bit of a rub of green, really. This is really good to see, even if it's only for the first 1 minute, and maybe it will change going ahead. Rajesh Bhosle, Equity Technical and Derivative Analyst at Angel, with us on the show as well. Rajesh, good having you. The overarching belief here was that the markets are oversold. Even if it may be difficult to take a call, maybe wait for a couple of 100 points recovery and then go long. Are you in that same camp, or are you taking along because the markets seem oversold?
Well, good morning, and thank you for having me on your show. So technically, if we see, the price momentum is definitely on the downside. If we see in the last 15 sessions, Nifty has slipped more than 1,000 points, and we are seeing a major breakdown on the charts. We have slipped below the 89 EMA first time after August, and also we have slipped below the November swing lows. So as of now, we remain cautious. But if Nifty slip towards 25,000, 25,100, that would be the key level to watch out, because that is the 200 DMA. Generally, ahead of key events like budget, 200 DMA generally acts as a support if the indicators are oversold. So as of now, we are waiting, but 25,000, 25,100 would be the key level to watch out for in the near term.
Okay, so what would your top picks be at this hour?
If we see in the recent fall, cement packs have done recent very well, and one counter that did well yesterday was Dalmia Bharat. Today it's going to announce its result, but the kind of price action we are seeing, relative strength is there. So Dalmia Bharat can be bought with a stop loss of 21.20. In the near term, we expect the stock to move towards the levels of 23.40. Since we are a bit cautious on the market, we'll have a one sell call. One counter that we are expecting to see weakness is MFSL, Max Financials. So the stock was trading in a range since last 2 months. There was negative divergence, and finally there is a breakdown from the channel, and it has also slipped below its 89 EMA. So possibly MFSL is likely to see a downside. So with a stop loss of 1660, it can be sold. In the near term, we expect a move towards the levels of 1550.
Okay, so those are some stocks to keep an eye out for. Now, let's get you more stocks. One of them is SRF, reported a weak set of numbers, revenue rising over 6%, one-time impact of 73 crore as well. But let's take a look at the brokerage verdict on this. Varsha joins in yet again with that. Varsha.
Well, yes, yesterday SRF came out with its results and the numbers did miss estimates. And let's see what brokerages are saying. Talking about Citi, wherein they've maintained sell, they've cut a target price also. What they're saying is that the Q3 was below estimates. Now this was because of continued pressure in agrochemical chemicals and refrigerant gas prices resilient. Now underperformance was driven by the lower EBIT margins in the chemical segment and the weaker packaging segment as well, and they see continued pricing pressure from low cost Chinese competition and some deferral procurement by agro majors seen so far. Talking about MS, let's see what they have to say. They have maintained underweight and according to them the numbers were in line, but the stock is pricing in above mid-cycle margins across key segments according to MS, and they stated that FY26 guidance of 20% top line growth says that the Q4 the growth should be 15% year on year, considering SRF highest revenue quarter. Lastly, let's see what Nuvama has to say. They have rated buy, but they have reduced their target price, and they said that the Q3 FY26 performance came in below estimates due to, of course, global agrochemical headwinds, and near-term headwinds are likely to slow growth over the next few quarters according to Nuvama, and overall agrochemical pressure is being seen as transitory, and FY27 specialty chemicals growth estimate has been cut from 25% to 15%, and Q4 FY26 and FY27 is expected to be seen as a pricing led improvement. So overall, all the three brokerages have highlighted the continued pricing pressure when it comes to the agrochemical segment.
Thanks a lot, Varsha, for that. But moving on from one brokerage note to another, Somit tells us what Morgan Stanley is saying about the steel players. Somit?
Well, a big note has come in from Morgan Stanley on the steel sector. They have upgraded their rating on JSPL and have also hiked the target price on JSW Steel and Tata Steel. For JSPL, it's an upgrade to overweight from an equal weight rating and have hiked the target price to 1,250 from 1,150. For JSW Steel and Tata Steel, they have maintained the outperform rating. JSW Steel, they have increased the target price to 1,330, and for Tata Steel, they have increased the target price to 215. Only one downgrade coming in on SAIL. They have downgraded the counter to underweight from equal weight and have maintained the target price at 140. Now, the main reason behind this underweight rating on SAIL is valuations, but for overall steel sector, they believe that the stellar rally will continue for the sector. They are constructive on the steel spread expansion even going forward. They believe that there is significant room for domestic steel prices to increase further. So far, we have seen an increase of around 13%, but even after this hike in steel prices, the price continue to be at a discount of nearly 6%, and they believe that this could further rise going forward. Apart from this, China anti-involution is a medium-term theme as per the brokerage, and they also believe that the global macro factors also could remain supportive for the steel sector, and some factors like the Fed rate cut and a weakening US dollar is something that could also be positive for steel sector overall going forward. So these are broadly the reasons why the brokerage is bullish on steel. JSPL, they have upgraded, JSW Steel, Tata Steel target price hike, and SAIL, they have downgraded the rating to underweight.
Okay, thank you so much for that. So that's an interesting note when it comes to steel companies which have been in focus as well. Mayuresh Joshi, Head of Research at MarketSmith India, also joining in. Mayuresh, welcome to the show. Always a pleasure to speak to you. Mayuresh, how are you looking at the entire metals pack specifically if you look at the steel players as well, taking the way the moves have happened recently?
Morning, Hiral. So I think base metals have done a large part of the rally over the last few weeks and months, exhibited in silver, gold prices, copper, zinc, aluminium, moving towards their all-time high levels. But as Somit was mentioning, I think the next leg of the metals rally, as has been seen historically, once a large part of the base metal move is largely done, I think the other leg, which is the ferrous players, which is the steel players, start probably reacting a tad bit more positively in terms of the commodity cycle. And again, I think a few factors which are aiding them. One, I think the safeguard duty is expected to probably have a very positive impact. It specifically targets HRC, CRC, coated steel, and it's also got a price floor mechanism in place. An example is $675 per metric ton for hot rolled coils. Now, what it really means is for the ferrous players that an immediate headroom of 4,500 to 5,000 rupees per ton in terms of pricing power, which then means that as import starts coming down and they're expected to drop by nearly 30 to 50%, anywhere in that range in FY26, domestic mills which are operating at 75-80% can probably see their utilization levels inch up higher beyond 80-85%, which means that even the margin expansion might be a very obvious scenario. In terms of financials, what largely transpires, Hiral, is that for every 1,000 rupees ton in steel prices that we've observed in the past, EBITDA for companies which are partially integrated, like a JSW or a Tata Steel, improve by 3 to 5%. And therefore, with all these matrices in place, with the 3-year visibility on protection as an example, the forward EV EBITDA multiples, which are currently at around 6 times, move to the mid-cycle range of 7.5 to 7.75 times, which is a very positive for the sector as well. So I think we remain very, very constructive on the sector.
Okay, so that's with the steel sector as a whole. But couple of things that we should be picking up, Sharad, as well, when you're talking about the rupee, which is at record low levels right now.
It's opening at 91.2. That's the level coming in. And interestingly, this is the 4th instance when it has breached that 91 mark. We are expecting RBI intervention, but nothing actually came. There are some reasons for it. I just like to point out the capital outflow concerns, as Parag Bhai has also mentioned. It's still sustaining. For 11 straight day, FIs have been sellers in the cash market. There's an overhang of the US-India trade deal completion, but the bonds, they have risen as well on a lower state debt supply. Yesterday, there was a bond auction in the States where the demand was not filled. Traders are saying that RBI is selling dollars in forex market to support rupee, but Bloomberg, they have stated that this is a result of a yield price-based auction of the state government securities. But nevertheless, the pain, the sentiment or the sensitivity of dollar and FI flows, that has become much more, and now we are seeing that happening. Rupee opening at the record low levels. Parag Bhai, wanted to get your views on that. There is no kind of a support floor coming in.
Yeah, so I feel RBI governor has clearly stated that whenever there is excessive volatility, then only they will step in, because otherwise your rupee liquidity gets sucked in, and so whatever OMOs you are doing to provide liquidity to the system, banking system to grow, that gets sucked in due to protect your rupee, right? So it's so we have to do something. That is my view, that we have to do something in budget to attract for FII inflows. We have got a lot of good FDI flows from Japan in various companies like Escorts and Shriram Finance and various Yes Bank and all. FDI flows have been good from at least Japan, but I would say that we need FII capital market inflows also, and for that something has to happen, so that not only just to protect rupee at a particular level, but so that the RBI can provide liquidity to the markets, real economy, rather than just protecting rupee.
Well, in some sense, the just looking at the glass half full, not this one, but generally, thank you.
Actually, Niral's it's falling in the definition.
No, this one too, I mean, to an extent.
Yes. One sip, that's it. It's balanced.
But the point being that some bit of this rupee depreciation might actually help exporters at a point of time when volumes aren't quite there because of the US downtick, right? So, and therefore definitely helping the service exports as well. But yeah, the point is that for any FII wanting to make an investment into India, if the rupee is in a free fall, that investment decision gets deferred.
Correct.
Automatically.
Absolutely. So that is why you need to show them that rupee can appreciate, and also one of the ways is to give them some sweetener so that they can get attracted towards India. The other thing which Neeraj said, apart from rupee depreciating helping exporters, rupee depreciating actually has import substitutes also. So for example, we are talking about steel, right?
Steel, correct.
Now the steel gets imported also. Now the import parity price will go up with depreciating rupee. That will help steel companies even more.
So margin benefits.
Plus the safeguard duty is already there.
Absolutely. So you should be watching out for the sector. But very quickly, Credit Access, Grameen, Fact, IndiaMart, Intermesh, Newgen Software. These are a few of the names which are seeing some good moves. Jindal Saw is under pressure. SRF is under pressure. United Spirits is under pressure as well. Quick view, Kush, SRF and United Spirits that I want to pick with you, or we are just about to... No, we still have some time, yeah.
So SRF weight 2775, that's a very important medium-term support zone. If that's broken, the structure gets broken for the worse, so you might want to avoid it. So I'll just stick to that. And just as a quick take for the day, Dalmia Bharat, the stock that we've already discussed, you could still consider it for a long trade. And just to reiterate the targets on this one, 20 to 30, 20 to 85, stop loss at 21.20.
Mahirash Joshi, we have 20 seconds, but are you scanning the universe for one top idea that you would be comfortable buying? 20 seconds.
Morning, Neeraj. Very quick answer for that. Nestle India.
Nestle India, okay. And you know, we will at some point of time get the rationale from Mahirash Joshi as well, but keep an eye out for Nestle India as a fundamental idea that he likes to invest in. Keep in mind, all fundamental experts will tell you the prices may still go lower, but they are comfortable investing at the current valuations in select stocks. But here's how the markets are starting this Wednesday morning. Are we seeing some rub of green? No, not really. I mean, this is brutal. Look at the market breadth at the start itself. 464 advances to 128 declines, which tells you that the mid cap and the small cap space as well would be getting punished, even if the Nifty is trying to fight its way back into the green. Small caps 0.25%, mid caps less than 0.5%. Wow, the advance decline ratio is actually a lot worse than what the headline numbers on the indices suggest. Let's get the heat map up on the screen and at least get the large caps going. Hiral will not have a good time marking the mid caps, I'm sure. Okay, what's doing well? Let's start with the green. Really tired of seeing the red all the time. Eternal 1.67% higher. Sun Pharma, the brokerage notes today are a bit constructive on Sun Pharma, by the way, which is why maybe that stock is up about 1.35%. Dr. Reddy's has about a 1% gain too, so Pharma seems to be doing okay. Coal India 0.75%. Some gains for JSW Steel, some gains for ONGC, Ultratech, Geofin and Nestle, something that Mahirash Joshi recommended. But even Stevens, right? You can see between the red and the green. So what's the red? Airtel down today. In fact, there is a Morgan Stanley note on the investor, the pushback from them on why Airtel is actually getting hit. So 1% lower though still. Apollo Hospitals continues to grind lower. Infosys, Shriram Finance, Bajaj Finance, BEL, RIL, HDFC Bank. The good part is that ICICI Bank, quite unlike what the global receipt was, is down, yes, but down only 0.7%. So not too bad. In fact, the quantum of green is now moving higher. Volatility is inched higher too, and the indices are absolutely flat. So, well, I would say, Hiral, all kosher on the large caps thus far, but I don't know if the broader markets are doing okay.
Yeah, and even Eternal and Sun Pharma, if you think, I mean, DRL, only on the back of the earnings today that you're seeing this kind of momentum that's coming up so far. But if you see broader markets, let's just pull up the mid cap and the small cap indices and see what's happening there. Absolutely flat, mid cap 150. And if you talk about the small cap 250 index as well, marginal cuts of around 0.2% coming in there. And in terms of the breadth as well, you're still sliding towards the declines right now. Where this settles in is something we have to see. Let's just pull up the sectoral heat map and see what that is looking like, because there is some, green shoot in terms of pharma, which is evident there. You go pharma, healthcare. These two were one of the top losing sectors yesterday, which is gaining momentum today with gains of almost 0.8%. Metals is doing pretty okay in trade. FMCG is seeing a pickup. PSU was one of the top gainers yesterday, saw a major correction and has come back on the charts. IT is the one which is trading under pressure. Your defense is down, consumer durables. These are the ones which are seeing pressure as we speak. Let's pull up NSE 500 and see, what the stock range is indicating so far. LMW, MRPL, Restaurant Brands Asia is seeing some good moves today. India Mayot is reacting. Lupin is pretty okay. Shoppers Stop, 8.5% downtick, this is earnings. Triveni Turbine, Crystal, 5 stars, so around 3 to 8.5% is the kind of range that you're seeing in terms of the top stocks as well. But let's look at the earnings impact today. Credit Access, Grameen, AU Small Finance Bank, these are a few of the names that we've been tracking. Good moves there. You have Persistent System. Interestingly, that stock is down 2% on the back of the earnings that we are looking at. PTC India, Supreme Petro and DCM Shriram. Again, a negative set of numbers, 2 to 6% is the kind of cuts that you're seeing on these three counters. Imagica World Entertainment, the JV in Gujarat is what we're talking about. Flat is where the stock is. Restaurant Brands Asia, we already mentioned on the back of the stake sale, is seeing some bit of momentum in today's session. Embassy Developments and Omax, one has got a RERA approval, one is looking at a project in the MMR region. Embassy is up 1.5%, whereas Omax is slightly under pressure. Edelweiss Financial Services, let's open that one on the screens because the ARM, which is India Alternatives, has filed for the DRHP. Some benefits could be coming in there, but that stock is again absolutely flat. And you have Dalmia Bharat and Ramkrishna Forgings where they've commenced operations. Again, no major moves coming in on those two counters as well. So interesting moves overall. Individual stocks are moving, and it's mainly earnings reactions that we are seeing in today's session, Sharad, right?
Thanks a lot, Hiral, for that. But let's focus on the earnings, especially the credit access Grameen. Let's just pull that up. That's doing well. That's one of the top gainers in the Nifty 500 index. It's up 6%. JK Bank also holding up. We had a chat with the management also, especially bullish commentary coming on the credit growth front. JK Bank is also up almost 4% in the trade, and Newgen Software back on the broking upgrade after the earnings. We are seeing the stock is up 4%. Kush, want to get you on credit access Grameen. Stock is up 6%. And technicals, what are they suggesting, the technical levels?
I think a range-bound play on this, 1350, that's been the medium-term resistance. The stock has respected the 200-day moving average for the most part, if you see in terms of support. So I think it's a range play, 1235 on the downside and about 1350 on the upside. Right now, it's coming to the close to the higher end of the range. So I would either hold it with a stop loss or maybe closer to 1350. I would book some profits on this one. Medium-term trajectory is still positive, but like I said, there is resistance around the 1350 mark, so you might want to book profits. In the pack, like Parag had mentioned, AU Bank is the one that really stands out. So if anything you want to pick, I think that should be something that you should consider. Credit access Grameen around 1350. Consider booking partial profits at least.
But what a start for that one, and good start for India or Intermesh as well, incidentally, despite the numbers looking iffy. I think brokerage upgrades out there, plus Nalanda, Pulak Prasad buying there, all of that leading to that. Rajesh, quick thought on India or Intermesh, and if any other stock that stands out for you.
So in the last few sessions, we have seen volatility in Indamart, but today we are seeing a bullish kicking pattern on the daily chart. So as long it holds the levels of 2120, positive bias can be kept, and in the near term, the stock can remove back towards the levels of 2300.
Okay. And any other stock, Rajesh, that stands out for you?
So if you see FMCG basket, I mean FMCG index is on the 200 weekly moving average support. So we are bullish on the FMCG space. HUL is what we are liking. Along with that, Tata Consumer has been doing well in the last few sessions. Yesterday there were strong volumes, and today it is showing relative strength. So Tata Consumer can be bought with a stop loss of around 1160. We expect a move towards the 1220 to 1230 in the near term.
Okay. Mahesh Joshi, you want to enumerate on that, because Rajesh is choosing Nestle. Parag Bhai, we know, has been a big proponent of FMCG. Rajesh chose a FMCG name. Parag Bhai is a big proponent of FMCG. You are choosing Nestle as well. Why Nestle?
So Neeraj, I think three perspectives. One, I think if you probably look at the Q2 numbers, the Q2 numbers were very, very good for Nestle India in a quarter where GST rationalization had not kicked in completely. And therefore, I think with expectations that most of their segments expected to continue doing well, including milk products, including confectionery, including their baby product segment, I think the volume growth as we head into Q3, Q4 should be reasonably better for the pack as a whole, for Nestle India, going by precedence in Q2 in particular. Input costs have largely remained moderated as we head into Q3 as well. So Q2 was a quarter where input costs had remained benign. Q3 should also largely be a quarter where input cost, because they will stay benign, the expectations of margins remaining relatively robust and strong seems to be a base case scenario. And going forward, in terms of how Q4 and the next financial year will play out, expectations largely are that volume should sustain, and with better volume and value growth, which is a big plus for the FMCG industry as a whole. The expectations in terms of free cash flows, which anyway remain extremely strong and robust for the sector and companies in general, I think that should start playing out meaningfully in terms of free cash flows, the operating cash flows to EBITDA as well. And that will lead to higher multiples. It's not that valuations are cheap, Neeraj, by any sense for a whole host of FMCG stocks. But relatively, if you probably map these stocks against the market and the volatility thereof, assuming earning stability, I think they have a better chance of actually holding up as far as price is concerned.
Okay. Remember, Parag Thakkar has been crying hoarse on why people should look at FMCG. Capital preservation is also a very important tenet in such a market. And Parag bhai, does it become important? Because I think right now, people might hear from various people over the next 10-15 days that the markets are oversold and good to buy, right? Does it become important? And I know it becomes very important to choose the right stock, right? So does it become important to choose companies which have lower downside as opposed to trying to hunt for those companies wherein the return promise of return is 4x, 5x in the next 2 years?
Absolutely, absolutely. Yeah. So basically, for example, in our portfolio, we have 12 to 13% FMCG, and that has not fallen, at least fallen significantly lesser than various other stocks, right? So that has kind of acted as a cash component, right?
But you could have been on cash also.
So that's okay, but so we have betted on all the stocks in FMCG where we are expecting double-digit EBITDA growth YOY.
Okay.
So whether it is Godrej Consumer, whether it is Marico, whether it is Tata Consumer, we have chosen. HUL was, of course, it was actually a quasi cash, I can tell you. But so that has protected the. So now when other things have fallen, we can choose to dynamically move towards those fallen stocks. Because we have protected at least that much capital, which we have kept as cash or in FMCG.
Makes sense. Okay.
You know, I think two stocks I want to highlight is Dr. Reddy's and Eternal, which are the top gainers here. Mayuresh, any expectations? Because both the companies will be reporting numbers today. Are you seeing any opportunity?
No, so Viral, I think things to watch out for when it comes to Dr. Reddy's is going to be their biosimilars portfolio specifically, and key announcements in terms of key launches that the company is expected to probably announce in terms of both timelines and monetization thereof. So I think that is going to be a very critical component in terms of Dr. Reddy's reported numbers. When it comes to Eternal, again, I think a long drawn play in terms of how volumes might actually play out in terms of both the food delivery and the quick commerce business. However, I think the path to profitable and consistent growth is something to be watched out for amidst risk factors, which include and not limited to how competition is brewing up when it comes to Amazon, when it comes to Reliance Retail, as an example, a few other players probably doing pilots in a few key areas and cities as well. And that might have some element of an added pressure when it comes to pricing. And therefore, I think with the accelerated expansion in terms of dark stores, which has impacted numbers so far, the future consistent and profitable growth path will probably depend on a lot of factors external to Eternal, and therefore it's a wait and watch.
Okay. Well, companies related to gold, silver, metals, I wonder if we've marked some of those today. Deccan Gold, I was told by Sharad, is actually packing a serious punch, so keep an eye out for that. Should get that stock up on the screen for you, Deccan Gold Mines. The other name, which is actually 6 and 7% higher, the other name which is not doing well today, we marked that is Shoppers Stop, and that has a bit of a pain. So keep that one on your radar. 9.5% lower. I tell you, this quarter has not been great for companies where it was believed that there will be some spends because of the GST card. Retail has not necessarily come out very well. We've seen the commentary from Havells, which has said that it's not that cooling solutions are being bought left, right, center because of the lower prices. In fact, their commentary for quarter 4 also not necessarily very, very impressive. So a lot of discretionary consumption items haven't quite done well, and it's quite an eye-opener, if you will, into some of these. Now, Kush Bora, I wonder if you've looked at Shoppers Stop. It flatters to deceive a lot of times. Is there anything in the charts here?
Not at all. And Neeraj, I think there's a good reason why we haven't discussed this stock. I don't recall rather discussing this stock in the last year and a half, and for good reason, right? It's been in a constant downturn while some of its other peers, if you just broadly put it as VMart, V2, they've had at least some spunk, some spark. This one's lost, a lot of ground and consistently. So I think this is very close to 3-4 year lows. Wouldn't really consider. If at all you want to consider anything, the only one that was showing some spark and some recovery was DMart. Maybe that's the one that you can consider. Others not really as much.
Okay. Well, and I believe Mahima tracks this. I may be wrong, but Mahima, let me try and take a chance because she's joining in right now to talk about a number of things. And Mahima, I want to talk about Restaurant Brands Asia as well. But first, if you've looked at the Shoppers Stop's numbers, if you have, tell us a bit about that and any other earnings that you're picking up.
Right. So, as you were just discussing, right, we've seen retailers, in fact, small retailers do very well in the last couple of quarters, and that's not been the case for Shoppers Stop. Constantly, we've seen that, the same-store sales growth for the company is not picking up. In terms of pricing also, they're not able to, compete with the way, competition has fared. Plus, overall, if you take a look at the numbers also, core business sales was flat in terms of where, the top line stands. Beauty segment sales, however, did see a tad growth of around 14%, but that's still nothing as compared to how other retailers are doing. Overall, in terms of average transaction value and average selling price also, they've not been able to scale up on those metrics as well. And overall, if you take a look at the numbers, overall EBITDA was down by around 11% and profit numbers slid from that 50 crore mark to almost 15 crore mark. In terms of the commentary also coming in, the management said that despite of the festive season, they were not able to, kind of scale up the operations that they were expecting to. And overall, if you take a look at the operational metrics in terms of where Intune and, Intune stands, that saw growth of around 22%. So that's with regards to where Shoppers Stop is concerned. But the other one in focus is Credit Access Grameen, where revenue was up around 8%, EBITDA up 126%. Margins have also improved and net profit stood at 252 crore. It was a turnaround quarter with strong operational performance, and Investec has maintained buy with a target price of 1450. They're saying that this is now at the start of its upcycle, and they see growth to pick up, margins to expand, and credit costs to reduce going forward. And this remains the best pick for them in the MFI upcycle, and valuations seem reasonable right now. So these are the two earnings that are reacting really to how their numbers have come out.
Okay, thanks for that. So if Shoppers Stop is one, Credit Access the other, 9% now. Wow, Hiral, I should have laid the bet today, huh?
Yeah. We had it with NetWeb and
Indosolar, yeah, which I lost badly.
But no, don't worry. NetWeb also ended with 2% gains in the end, so didn't do much.
Yeah, no, but Credit Access Grameen is off and doing really well. As Investec said, it is their top bet on the upcycle. I wonder if therefore this, and bring up Equitas in that picture and just see what that one is doing today, whether some of the others have had a rub-off effect. No, not quite. So, Mayuresh Joshi, can I bring you in here? Parag Thakkar loves Equitas, SFP, and the call is that MFI, SFP, etc., all of them might be entering an upcycle of sorts. Credit Access Grameen is proof of that. Do you like Credit Access Grameen at this price? Conversely, do you like Equitas, SFP?
So Neeraj, as a disclaimer, I think we are carrying Equitas in our momentum portfolios, and therefore clients may have position in Equitas as we speak. When it comes to Credit Access numbers, I think numbers have been phenomenal. I think what you've probably seen in terms of credit costs actually reducing every passing quarter is a huge sign. What you're also seeing is that the NIMs have been very well maintained around that 13.9, 14% mark. Asset quality pressures are actually coming off every passing quarter. And that was the biggest risk factor, specifically for the smaller payment banks having a large part of their exposure specifically towards the SME, MSME segment, which still looks a little bit sticky as we speak. But there are some inherent green shoots which are now emanating at Q4 onwards and in the next financial year. I think that should start holding up well. And if that starts holding up well, the advances growth should start coming back with lesser asset quality pressures onto the balance sheet. For Credit Access in particular, I think the Tier 1 ratio stands a massive 26%, which means the advances growth can be huge going forward, which can correspondingly act in terms of ROEs, which are at 3.5 and close to 14%, actually improving. Even a tad bit will make a huge difference in terms of forward multiples going forward. So yeah, I think good set of numbers, but Equitas is something that we continue holding in our momentum portfolios.
Well, gentlemen, all of you, Rajesh, Mayuresh, both of you, thank you so much for taking the time out and being with us today on the show. Really appreciate. And Kush Bora, Parag Thakkar, gentlemen, thank you so much as always for being here. Now, before we move on to the next story and next guest, let's get in Mahima to talk about Restaurant Brands Asia, which is, well, a part of a big deal. Mahima.
Right. So, what has happened basically is that, of course, this was in the talks that Restaurant Brands Asia, Everstone stake will be acquired by someone, and now the exchange filing has come out that Lennox's Foodworks is going to acquire the controlling stake in Restaurant Brands, and this is going to happen at 70 per share, which is at a 10% premium from its yesterday's closing price. This will also trigger an open offer, which will be also at that 70 rupees, and the transaction will be executed through Lennox's Foodworks, which is an arm of Inspira Global, and going forward also post the acquisition, Inspira Global plans to infuse around 900 crore via equity and 600 crore via warrants. So around 1500 crores of infusion will take place. Just to brief about what Lennox's Foodworks does, it has a decade of experience in the QSR space and operates chains like Chinese Wok as well as counters like the Momo company as well. In terms of what this basically means for something like a restaurant's brand, this will overall improve the balance sheet strength for them. Improved capital allocation will also kind of drive re-rating, and plus we've seen how competition has panned out in the QSR space. We've seen the Aviation Sapphire merger, and that could probably weigh on something like a restaurant brand. So we'll have to see as to how this positions restaurant brand in terms of where competition stands. Plus it will also help them scale and maybe be profitable going forward. In terms of outlook also, they plan to open 800 restaurants by FY29, and at that 70% gross profit margin by FY29 is what their aim is. So hopefully this should get them towards their guidance. So this is the overall view of what this acquisition means for restaurants brand.
Okay, Mahima, thanks for that. Now, the markets yesterday broke some key levels and came near some key levels too. The rupees opened at a low. It's a good time to try and get in somebody who's looked at many such cycles to try and understand how does he see the market action at large. Dr. C.K. Narayan, founder of Neo Trader, with us on the show. Dr. Narayan, great having you. Thanks for taking the time out. And I read your columns with key interest, but I'm afraid the market, the way it is right now, any form of conversation around supports gets washed away the next morning itself. My question though to you is, are you now playing, Dr. Narayan, for any kind of a bounce because the market seems oversold, or would you wait for the action to come in first?
Good morning, Neeraj, and nice to be back. And of course, everybody in the market is looking for supports, right? And they are acting on it. So there is a frequent bounce, and the market has actually been in a range. Yesterday was a bit of a sharper fall. But if you really look at it, what have we done? We have fallen about, let's say, about 1250 points in this month. And the monthly ATR range, if you look at it, these days has become much larger. And the monthly ATR range is about 1285 points. So it's on par with what you could have expected. So 1250, 1284, nothing much to give or take. Even on the weekly range that you can expect, say about 515 points is the current projected weekly range. And we have done about 450, 460 points so far. So from that perspective, if you see it, what the market has done seems to be normal. Now, coming to the point of whether we have reached support zones and all that, now support zones can be marked in plenty on the charts, but the key thing is, will the market bounce off it? Now, you may put 200 DMA in its pathway, you may put some trend line in its pathway. So if you take a long-term trend line that comes to somewhere around 24,400 to 24,600, that is still a decent level away. So if you take, let's say, a small double top formation of having formed at the recent highs, then the target for that comes at around 25,000. Now, so therefore, if you look at it from any angle, the market is oversold. There is no two doubts about that. And it is nearing some supports. What it really requires is something to jog it out of this, and then that has to be in the form of some good results. So results have still been mixed. So people have anyway been spooked by Trump tantrums all through the last 1 year. And now that has become the norm. So we are looking at other things to produce this kind of upside. And right now what we have is the quarterly numbers and a hope as far as the budget is concerned. So these are the two events which can kickstart some kind of a meaningful up move. And that too, at the moment, having broken all this, you will now find that 25,800 will be a difficult resistance to cross. So I think we are caught in a new range now that is on the lower side.
Okay, so that's with regards to where, what levels you're looking at. Mr. Narayan, good morning. This is Hiral on this side as well. You know, a couple of things that I was looking at. You spoke about the RSI on Nifty 50. Now, it's below that 30 level for the first time since March 2025. And a similar trend is what we are witnessing when it comes to Nifty Realty, Nifty FMCG, Pharma and Energy. So there is an indication that we are probably in that oversold zone across as well. Where do you, I mean, from here on then, what is it that you would watch out for?
Well, the first thing I would watch out for is for some indication that, yes, we are forming a bottom. See, reaching oversold does not by itself or automatically guarantee that we will rise from there. A rise requires buying to come in. And always buying needs to be stimulated by some reasons. Till the market finds some good reasons, all you will have is a kind of a bounce, which typically in in a jargonistic way is referred to as dead cat bounces and all that. So those don't help unless you get some good, decent results which will shake the market out of its ennui. And I think it may be difficult for the market to show anything other than an oversold pop. Oversold pops cannot really be invested into. They can be traded into. Now, how many people can do that? That is up to question.
Okay. So, Mr. Narayan, from here on, you know, in terms of key levels that you would be watching out for on Nifty and Bank Nifty, what does that look like? Because, you know, I mean, VIX is already coming to levels of 12 and 13. You are seeing a little bit of uncertainty that's creeping in as well. You are in that oversold zone. So what should anyone watch out for? And do you think this could be the right time to start nibbling in?
See, Bank Nifty has been faring considerably better than the Nifty during this recent, let's say, couple of weeks or more. But then Bank Nifty, even though it pushed up to new highs, it's now back into the range that has been going on for the past couple of months. So the lower end of the range is at about 58,700, 800. So that is the lower levels that you can look at as far as Bank Nifty is concerned. On the top side, 60,000, 60,500 is proving to be a little bit of a formidable resistance. So again, just like the Nifty, the Bank Nifty now has got into another new range. But it still remains better play than the Nifty. And therefore, I would look to Bank Nifty to lead the market out of this morass. HDFC Bank, to its credit, seemingly doing better. ICICI Bank had done well, but then that is undergoing a bit of a pullback. PSU banks are doing fairly decently. State Bank is doing well. So if you take SBI, ICICI Bank and HDFC, and if they don't really crap out, and you have supportive roles coming from the likes of AU Bank, excellent results which came out recently, Federal Bank, great moves post results, and RBL Bank, etc., which are in the throes of some uptrends. I think the banks are decently positioned to jump up from the supports. So I would be looking for the banks to lead the attempt to go up if one were to occur.
So, Mr. Narayan, this is with regards to banks. Any other topics that you could be watching out for, taking the charts into consideration?
Well, I think metals, auto, these are the things which have been outperforming the overall markets, right? So metals largely, if you look at Hindustan Copper and Hindustan Zinc, they are following the trends in the metal. And I think every dip in that is a good level to buy, because I think silver is not showing any signs of exhaustion, and that should drive Hindustan Zinc prices. VEDL has triggers of its own with the split and relisting and all coming up, and that is that's the best widespread play within metals. Hindustan Copper, I think if you look at copper charts, they are still looking pretty spiffy. So I think declines in copper also could be a buy. Steel, I think, has been a bounce largely on that protectionist duty which they applied, and that may have pretty much played out, because if you look at the charts of, let's say, steel flats long future, I don't think that is very bullish picture. So I would leave. I would stick with the more with the base metals and then gold and silver.
Okay, so that's with regards to where base metals are concerned. Topics coming in from CK Narayan as well. Thank you so much for joining us, on NDTV Profit. But moving on the sidelines of the World Economic Forum, NDTV Profit's managing editor Tamanna Inamdar spoke with Anant Goenka of RPG Group and Anant Maheshwari of Honeywell. The conversation focuses on the much talked about Trump address. Let's quickly listen in to what they have to say.
Well, that's the beauty of Davos. You never know who you meet while you walk down out of the Congress Center. I have with me Anant and Anant Goenka, of course, and Anant Maheshwari. Thank you so much to both of you gentlemen for letting me intrude on your chat and getting a quick conversation. Anant, what has been the highlight for you thus far in Davos? Or is the best yet to come with the Trump talk tomorrow?
I think with respect to tomorrow, you never know what you're going to get. But I'd say certainly the highlight has been geopolitics. It's just the uncertainty, how CEOs are navigating this uncertain world, trade, flow of materials, critical mineral access. So geopolitics has, in a way, overtaken AI, which has been the theme for the last few years. That too continues to be very important. But this time it is moving towards AI and impact for AI rather than AI for AI or tech for tech, what we were seeing some time ago.
Yeah, what's ironic, I don't know if it's ironic, but the theme of this time is spirit of dialogue. Do you see that pairing out? Are you having some of those interesting dialogues as well, Mr. Maheshwari?
So I'll build on Anant's comment on AI and geopolitics. These are two topics that you see in almost every conversation, and they seem to be different, but they are actually not, especially when you think about physical AI, which is the new autonomous capability being developed all around the planet. Think about, let's say, a car plant in top 5 geographies like the US, China, Germany, India, and in Japan. It'll look different. It'll be different because the skill levels are different, the products are different, there are very different capabilities being put in. So the autonomous and the physical AI that's going to develop there is also going to be different. And that, I think, is the opportunity for India. Also, as you think about how physical AI is developed in the country with a large ecosystem, both in terms of the AI capabilities, but also the real push on Make in India.
Building on that point on India, and I mean, both of you will be in a better position to answer this, but the Indian contingent seems to really represent this time, and not only with very large companies like yourselves, but even beyond that. Are you seeing that conversation around interest in India growing?
I think, first of all, the risk for India is very low. Our macros are so strong. Today, if you were to really go in and think, what can go wrong? There's not that much that comes to mind. So that is one. On top of that, we are growing well. There are various reform actions, whether it's actions to boost consumption, making ease of doing business easier. And people are looking at diversifying and moving into stable and high growth economies. And there's not too much there. So I think India has certainly been gaining importance over the years, and this year too, it's no less.
You want to answer that very quickly?
Very quickly, I would say, from a Honeywell perspective, India is really core to us. We've had more than 4 decades of presence in India, in our physical operations there, and been serving the country for nearly a century. And I can see we are innovating in India, we are serving India.
Sorry, just one quickly. We're speaking right before the budget. What are you hoping to see from the union budget this time?
Union budget, 2 things that come to mind. One is increase in defense spends. Countries are going to war. We need to invest more on technology, so capex on defense. Second is critical minerals are getting important, more and more important. So a tailings program where post use of minerals, how do we extract the waste from the mineral program? So I think that is the second area where we are looking at. And third is the continued focus on reform agenda with high focus on exports and high focus on main factors of production: capital, labor, land.
Okay, so those are big voices coming in, sharing their insights when it comes to global supply chains as well. But moving on, Maharashtra is also in the spotlight at Davos as the major MOUs are being signed. We have Adani Group signing MOUs as well. Chief Minister Devendra Fadnavis and Pranav Adani unveiled plans for multi-lakh crore investments. Again, Tamanna Inamdar spoke to them. about these transformative projects. Let's listen into that conversation.
Historic MOUs being signed here at the Maharashtra lounge, and just speaking with us about this, of course, the Honorable Chief Minister Devendra Fadnavis ji and Pranav Adani ji. Just want to get a sense of what we witnessed here right now. Fadnavis ji, CM Saab, the importance of these kind of agreements for the development of Maharashtra. एक comment उस पर.
देखिए, सबसे महत्व का ये है कि इतने बड़े पैमाने पर FDI महाराष्ट्र में आ रहा है. फॉरेन डायरेक्ट इन्वेस्टमेंट ऑफ द ट्यून ऑफ 6.5 लाख करोड़, और ये वेरियस सेक्टर्स में, वेरिड सेक्टर्स में जा रहा है. इसमें इंडस्ट्रियल पार्क्स भी है, इसमें कोस्ट गैसिफिकेशन भी है, इसमें अरीना भी है, इसमें न्यू टाउनशिप्स भी है. तो वेरिड सेक्टर में इतना बड़ा FDI जो आ रहा है, मैं ऐसा मानता हूँ कि ये एक प्रकार से वन सिंगल FDI का इतना बड़ा डील शायद इससे पहले बहुत कम हुआ इन सेक्टर्स में. तो मुझे बहुत खुशी है कि वैसे भी महाराष्ट्र ये FDI डेस्टिनेशन बना है. पिछले अगर आप कुछ साल देखेंगे तो महाराष्ट्र ने हमेशा टॉप किया है FDI में, अट्रैक्टिंग FDI. और अब ये जो इन्वेस्टमेंट यहाँ पर हुई है, इस इन्वेस्टमेंट के कारण मुझे ऐसा लगता है कि वो हमारा नंबर और आगे जाएगा.
और महाराष्ट्र की इकोनॉमी पर इसका क्या एक वर्चुअस साइकिल और रिपल इफेक्ट पड़ेगा?
देखिए, इसके कारण बहुत जॉब्स तैयार होंगे. विशेष रूप से हम जब कोल गैसिफिकेशन की बात करते हैं तो उसके जो डेराइवेटिव्स है वो बहुत बड़े पैमाने पर जॉब क्रिएट करते हैं. और देखिए, अगर हम इसको दो तरीके से देखें तो मुंबई में भी है और नागपुर जैसी जगह पर भी है. तो सब जगह एक प्रकार से जॉब्स भी क्रिएट होंगे, और अल्टीमेटली जब ये इन्वेस्टमेंट आएगा तो इसका एक मल्टीप्लायर इफेक्ट ये हमारी अर्थव्यवस्था को भी देखने को मिलेगा. इसका परिणाम महाराष्ट्र के और भारत की ग्रोथ रेट पर भी होगा. तो मुझे लगता है कि एक प्रकार से बहुत अच्छा इस प्रकार का इन्वेस्टमेंट है.
और प्रणय जी, अगर आप अपनी तरफ से बता सकते हैं कि इन टर्म्स ऑफ एन एनवायरनमेंट दैट encourages ease of doing business and investment, how do you see it?
See, today Maharashtra as a state is giving such a good, like you said, ease of doing business, and they're so inviting towards doing large projects that, any corporate, as you saw even earlier to us, there were a lot of corporates. So it is very natural for large corporates to come in, and all the sectors that CM sir just briefed about, these are all upcoming sectors. And I must on record place that, the Department of Industry plus the Urban Ministry plus CIDCO, the way they are coming forward and the way they are wanting to have new investments is, I think, path-breaking, not only for India but also for the world to see. और जैसे सर ने बोला कि भाई ये चीज़ में जो FDI आ रही है, एज अ ग्रुप वी हैव कमिटेड इन्वेस्टमेंट ऑफ ओवर 6 लाख करोड़, विच इज ऑलमोस्ट ओवर $60 billion over, of course, the next 7 to 10 years. But they are all very different sectors. Data centers, the world is looking to come into India from a data center point of view. Urban development, urban infrastructure development, integrated townships, what we are talking about, renewable projects that we are talking about, coal gasification. So all of these sectors put together, the arena, now the concert economy is so big, and Mumbai is so natural to have this, because that any big stars or anybody who wants to come for performance will also look at Mumbai. So we are thankful to the government of Maharashtra. Thank you to the leadership of Fadnavis sir, and thank you to the whole Maharashtra department.
Thank you so much. Thank you.
All right, and NDTV's senior managing editor Vishnu Shom was in conversation with Civil Aviation Minister Ram Mohan Naidu at Davos to discuss the aviation sector's growth trajectory. Listen in.
Civil aviation in India is booming. It's one of the fastest growing industries in India. It's one of the fastest growing markets anywhere in the world. The rate at which India has been acquiring civilian aircraft, airlines such as Indigo acquire a new aircraft once every week, gives you an idea of the potential that actually exists in the Indian market. The Minister Ram Mohan Naidu is a young, and I must say extremely talented, minister dealing with one of the most challenging parts of the Indian economy. He has to look after the economics of it all. He has to look after safety as well. It's been a challenging year, but also one that points to lots of opportunities. So let's talk about the larger India story first, in civil aviation. How do you see it expanding to becoming, let's say, top 3 in the world?
To start with, I have to mention that India is already the 3rd largest domestic civil aviation market. And if you consider the international traveling also, we are the 5th. And very soon we are going to be the 3rd internationally also. And the reason that I say is the kind of numbers at which we are growing. The last 10 years itself, even though we had a situation of COVID, where the direct impact has been on aviation itself, a strong blow not only for domestic aviation in the country, but internationally. And it went to the point where many of the airlines also had to shut this shop. But we have crossed through COVID. We have achieved numbers where we have crossed the numbers, pre-COVID numbers also in terms of passengers flying. And today we are sitting at 250 million passengers in 2025. And year on year, we are seeing at least 10% growth in the amount of passengers that are coming into the air travel network. And then if you look at our airports, the number of airports have also increased from 74 in 2014 to 164. And it's a continuous process for us where we are trying to build 50 more airports in the next 5 years and achieve up to 350 up to 2047, the year 2047. And if you look at the aircrafts, you've already mentioned that we have great orders. We have up to 1,700 orders right now. And we are expecting in the next 15 years of them to be delivered. And this year in 2026, we are going to see 106 aircrafts coming in. So these are all numbers which indicate that there is a strong demand that is there. And it is continuously going to grow for the next 20 to 25 years. So considering number 3, I would say that we have a great opportunity to cross those numbers also. Because India is aspiring today. There is an ambition, strong ambition at a larger population, not only people who are just presented with the opportunities, but at a large scale, people are aspiring to do much greater things. And in that aspiration, aviation becomes a strong story for them to kickstart their process. Right. And today, the people, I've talked about it in one of the sessions also, on how people who are coming from the rural areas, people who are coming from probably tier 3 cities, they've all become so comfortable with air travel today. Right. At one point of time, there was a lot of anxiety, there was a lot of nervousness, and they always felt that air travel is probably a exclusive way of traveling. It's only for the elite group, or it was only for a certain class of people. Yeah. But thanks to our Honorable Prime Minister and the vision that he had, he always had this mantra with him, which is Hawai Chappal se Hawai Jahaj ka safar. And I can proudly say that to an extent we have made it a reality. Yeah. 5 lakh people every day are traveling in the country by air.
No, it's absolutely incredible. It poses a challenge to the railways as well. But I must ask you, it's been a difficult year, and let's face it, safety has been a primary concern. We've had a horrific incident with Air India, AI-171. Indigo saw a system which some would suggest was overstretched at the level of the airline. But again, safety is your primary concern, more than economics. And you have undertaken a series of steps to ensure, number 1, flight duty time limitations. Pilots and crew are not stressed out. How critical is it for us to ensure safety given the pace at which we are expanding?
It is not only critical, there shouldn't be any compromise when it comes to safety, and that is the attitude that we keep in civil aviation and the regulation that we do. Safety is of the topmost priority. No matter what we do, we talk about numbers, we talk about passengers, we talk about money, we talk about airports. Whatever we do is secondary. Safety and a secure way of traveling is the top priority, and these are the foundations and the pillars on which you have to build your civil aviation network, and that has been the priority. Based on that itself, we have been taking a lot of reforms. We want to ensure that the crew, that the pilots and all the people and the staff that are involved, they are adequately de-stressed, or their conditions of work conditions are all up to the global standards and up to the standards with which they have to be treated. And when I say that the challenges also, I just want to go back to the point that the nature of sector has changed. And simply being put as from exclusive, we have become a very inclusive. more and more people are becoming comfortable traveling through air. And it's come to the point, if you look at many of the airports today, you find all classes of people coming in. So when the network is growing at such a scale, then obviously the regulation should follow. In fact, it has to be going hand in hand, and that is one thing that we are proactively looking into it, because as the numbers are growing, there has to be some changes in the policy also, and that is exactly how the airports should be for the future. So here one policy reform that we are trying to bring is that, see, when you talk about airports, it's always these mega structures that you're trying to build, long runways, huge terminals, and huge infrastructure capacity that you want to build. But that's not the way forward for us. What we are saying, see, we'll have the mega airports, which are metropolitan city airports. These are going to be the hubs. And then when you want to create the connectivity across the country, have medium airports, have smaller airports, have the spokes. So you don't need a big airport everywhere. You have to have club all these things. And likewise, when it comes to pilots, then we have changed the FDTL norms. Yeah. So each and every vertical that is there in aviation, according to the growth story that India is witnessing, and it's going to witness in the future also, proper policy making has to be done, and at regular intervals. So we are pacing ourselves in that manner.
You know, I mean, passenger traffic rising, you have India's aviation sector, which is booming, is what the minister is indicating. But moving on, AI has been holding the center stage in the World Economic Forum, and Tamanna Inamdar, I beg your pardon, spoke to Shashwat Goenka, Vice Chairman at RP Sanjeev Goenka Group, about how the group is trying to fit in the AI race. Let's listen in.
As a young leader, how do you look at AI? Do you look at it as a problem in some context or the solution in many?
AI is definitely a solution, not a problem. And honestly, about 3 years ago, when we just discovered AI, I guess, or it became popular across the world, the whole focus for all corporates, including ours, was to see how can you use AI, right? And it was a good to have, not a must have. I think what's changed over the last 12 months is it's kind of an existential question, because you can't exist without AI. I think it's as big as the Industrial Revolution to some extent, I would say, where it can help with productivity, it can help with efficiency, it can help with profitability. And for us, it forms the bedrock of each of our companies now, right? From whether it's electricity generation, distribution, manufacturing, whether it's manufacturing of solar components, whether it's manufacturing of carbon black or other chemicals. Of course, in First Source, AI is a core part of the transition we are trying to drive. Then I can talk to you later about it as well. So across each of our businesses, we're looking at how we can not just use AI, but how does AI become the base on which we can build the next 5 years.
Do you see it as also a tool to realign workforces and the use of workforces? Because I think that's the other side of the coin or the question, right? What happens, and that more from an economical standpoint or social standpoint, what happens to the number of people it takes to do one job if AI does it much more easier?
I've always been a firm believer that AI will not replace jobs. You have to just start using AI and be AI skilled in a way. And it's similar to what emails did back in the day, right? I think of it very much like that. It's not going to actually take away jobs. It's going to create more jobs. The nature of jobs may change. And people who use AI in different contexts in their jobs will be the ones who probably succeed much faster than the rest.
If I look at where you are right now, Shashwat, as a young business leader, and these host of companies that you're running, twofold challenges come to mind. I talked about technological shifts. The other is geopolitics. Mm-hmm. And you don't know what arrow is going to hit you from where and what it means. On the other hand, if you think about raising capital, things like that, opportunities, it's blue skies. How do you look at the second part of the challenge I talked about, geopolitics?
So I think if you look at the last year, I think that's where a lot of things in this space have happened. And I think this is going to be the new normal. Each country is going to do things that they believe is good for their economy, for their people, for their industry. And they're not wrong in what they're doing. It's just about how does this fit into the larger globalization context, and how does this fit into a one world, one economy context, right?
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Well, we are on this budget yatra and we are in the midst of a solar field, and the idea is that to talk about the renewable energy sector and what is anticipated from the budget, or what is it that the companies and market experts want for the sector from the budget, because the sector is anticipating several measures in this union budget in order to make the country reach its target of 500 gigawatts by 2030 and net zero by 2070. And we are at the KP Group's facility in Sudi in Gujarat, and in conversation with Dr. Farooq Patel of KP Group and our very own Gurmeet Chadda of Complete Circle. Gentlemen, both of you, thank you so much for being here. And Dr. Patel, thank you so much for having us. Now, would love to know, do you expect the budget to make some landmark moves to aid the growth of the renewable energy sector?
Yes, of course, we require some more facilitation from this budget. As we know, the renewable energy is the key energy generation for the India's growth. So, as from the last few budgets, we are getting a very good initiatives by the government for the renewable energy, and especially for the panel manufacturing and developers also. And the same thing we expect in the transmission line.
Okay, so let's start talking about this, Dr. Patel and Gurmeet, both of you. Dr. Patel, I'll start with you. What is top of the mind? What if the finance minister were to say that, Dr. Patel, I can give you only one thing in this union budget, what do you think that will be or should be?
Only one thing cannot be changed the trajectory. So many things, Neeraj bhai, required for the growth of the renewable energy, and especially for the ingot to the cell manufacturing all line, we require more facilitation to that particular things. And the same thing in the transmission line, I would say. This both thing can ramp up the renewable energy, especially in the solar field, that we can get the more development in this field. And of course the base where the buzz is going, and it is really need of today, that if we do the more investment in the base, we will get more the transmission line to be strengthened and the regularization also.
Okay, well, sorry, you want to make a point? Sorry.
I just want to say regarding the base, government should have, I don't know, but they should facilitate in the base cell manufacturing.
Okay.
Which give us the more and more renewable to be go interior of the country.
Okay. Okay.
So we one side we have a transmission line to be strengthened. One side we have a land, but there is no transmission line. So AC part, if go there, not only the renewable energy, but the other thing, other power generation also can be facilitated to the manufacturer. And 30 to 40% in any manufacturing, we require.
Well, I think as all of our budget sessions have shown, there's a lot of expectations. Let's see how many turn out to be true. But the markets, I mean, ahead of the budget or otherwise, are caught in a bit of a quagmire currently. Down a third of a percent, 21,155. It's been amongst the worst starts in the last 8 or 9 years. Pratik Agarwal, MD and CEO of Motilal Oswal AMC, with us on the show to talk about his thoughts on markets and the way ahead. Pratik, great having you. Thanks so much for joining in. You know, I wish a lot of people had the calm that you have within you when markets are going through such a period. And I know this tape has played out in the past, and every single point of time it feels that this time it's different. But I'm inclined to ask you, is this time really different, or this too shall pass?
This too shall pass. In that manner, actually, it is not different. Every time it has happened in the past, it has passed. So, to some extent, if we see what is happening globally is not negative for us, it can be quite positive. Because just think about it, what is happening is the quest for markets once again. India is a country with 140 plus crores of us. It is potentially the biggest market of the world. Now, if the ability with our policymaker increases to have our market for our manufacturers, it is very good. it is very good. So increasingly, global leaders are not, let me say, reposing faith in global systems which have been put in place and have survived for so many years. New order is being written, and it seems it is. No, every leader will have more say within its own country, which for a country where the size of population is so large has to be positive. Now, in the interim, there is volatility. Now, one bit of volatility is because our currency seems to be weak versus the dollar, and dollar itself is weak versus every other currency in the world. And so there is a flight of money outside of the US to other markets. All other markets are rejoicing, except last 1 or 2 days. We seem to be not doing as well. Now, what you are really looking for is currency stability at whatever level, but stability, before the global investors start to look back into the country. Else, Q2 earnings were good. Q3, the start has been good. Many companies have reported better than expected numbers, reposing faith in the future. So the building block of market that way is pretty solid. Good earnings, lower interest rate, lower inflation. In terms of countries, macros, lower oil also helps. So a lot of things going for us. But a few things which will sort themselves out over, let me say, a few days.
Few days. Okay, that's interesting to know. So, Pratik, does the semblance of a trade deal with the US become very important, or could what the EU chair Ursula von der Leyen said, that the mother of what could be a mother of all trade deals, which is the India-EU trade deal, could that give the whiff of hope, or does it need to have something in the budget to attract FI flows back, which could hopefully get in the flows and stem the fall of the rupee both? Is that the need of the hour? What is more important?
Yeah, so trade deals are good, especially with the West, where we may have some cost advantage in manufacturing. That is our thought. Now, EU is a large market, US is a large market, so a favorable trade deal with these markets would definitely help. We don't have much textile exports into the EU. A deal there can open that up. So, second, when I say currency has to stabilize today, FPIs are probably not looking at us because we seem to not have a trade deal with the US. So, if you see life of various markets, there was a life before the trade deal and markets were not doing well. And after a trade deal, wherein every market which has a trade deal with the US has done significantly better. So we will hope the same for our markets. Now there are numbers which are floating around. If those numbers come out true, then it shall be very good for Make in India as well, and that should support the market. So trade deals on the currency side is important. Now, from the budget, what we are looking for as equity investors, that guys will have a different point of view, is maybe when everybody is seen to be having less cash to spend, there is uncertainty in the air. Capex, hence from the private sector, may just get pushed a bit more. Have the government shoulder the responsibility for some more time, and maybe hence the fiscal consolidation roadmap gets pushed a pat into the future. And then if it is, where do we end up spending that extra money is the other thing. If it is for nation building, if it is for catalyzing investments into newer spaces through PLI kind of instruments, etc., I think will be positive for the market. Now, dare say, but there is this huge ask on taxation also across levels for investors. When times are like this, if there is some certainty and at a lower level from where we are over, let's say, a period of 5 odd years, that would be a pretty good signal to global investors. So those are the things to look for in the budget. I don't think taxation changes should be expected and would happen. But very clearly, incentivization, to industries which can build the India of the future will be very, very keenly watched. So, and of course, there is this new thought which is getting percolated, which is we have kept out investment from one country. The gates are completely closed. Now maybe those gates open a bit because we need. So if the manufacturers from there want to come and manufacture here in association with Indian promoters, I think there is a view that that should be now encouraged for technology, for getting us capabilities in manufacturing that we may not have. So those are the things to watch for in this budget.
Okay, so Pratik, couple of interesting points that you mentioned over here with regards to the trade deal. You're talking about what it would mean for the currency and what should be expected from the budget as well, which will probably be looked at pretty closely. How are you seeing that FPI-DI dynamic then change? Because sustained FPI outflows is what we've already seen in 2025. You had mentioned in the previous conversations that we had as well that the tide somewhere was turning on this front. How critical would it be for the rupee to stabilize for the FPIs to come back?
No, so it is critical because if you are looking at a possibility of a further decline in the currency, obviously, if you are sitting with monies offshore, you will want to hold back. Very simple. Now, in FPIs, there is a type which we say hedge funds, who run levered books. For them, rupee volatility can kill. So, that kind of activity would not commence as well. So rupee currency stability, so level is not important. Stability is important. I keep saying that. That is the first start point. Now, I think we have sorted a lot of issues over the past 1 year. We are not amongst the better performing nations. So what it has done for us is to correct the relative valuations versus a lot of other countries. We are no longer the most expensive market in the world. 2 other markets have that crown. Our premium versus emerging market average is now lower than the 15-year average. So that also helps. Maybe what is happening is that there is some amount of momentum play. We are a market not really performing strongly. And if others are performing very strongly, then the pressure to sell a bit more in India to go there is there because we are a large emerging market, so a large part of somebody's portfolio. I think some bit of that would continue to happen, and we are then looking for an event. If we want a turnaround in a short period of time, then we are actually looking for an event that can do it. So there you are right. It can be a budget, it can be a trade deal, or both. Which will, shake investing people globally to have a relook at India. And when they relook at India, there is a lot going for us. We are not amongst the better performers. So valuations have corrected. We also have a lot of growth spaces. We are the fastest growing large economy and very, very long runway of growth. So once this tide turns, the up move can last a while. Is the thought. Else, if we don't get what we are looking for, the 2 events that we are talking about, it shall sort, but it will take longer. Is the sense. But today there is a lot going in our favor. A good deal, so we are talking of 2, at least 1 will happen. A good deal will cause people to look at us and change sentiment.
Got it. So Pratik, if you have to look at 2026 as a year, you have mentioned earlier that there is a structural shift happening when it comes to IT earnings. There is moderation there. You have been positive on NBFCs versus the banks. And 3, beyond the existing themes, you have been talking about emerging areas like the circular economy, data centers, etc. From all of this now, with the way Q3 numbers have panned out as well, what would your top 3 bets be in terms of sectors for 2026?
We continue to be positive where we were positive. So the growth themes continue to be the same. We are growth in earnings focused investors. They haven't changed. Now, just to make things clear, 24 was the year wherein a lot of these themes worked in this country and globally. So we were like what was happening globally. 25, the same themes worked globally but did not work in India. Maybe the reason was that FPIs were such strong seller here. 26, if we see intensity of FPI selling reduce, the linkage with the world and the thoughts of the world will again percolate into the country, and the themes could then be similar. So stuff like defense, renewables, EVs, etc., which are plays globally, new tech, digital, etc., would all again start to do significantly better if FPI selling reduces over a period of time. If it does not reduce and we get a year like last year, I think the themes of last year, which were very different, may continue to do well, and those were basically close to the index kind of spaces. So this is how it is with correction in valuation, with global interest rates being brought down, with liquidity getting increased. I think chances of us doing well over a period of time is high. The worst performing market of 1 year typically is not the worst performing for 2 years in succession. It's never happened to us before. So in terms of probability, things changing for the better is very high. And, if markets do well, then the growth themes should be expected to do very well.
Let's hope the tough times pass sooner rather than later, because right now the bind that some of the trading community is in is unreal. But thank you so much. I love the way you started off, that this too shall pass. We'll wait for that. Thanks so much for taking the time out and being with us today, Pratik.
Thanks.
All right. Well, that's Pratik Agarwal with his thoughts. And keep in mind, we are at the lowest point of the day. Yeah. So we're not leaving on a fine fettle. But something tells me, Hiral, this is now starting to look a bit stretched. The band is just stretched a lot more than what was anticipated. Yeah, something has to give.
Technicals also are pointing towards being in the oversold zone, right? So I think whether it's the US trade deal, what happens is anyone's guess, or the EU trade deal. But that's still far away. Any commentary from Trump is going to be interesting then today.
That's today.
Okay. Though his flight has returned back to Washington.
Yeah, that's the interesting one, right? He's not going to Davos, so it could be interesting. Anyway, Chase, with that, it's a wrap on this leg of India Market Open from Hiral and me and the team that put this show together. Thanks so much for watching.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर, ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground, I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani. With me is Soumit Sarkar. I think Soumit, before we go on to the queries, let's take a quick look at how the markets are doing. And there's no respite as to where
below 25,100. There's no support level that I can even find right now.
Exactly. Below 25,100 is what we're seeing on the Nifty 50 right now. Down 0.6%, and it continues after the free fall that we saw yesterday in the last hours of trade. But you also have your bank Nifty, which is equally under pressure, down by about 0.8%. And with regards to where the broader markets stand, both the mid cap 150 and the small cap 250 are down 1% each. So I think the pressure continues on the markets right now, and we have to see as to how the next few hours pan out with regards to where the Nifty will go. Whether it will go below the 25,000 levels or not is something that we'll be watching out for, of course. But with regards to the counters that are putting that weight right now on the Nifty 50, let's try to pull up the heat map, because something like a Trent is down by 2.7%, followed by something like an ICICI Bank, Eicher Motors, BEL, Apollo Hospitals, as well as L&T. All of these counters putting that pressure on the Nifty right now. But on the flip side, something that's doing well is Eternal, ahead of its earnings, up 1%. Power Grid, Tata Motors PV, as well as Sun Pharma and JSW Steel. Some counters in the green and slightly, keeping the Nifty in the check. But let's try to pull up the sectoral heat map to see as to what are the sectors doing in trade today. You have all your sectors in the red right now. Large fall seen in defense, 1% down, followed by something like Nifty Media, Nifty IT, as well as Nifty Bank. The least fall that we are seeing is in the Nifty Pharma as we speak. But with regards to where the advanced decline ratio stands, let's try to pull that out. You have right now around 1850 odd declines versus that of 500 odd advances. So that ratio, and it's getting wider by the day, which is concerning, and that's reflected in the broader end of spectrum as well. Let's try to pull up the BSE 500 because that will give us a picture as to how the broader end of spectrum is doing and what are the counters that are actually seeing pressure. And largely, it's stock specific and also on the back of earnings. You have something like Shoppers Stop, which is down 5.5%, but some, recovery is seen in that counter. It was down almost 10% in trade. Something like a UPL down yet another 5%. Coforge, Prince Pipe, Cyient, as well as something like Kalyan Jewelers is seeing a downtick for around 8%. On the flip side, you have counters like Credit Access Grameen, up by about 6%. MRPL up 4%. Carborundum as well as Alkyl Amine seeing gains anywhere in that range of 3 to 5%. So that's with regards to where the markets stand. But with that, let's also welcome in our guest for the day, Nilesh Jain, Head AVP Technical and Derivative Research at Centrum Broking, and Rajesh Agrawal, Head Research at Om Capital, joining us now. Welcome to both of you, gentlemen, and thank you so much for taking out the time. And a very good morning to the both of you. I'll take up the first question, which is from Chandan Jain, who's writing us from Hubli, Karnataka. And he has a query on Unimec, and he's asking whether this is a good buy at the current levels, or maybe he can continue to buy in staggered manner or not. Rajesh, I'll take this up with you. What's the view like?
Good morning, Mahima. Good morning, everybody on the panel. I'm sorry we don't track this, so I won't be able to give any views on this.
Sure, no worries. Nilesh, enough data on the charts?
And data also indicating that the setup looks weak, and we may see a follow-up on the lower side towards 850 to 800 as well. So not advisable to take any counterweight at present level. The structure is looking weak, and we may see follow-up on the lower side to continue.
All right, okay, so that's the view coming in on Unimec Aerospace. For viewers who are tuning in, you can send your queries on WhatsApp and also call us on the number that's flashing on your screen up there. The next question that we have is from Nivendu Sharma. He's wanting to know if this is the right time to make an entry into something like a Brigade Hotels at the current price of 62 or 63 odd rupees. Right now it's trading at around 60 odd rupees. But this versus the IPO price of course 90 rupees. Would it be the right bet in the hospitality space, or something like an ITC Hotels or Lemon Tree Hotels is preferred? Rajesh, what's the view like?
See, hospitality as a sector is going to do well in the long run because of the kind of demand which we are witnessing in the entire hospitality space, I would say, with rooms not being added on the same pace as the demand is. Average room rent has gone up, but government's focus on developing tourism and all is helping, and not to forget the marriage season and the corporate bookings. But Brigade, I don't think would be a better choice in the entire space. As you said it right, ITC Hotels or a Lemon Tree Hotel in the mid-cap space are better. We have seen ITC Hotel given very good numbers day before yesterday, or maybe yesterday, if I'm not wrong. The numbers were pretty good. They have good expansion plan, almost debt-free balance sheet, and belonging to the ITC group. I think this stock can go to around 30 to 40 odd rupees in the next 12 to 18 months. So that's a better choice, I would say.
The next query is coming in from Manoj Sharma from Bareilly, and it's on PTC India. He wants to know whether it's a right time to enter this counter. Any view on this, Rajesh, PTC India?
See, company is doing very well. It gives out good dividend. Numbers are good. And with the kind of correction which the stock has written in the recent past, I think the valuations are also good. Somebody looking for a time horizon of maybe 1 year, it's a good entry point.
Okay, all right. So that's the view coming in on PTC India. The next question that we have is from Raghuraman, who's writing us from Chennai. He's holding around 100 shares of NMDC at an average price of 54. And he wants to know as to what are the future prospects of this company and whether he can continue to hold or not. Rajesh, what's the view like?
Mahima, just to clarify, is it NMDC or NMDC Steel? Because 54, I think it should be NMDC Steel.
It is NMDC Steel, yes.
See, I don't think it's a right choice to continue holding to this stock. The government has said that it was a divested stake, but then the denial came. The numbers are not that great. There are better choices in the entire steel space, I would say. One can switch to either Jindal Steel and Power or Tata Steel for better returns.
Right. The next query is coming in from Okay, the next is a caller query coming in from Hyderabad. Dheeraj, you can go ahead and ask your query.
Good morning, sir. My query is regarding United Breweries. So I would like to, I'm holding 65 shares at 1520, sir. So the stock is at all-time lows. So the stock price currently is like 3 years before the same price is there. So I would like to hold it until the summer quarter, like the next quarter until June or July for the next 6 months. Is it a good buy or is it better to exit and shift to something like tube investment is my query, sir.
Rajesh, any view here? Should he continue holding the counter or should move to tube investments?
See, one can continue with UBL. As far as tube investment is concerned, that again is also a very good story. It's positioned as a diversified growth story, I would say. Strong engineering and metal business. They are moving into EV to a lot of new capex being done, and the valuations are very attractive at 2200 odd levels. So both one can continue. Both counters can be kept in one's portfolio. What I would suggest is keep UBL as it is. And if you have extra funds, you can deploy in tube investments.
Okay, all right. So that's the view coming in on where UBL stands. The next question that we have is from Mr. Shankar, who's writing us from Dubai and asking about KFintech. He's bought 15 odd shares at the levels of 1076 and wants a technical perspective on this counter. Should he buy or average more at the current levels? Nilesh, what would be your view?
Well, not advisable to buy fresh at current level and do not average because the structure appears weak. It has given a breakdown from its long consolidation range of almost 6 months. It was consolidating and today it has given, in fact, recently it has given a breakdown. Looks like it is heading towards 960, 940 on the lower side. So if you are already holding the long position, then keep a tight stop loss at 970 and avoid doing any sort of average.
Next is a caller query coming in from Karnataka. Muttu, you can go ahead and ask your query.
Hello.
Yes.
Sir, good morning.
Good morning.
Sir, I am holding 3,000 shares of Bajaj Housing. Sir.
Right.
Right. I am sell or hold my shares.
For short term or long term?
Long term holder, sir.
Rajesh, any view on Bajaj Housing for long term?
Great company, I would say. Second largest housing finance company in our country. The shown good growth in the last 4-5 years. If you look at the AUM numbers, they have grown at a good CAGR. And I think the valuations are attractive. Got beaten down since its listing at around 140, 150 odd rupees. It has come to almost 50% correction it has witnessed. So at these levels, one can even add for a long-term horizon.
Okay, all right. So that's the view coming in on Bajaj Housing Finance. The next question that we have is from Jagar Thakur, who's writing us from Mumbai. He's got 4,000 shares of AWL Agri Business and wants a view in terms of whether he should hold or book losses at the current levels. He's sitting on a loss of over 7 lakh rupees. Nilesh, I'll come to you on this one. Do you think the charts anytime will turn positive for him or should he book his losses? Because that's a significant amount of loss.
Well, the stock continues to remain under pressure since a long time. If you see in the year 2022, it made a high somewhere around 800 to 850, and since then, whatever pullback in between we have seen has got sold into. It is trading well below its long-term, short-term moving averages. The structure appears weak. Sell on right should be the strategy. If at all you get any pullback towards 220, 240, or maybe 250, that's a good level to exit from this particular counter. Because it looks like it is heading towards 190 to 180 on the lower side. So better shift to the better stocks, avoid AWL.
Vimala Nanda from Mysore has a query on L&T. She's holding around 20 shares bought at a price of 3,650. Nilesh, what's your view when it comes to L&T?
Well, I think if I can see she's already in the money, so it's better to book profit as of now because the structure appears weak given the kind of a weak setup we are witnessing in the market. So large caps are likely to remain under pressure as well. So L&T breaking below 200 long-term moving average just today looks like it is heading towards 3,700 to 3,600 on the lower side. So for the time being, if bought it purely from a trading perspective, then exit.
All right, okay, so that's the view coming in on L&T. The next question that we have is from Ravi Chandran, who's writing us from Bengaluru. He's got around 300 odd shares of Premier Energy with around 1,000 odd rupees is what he's saying. He wants to know if he can hold or sell at the current levels because he's sitting on a loss of around 83,000 rupees. Rajesh, would you recommend him to continue to hold?
Continue to hold at this point of time, I would say. They're moving a big way into solar and renewable energy things. Doing very well. Order book is also great. Around 850, 860 odd levels, it will be a time to exit.
Dev from Chennai is holding 821 shares of Jindal World. His average buying price is 38.42 and is sitting on a loss. He wants to know whether should he hold this counter for the next 2 months. Nilesh, any technical view on Jindal World?
Well, Jindal World, I'm not able to, track this particular counter for the time being, so won't be able to comment.
Rajesh, have you looked into this counter, Jindal World?
I'm sorry, we don't track this.
Okay.
All right, okay, so that's maybe next time you can go ahead and ask this question and we'll take up sometime else. But the next question that we have is from Lakshmi Narayan, who's writing us from Hyderabad. He's bought 100 shares of Hitachi Energy at the levels of 6,500. He's sitting on a significant amount of profit. Wants to know if he can partially book his profits or should he continue to hold, sell? What should be the view like? Rajesh, I'll take this up with you. What's the view?
See, if you have no requirement of funds at this point of time, you should continue with the stock. I think 18,000 odd rupees would be a good levels to book partial profit and not the entire chunk of your holding. But at this point of time, it's a hold.
The next query is coming in from Ashok from Bangalore and it's on Raymond Limited. He has around 100 shares at an average price of 952. He wants to know whether should he hold this counter or exit. Nilesh, any view on Raymond?
See, I can see Raymond currently trading at 386 rupees. So,
Limited.
Right. Okay, Raymond Limited, which is at 386, right? So overall, the structure appears weak from a short to medium term perspective, and it looks very difficult to see that kind of rebound on the upside. So overall, a sell on rise kind of a strategy should be deployed if bought it from a short term perspective. And if somebody wants to stay put, then keep a trailing stop loss right now at 372. So 372 should be the stop loss. And if you get any pullback towards 420, 450, use that pullback to exit.
Okay, all right. So that's the view coming in on Raymond Limited. We've got our next caller. Pawan is calling us from Hyderabad. Pawan, hi. A very good morning to you. How can we help you today?
Yeah, ma'am. Very good morning. Actually, I have some doubt. EPAC 3-bag technologies I bought at 290. Number of shares is 300. So I can invest more on it.
Okay. Got your question. Pawan, I'll take this up with Rajesh. Then Rajesh, the stock is down 3.5% today. But do you think this is the right time to maybe add more, or what's the view like?
I don't think it's a good idea to add this stock at this point of time. Maybe some amount of more correction is left into the around 200 odd rupees would be a better levels to add. As far as existing holding, one can continue to hold for a target of 260 in the next 6 to 9 months.
The next is a caller query coming in from Chennai. Ganpati, you can go ahead and ask your query.
Yeah, I want to know the experts' views on VA Tech Vabag.
Okay.
I'm holding about 1,000 shares at 1,500. It keeps falling despite its fundamentals, so I want to know the experts' views.
Rajesh, any view on VA Tech Vabag?
Very strong company, I would say, doing projects in waterways and water systems. The government focus on Amagi Ganga and all these things is helping. And not only domestic orders, they have good international orders too. At these levels, one can even add.
Okay, all right. So that's the view coming in on VA Tech Vabag. The next question that we have is on PN Gadgil. Animesh from Kuala Lumpur is holding 101 shares at the levels of 622. He wants to know whether he can hold, average or sell for the next 6 odd months. Nilesh, your view on this?
Looking at the overall structure, I think it's an avoid. If you get any pullback, use that pullback to exit. It has a immediate support at 535. If it breaks 535, then it might test the levels of 500 as well. So use pullback to exit if bought it purely from a short-term perspective.
Next query is coming in from Ram from Chennai. He's holding 3,500 shares of Restaurant Brands Asia at a price of 76. He wants to know the fundamental view. Rajesh, any view on Restaurant Brands Asia given the fact that the promoter is now changing? Do you recommend him to continue to hold this counter?
See, I would say continue to hold at this point of time. Although numbers have been not that great in the last 2-3 quarters, but with a change of hands, let's see what the new strategy comes out. Since he has held for such a long period of time, I would say at least for 1 quarter, continue to hold for new management to give out their strategies.
Okay, all right. So that's the view coming in with regards to where Restaurant Brands Asia stands. The next question that we have is from Ravichandran, who's writing us from Bengaluru, asking about Suzlon. He wants to know whether he can hold or sell the counter. Nilesh, your view on this?
It's a sell from a short-term to medium-term trading perspective, but if a view is long-term, then keep a stop loss at 41. If bought it from a short-term trading perspective, then looks like it is likely to test the levels of 43 and 42 as well on the lower side. So again, a sell on rise kind of a structure from a short-term perspective.
Right. A new listing on the street today, Amagi Media Labs. Let's listen to what the management has to say.
Profit, I am Mahima Vachajani. Amagi Media is in focus on the back of its listing, and to understand as to what what stands ahead of the company going forward post listing, we are joined by Bhaskar Subramaniam, who's the co-founder and managing director and CEO of Amagi Media Labs, and Vijay NP, who's the chief financial officer of Amagi Media Labs, joining us now. Welcome to both of you, gentlemen, and a heartiest congratulations on the listing. My first question is for you, Mr. Bhaskar. With regards to where profitability is concerned, first half you've turned profitable. Just want to understand if these numbers are sustainable going forward, and whether you expect to be profitable from here on.
Yeah, thank you very much. Thank you very much. Right. So just to give you a brief, right? Amagi is a media technology software company working with TV channels, content creators, producers of sports, news, and anybody who creates content in the whole group, right? So we're a worldwide software business that we run today. If you look at it, the biggest opportunity for us is just 10% has moved to cloud, which is where we think the whole virtualization of this whole industry is happening today. So the biggest tailwind for us is the future in terms of 90% of digital transformation that's happening in this business, and where Amagi can be the leader in this space. So if you look at it from a longer term standpoint, I think we're directionally growing quite well. We've seen our results for the last 6 months. We can hope to continue to project going forward as well in terms of managing both growth and profitability in an equal measure. And that's been part of the company's journey thus far. And we've seen the operating leverage playing out as well as we move forward. So the hope is that we continue in the same trajectory that we've kind of embarked ourselves on today. And this is what you're going to see as a company as we move forward.
Okay. Mr. Vijay, with regards to your objects of issue, it does mention that you might be looking for inorganic opportunities. Just want to understand as to what segment will you be exploring going forward from these IPO proceeds? Is it going to be in the streaming space? Is it going to be in the advertisement space? What are the options on the table?
Yeah, thanks again for having us. I think we look at our M&A strategy more not as much from a segment view as from a first principles view on the value chain. So we are in the glass-to-glass technology, the first glass being TV screen, a camera screen, and the last glass being TV screen. There's multiple steps there. And to Bhaskar's point earlier, only 10% is moved to the cloud. So a lot of the growth is ahead of us. So each of those swim lanes and steps between the first glass to the last glass, there are multiple opportunities that we'll pursue. That might be segment agnostic. So that's one lens that we look at. The second lens that we look at is obviously with AI being a big sort of vector secularly, globally. It's another area where we are kind of opportunistically shopping for attractive assets. And lastly, I think from a first principles perspective, we look at assets that are both strategic fit to the company and financially sort of profitable and generate good cash flow and have the same sort of financial profile as us. So those are sort of three broad strokes on how we think about M&A. It's not as much segment focus, but more at a higher amplitude.
Okay, understood. Mr. Bhaskar, you have long-standing relationships with a lot of global clients. Just want to understand your revenue split right now between, global clients as well as domestic clients. And going forward, how will this evolve and how does that overall impact your P&L?
So largely, if you look at it, right, Amagi is a global opportunity. So it's a software that every TV network, every content creator and producer in the world needs it. So we see this as a global opportunity. We continue to kind of build on top of it. Historically and otherwise, if you look at it from a market standpoint, US has been the largest market, not only for Amagi. If you look at the media business in general, US becomes the largest market across the globe, followed by Europe and then Asia. We are continuing to see the same progression in our own business, where a large part of our business today is Europe and US together, really about 90% plus of our business today. We will continue to see that progression as we start expanding globally as well. If you look at it, we did expand in Brazil, we expanded in France and Germany, Korea, Japan. So this is a global play. We would see India starting to become really important in the next 3 years as we start seeing that digital transformation starting in the country as well. So for us, it's global. It will continue to be global. Absolutely, given the maturity of the European markets and the US markets, we would see that as something that will continue to be a larger part when compared to Asia, at least in the next 3 years. Beyond which, obviously, we'll move to a much more secular growth phase that we're going to continue to see everywhere else.
Understood. Okay, Mr. Vijay, overall, if you take a look at the last 3 years' performance, your revenue has nearly doubled. Do you think that run rate of growth is going to continue going forward? Is it going to improve? What is the CAGR growth that you're expecting, let's say, 2 years down the line?
Yeah, no, I talk about how the trajectory of the last couple of years, like Bhaskar alluded to earlier. We've always focused on delivering profitable growth. And our aspiration would be to kind of just replicate the trajectory that we've seen in the last couple of years. I obviously can't get into specifics on guidance, but our core focus, as Bhaskar said earlier, would be to continue to deliver profitable growth.
Well, the Nifty has fallen below 25,000 level, which is one of the key support levels. Psychologically, at least, is something that we have seen getting broken. 24,950 is the current level, which is the lowest that we have seen since October 2025. And with today's fall, Nifty is now trading below its 50, 100 and the 200 DMA. All the key moving averages have been broken. 280 points is the fall that we are seeing today. In the last 12 trading sessions, Nifty has been falling for 10 trading sessions, and from the peak, we have seen a fall of nearly 1400 points coming in. And this is a year-to-date fall that I'm talking about. Now, if you look at the top draggers in today's trade, it's ICICI Bank, HDFC Bank and Reliance Industries. All these three counters are leading to more than 100 points of fall when it comes to the benchmark index. ICICI is contributing nearly 51 points for this fall. The top dragger for the benchmark. And when it comes to the FNO stocks, it's Kalyan Jewellers, UPL, Coforge, which are down anywhere between 6 to 10%. In fact, Kalyan Jewellers has hit a lower circuit of 10% in trade right now.
I think even in terms of where the broader markets are concerned, it's a red, across that. But the reasons as to why probably the markets are falling. Firstly, the entire global sentiment with regards to US-India trade deal is still, on the edge, and we still don't know as to what the verdict is going to be. Probably one of the reasons as to why the Nifty has fallen so much. And it's not just a small fall. 300 points today as well. Yesterday we saw a drop in terms of 400 points. So 700 points cumulatively till now is what we've seen in terms of where the Nifty is falling right now.
Nilesh, 25,100 was supposed to be one of the strong support levels, given the fact that it was coinciding with the 200 DMA. But right now we are below 25,000 level as well. Any further support levels that you're seeing for the benchmark at least?
Well, absolutely. So 200 DMA has been taken off decisively in today's trading session. Even if you see on the daily time frame chart, a rising trend line, which was exactly coming at 25,000 level, that has also been breached. On derivative front, we have started witnessing unwinding of the position because 25,000 was holding the maximum OI concentration. So we have started witnessing unwinding of the position that clearly suggests that we may see a follow-up on the lower side towards 24,750 to 24,700. So the next major support I can see on the chart is somewhere around 25,600. That was the low that we saw in the month of October 2025. So that's the next major support to watch out for. The structure looks weak, and we may see a bit of a pullback, but that pullback is unlikely to be as sustainable.
Sensex has also fallen over 1,000 odd points, and 11th day in a row where we saw FI selling, plus there is global risk off sentiment at its play. So I think all of these factors combined together. Rupee also opened at its low today. European markets also second day in a row where it opened in negative. Asian markets also opened in the negative. So all of these factors playing its part in terms of where the downtick in the markets is concerned. But viewers, it's time to slip into a very, very short break. We'll be right back answering all your queries on the other side of the show. Do stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories.
Well, Nifty continues to remain below the 25,000 level. 25,990 is what we are looking at, and from the recent peak that we had seen, the markets have fallen close to 1,400 points, and post today's fall, benchmark is trading below its 50, 100 and 200 DMA, which are all the key moving averages that we have seen. So what would be the next support level is something that we need to ask our guest today on the show. But before that, let's go across to Sharad and understand what's been the setup in the FNO segment.
It has been, Somit, a very weak setup, and the market is surprising us almost each 30 minutes. We can say first it goes below the 200 DMA mark and then the 25,000 mark. The FPI liquidations, that's continuing for the 11th straight day. We saw buying happening, almost $3 billion of liquidations we have seen this year itself. And also, if you look at the rupee, that's opened at record low levels, currently at 91.3. There is a big sensitivity happening with the FPIs and the rupee, and some major issues are definitely there in the bond markets as well. A weak breadth in the markets. Yesterday also advanced decline ratios 1:10, and right now also it's largely 3:10 in the favors of bears. So concern is there in the market. There seems to be a kind of a panic coming in, and margin trading facility positions, that's also getting impacted. That's what I'm hearing from the brokers as well. And lastly, the fifth point is that uncertainty in the global bond market, especially from Japan. That is where the treasury movements is happening, and concerns are definitely coming when it comes to Greenland and Japan as well. But I just like to point out, the Nifty constituents, if you could just show, see a sea of red coming in most of the constituents. And Somit, in the mid caps and small caps, there's a lot of pain happening.
Right, but again, if you could just take us through the FNO setup, which are the stocks where we're seeing most of a long unwinding happening, and which are the stocks that remain in focus?
Yes, it's an absolute carnage in the FNO market as well, and the signs of stress happening across the indices as well as the stocks. And it's a brutal punishment happening. There is nothing happening here in terms of the positive numbers. Eternal HUL trying to hold up, defensives minor, but throughout the space. ICICI Bank also tanking, that's around 2.5% down. Trent, we are seeing a kind of an up move, that's actually down move, it's down 3%. And the sectoral space also, we see there is a down move happening. But contracts also, largely we are seeing a lot of short positioning contracts developing, but the key levels to look out for, that's keeping on going down. Same story goes for BankX also, but it's a stock specific moves also. I would like to point out in the FNO space, I doubt any stocks would be there in the long build-up, but two names I had given, if you could just see these two stocks, are not very convincing. Just yes, Adani Energy Solutions and Hindustan Zinc are making it to the list. And looking at the short covering, they include SAIL and RBL Bank. To be honest, the entire sentiment of the market has turned negative. So it's not very convincing. Long unwinding, so it's there. Havels and LTI Mindtree, the selling continues. And let's look at the short build-up. Yes, Kalyan Jewellers, that's down 10%. SRF, it's down 5%. So definitely the street is seeing a big beating in the FNO space as well. Somit.
Well, thank you, Sharad, for that FNO setup. Let's also get in Dipen Mehta, founder director of Alexa Equities. Sir, market has broken the 25,000 level from the peak, recent peak that we had seen. We are down nearly 1,400 points right now. In the last 12 trading sessions, we have been down for 10 of them. What is causing this panic in the market? What is leading to this fall?
Good morning, and thank you for having me on your show. I think it's all the geopolitical events, especially the statements coming through from President Trump, that has really shaken up all global markets and brought in a fresh wave of uncertainty, and what we are seeing is a risk of trade. That is part one. Secondly, I think the earnings season, especially the large cap stocks, Reliance, banks, select IT companies, the results have been a bit disappointing, and there was an expectation that earnings would improve, but that has not happened. So that also is causing some amount of consternation, and of course the technicals and the liquidity position are certainly looking very, very weak. So it's a culmination of all these factors, but I would like to state that gradually and very, very, I would say, secular manner, the earnings are improving for the growth companies, for the good quality businesses, and valuations are being compressed, they are narrowing, and at some point of time, I think, or rather we have reached a point where good quality companies are available at reasonable valuations, and that really, I think, is something quite positive from a long-term investor's perspective.
Deepan, hi. Thank you so much for taking out the time. Mahima this side. Just want to understand, we've seen a free fall yesterday also, today also we're witnessing that. How should an investor position himself or herself right now in this kind of markets? Should this be another buy on the dip strategy, considering that you said, valuations are improving, earnings growth is also improving? Should that be the strategy, or what should be on the cards?
All I can say is what we are following, and we are more or less fully invested. We may make tactical changes, get out of businesses where
Okay, we seem to have some technical issue. All right, we seem to have some technical issue with regards to Deepan's phone line, but we'll bring you more analysis as to why the markets are falling right, on NDTV Profit. But time to submit a very, very short break. Right back on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Welcome back. You're watching Ask Profit, the show that gets all your stock-related queries answered. But just before we took the break, we were discussing as to how the market is on a free fall, and I think this is the right time for viewers, you to ask the right questions to us. Do send in your queries. You have your numbers flashing on the screen. You can either call us or WhatsApp us and send in all your queries with related to where stocks are concerned. On this side of the show, we're also joined by Vinay Rajani, who's a senior technical and derivative analyst at HDFC Securities, joining us now. Vinay, the first question is directed towards you, which is from Mr. N. Narayanan, who's writing us from Andhra Pradesh, and he wants to know if currently it is the right time to buy Tata Steel, whether these levels are the right levels to make an entry. What would you recommend?
So our view on the metal sector has been bullish, and still we feel that even if markets are falling like this metal index is showing some sort of resilience, and global developments are indicating that this metal sector should continue to do well. So we have been bullish on Hindustan Copper also previously, some aluminium companies also. Now steel companies also showed some strength couple of sessions back, but because of the market weakness, they have been showing some weakness. But overall, if we look at the primary trend, we feel that metal sector is here to stay. But dips should be bought into. If you are taking a positional view, definitely the stock like Tata Steel, which actually broke out in the last week, can resume its uptrend after some correction. So dips should be bought into Tata Steel. Overall view is bullish on the Tata Steel. Short-term trend is definitely down with the market. But if you are a positional trader, then dip should be accumulated. And for 2 to 3 months, our view on the Tata Steel is bullish.
Next query is coming in from Ayush from Purnia, and he has around 501 shares of IREDA, that is IREDA, bought at a price of 152. He wants to know whether should he continue to hold this counter or accumulate more shares. Rajesh, your view?
At these levels, I think one can accumulate. It's one of the largest company financing renewable power, and that segment is doing very well. These valuations have become attractive after the kind of correction which we have witnessed, can give some good dividend. Although it's still on a higher side from when you compare with PFC or REC, but still at least 128, 130 odd levels. I think it's a good buy.
Okay, all right. So that's you coming in on IREDA. The next caller that we have is Sudha. She's calling us from Tamil Nadu. Sudha, hi. A very good morning to you. How can we help you today?
Good morning, ma'am. I'm holding 30 shares of LTTS at the price of 4,280 for the past 2 years. What should I do? The price is going down. What should I do?
Okay,
and the follow-up question is Trent at the price of 6,310.
Okay, so that we generally take just one query per viewer, so you'll have to choose between LTTS and Trent.
Okay, sir. Okay, ma'am.
Okay, so I'll take LTTS for you then. I'll take this up with Rajesh then. Rajesh, what's the view like on LTTS? She's been holding this counter for the last 2 odd years with patience. Should she continue to hold?
Yes, one can continue to hold. The strong company, I would say, decent numbers given out this quarter. It's just because of the market conditions that the stock has been corrected. So one can continue for a target of 4,200 odd rupees.
The next query is coming in from Chandu, and it's on Blackbuck, that is Zinka Logistics. He has purchased few shares at a price of 685 and the current market price is 565. What should he do with these shares is what he wants to know. Rajesh, any view on Zinka Logistics?
Try to exit in any upside. Evaluations are very high, I would say, and company is not doing that great as it was shown in the IPO market. So try to exit on upticks.
All right, okay, so that's you coming in on Zinka Logistics. We've got our next caller. Karthik is calling us from Bengaluru. Karthik, hi. A very good morning to you. I believe you have a question on Polycab.
Yes, Mahima. Good morning. So I wanted to know, is it the right time to accumulate Polycab?
Okay, and this is from a long-term perspective. All right. Rajesh, I'll stick with you for this one as well. Polycab, what's the view like? Whether the viewer can continue to hold it from a long-term perspective?
See, long-term looks very good because of the fact that not only wires, but FMEG also doing well. Only in the short term, there might be some pressure because of copper prices going very high that would affect margins. But for longer term, it's a good hold.
Right. The next query is coming in from Umesh Gupta from Vadodara, and it's on Apar Industries. He has 75 shares of Apar Industries, bought at an average price of 8,716. He's sitting on a loss. He wants to know what's the view for the next 6 months. Vinay, any view on Apar Industries?
So APA industry on the monthly chart has broken down below the crucial support of 7,700 and trading and sustaining below that. So along with the mid cap and broader market weakness, this is also showing some weakness this month. Only in the month of January, month till date, the stock is down by 18%. So still looks weak. As of now, we can say that on weekly time frame, monthly time frame, it is looking weak and it can extend the fall from here. So it is one of the stock which belongs to the broader market, and broader markets are not showing strength. Only safe haven can we can say in the large cap. So upper industry can be shifted for if you have a 3 to 4 month view, then better to shift from any from this particular stock to any large cap companies in this particular segment. That will be safe, better risk reward ratio for the strategy. So I would suggest that intraday bounces and some sort of pullbacks can be utilized to shift this particular stock to any large cap stocks in the same segment.
Okay, all right. So that's the view coming in on APAR Industries. We've got our next caller. Anil is calling us from Pune. Anil, hi, a very good morning to you. I believe your question on Eternal.
Yeah, good morning. I want a review on Eternal. I'm holding 2,500 shares at 300 price for, let's say, short term, less than 1 year. Should I hold or book the loss?
Okay, got your question. Vinay is already sitting on a loss of 63,000 odd rupees. What should he do? Continue to hold, considering there's also going to be earnings announcements today?
This is about Eternal, right?
Yes.
Yeah, so relative strength is there. Stock is not looking that weak on the charts. Positional trend is still intact. So on monthly time frame, it has got a chance to bounce back again. So it is one of the large cap companies which is looking better. Large cap companies are looking better to us. So better wait for the result announcements, and then the trend will be decided. Otherwise, what most of the time we have seen that the trend changes after the result announcement in most of the companies. So better to wait for a result announcement. But technically, I see some sort of resilience and less risky stock, we can say, in this kind of market.
Right. The next query is coming in from Afreen from Hyderabad, and it's for you, Rajesh. He wants to know the long-term view on Precol and TD Power Systems at the current prices.
Both are a good hold. One can even buy Precol at this levels. Auto Ink is doing very well. And this kind of correction has given a good opportunity to accumulate for long term.
Okay. All right. The next question that we have is from Krishnan, who is writing us from Chennai. He's got around 100 shares of BSE bought at the levels of 2,700. Should he hold on to it, and what's the target if he should? Vinay, what are your views on the charts, and what are the targets that you see?
Yeah, so technically this BSE stock has got a strong support around 2590. That should be tracked closely because it is nothing but it's 100 days exponential moving average, and previously it acted as a strong support. So this time also it is hovering around that level, and we should give that level as a respect to it. So 2590 should be the trading stop loss in existing long positions. If that is broken, then we can expect some more weakness in the counter. So that should be the strategy for the short term. 2590 should be utilized to keep it as a stop loss.
The next query is coming in from Arnab from Thailand. He's holding 100 shares of Motilal Oswal bought at an average price of 947. At the current price level, he wants to know whether should he buy more or wait or book losses and exit. He can hold the counter for the next 2 years. Rajesh, any view on Motilal Oswal?
See, the company has been doing well, although the valuations are a little bit on the higher side. But the correction from 900 odd rupees to 750, 780 odd rupees gives an opportunity to buy for a target of 850 in the medium term. So depending on one's risk profile, one can add at these levels for 850 target.
All right, so that's coming in on Motilal Oswal Financial Services. But Vinay and Rajesh, it's time for our rapid fire round. You both know the drill. Try to keep your answers as short as possible. The first question that we have is from Prashant. He's holding Trent since the level of 4,300. Should he continue to should he continue to hold? Vinay, your view on the charts?
Yeah, so extremely oversold on the chart. So do not short also and do not buy also, because don't anticipate the bottom. Right. Let it be with the trend. So it is in a downtrend.
Right. Revati from Pune has around 200 shares of BHEL bought at a price of 249. Should she continue to hold? What's the trend likely, winner here?
Which one? Please come here.
BHEL. Bharat.
Yeah, so trend is looking weak, and the support I can see is around 245.
Okay, the next one is on Kalyan Jewellers. Sanjay Ramesh wants to know if this is the right time to make an entry. Rajesh, it's fallen over 7%. Do you think this is the right time to make an entry?
Avoid, choose Titan instead.
Gopika from Chennai is holding 100 shares of IFCI, bought at a price of 69. Should she continue to hold, Rajesh?
Continue to hold.
All right, so as long as the next one, Ganesh is asking this question whether he can continue to hold at the levels of 18 rupees that he had bought. What should be the view on the charts, Vinay?
45 should be the stop loss.
Siva from Hyderabad is holding 1000 shares of CG Power, bought at a price of 650, currently sitting on a huge loss. Rajesh, should he continue to hold?
Add.
Okay, the next one is on HAL. Siva from Amravati is holding 1000 odd shares at the levels of 5050. From 6 months perspective, can he continue to hold, Vinay?
Yes, can continue to hold.
Pawan from Hyderabad is holding few shares of REC, bought at a price of 500. He wants to know whether should he continue to hold this, Rajesh?
Continue to hold.
Coforge is the next one. Hema from Chennai is holding 15 shares at the levels of 1726. Hold or exit? Vinay, what's the view?
Better to switch it to Infosys.
Gul has few shares of Bharti Airtel, bought at a price of 1688. Can hold for the next 1 year. Rajesh, should she hold this counter?
Hold.
Okay, Ujjivan Small Finance Bank is the next one. Rekha is holding 1160 odd shares at the levels of 28 rupees. Can she increase her holdings? Rajesh, your view?
Exit.
The next query is from Sanathan Krishnan from Chennai. He has 100 shares of Bajaj Finance, bought at a price of 950. Should he continue to hold, Vinay?
Yeah, hold.
Okay, Shriram Finance bought at the levels of 993. 100 shares is what Meghna has. Hold or sell? Rajesh, your view?
Hold.
Ramakrishna wants to know whether should he buy Yes Bank at current price, Vinay?
Not because of the market conditions, but the dips can be considered, not at this price.
Okay, Elecon Engineering is the next one. Shubham from Bengaluru wants to know if this is a good time to make an entry from a long-term perspective. Rajesh, your view?
One can buy.
Sivakumar has a few shares of PFC, bought at a price of 397. Should he hold this, Vinay?
Yes, can be held.
Okay, Shriram Pistons is the next one. V Murli from Bengaluru is bought at the levels of 2740. From a long-term perspective, can you continue to hold? Rajesh, your view?
Continue to hold.
All right, so that's the view coming in with regards to where Shriram Pistons stands, and that brings us to the end of this round of Rapid Fire on Ask Profit. But before we end the show, there has been some recovery in terms of where the market stand. If we can quickly pull up, minor recovery is what we're seeing. We're above the 25,000 levels right now, just 50 points above the 25,000 levels, but still down around 180 points since the start of the day. The Nifty 50 down by about 0.7 odd % is what we're seeing right now. We'll have to wait and watch out for as to how the day ends and how market finds its support and see whether we end above the 25,000 levels or not. But with that, we're completely out of time on this edition of Ask Profit. Rajesh and Vinay, thank you so much for taking out the time and helping us answer those queries. We've answered 60 queries so far for the day.
Not bad.
Not bad at all. And for viewers, you can also tune into the afternoon edition to ask your queries. Completely out of time. KYC on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है। स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम। क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and in our show we'll be getting a company where we'll give you all the details about their numbers and to the management as well. But today's company in KYC, I'm going to give you some hints before we come to the company. The first hint is it's a Kolkata-based specialty chemical company. Yes, from Eastern India. This company is there, which would be in focus. Largely, it has been untracked from analysts, but that's our duty at KYC to get you more details on that. Interestingly, strong Q3 numbers are delivered, and I'm talking about the volume numbers here. Also, I'll give you one more hint. It has been a multi-bagger for the investor. The stock is up more than 852% in the last 5 years, and that is something which is very much important going ahead. But what the company is all about, I'll like to talk about it. It's of course a specialty chemical company and it's from Kolkata based. That's enough hints to it. The company in focus is Himadri Specialty Chemical. That's what I'm talking about. This is the company which we'll be getting in. But the concern remains is, why are we getting this company? There are important reasons for it to get this company. Largely it has been untracked, so it's my duty to get these companies in KYC to get in more details and ask the management as well. The first reason why we are calling the company is what are the factors which led to a strong Q3? Is the demand, is the pricing, or some new announcements coming in? The second question is the pricing and demand trends for key products. This is a very important question because the chemical industry is a very volatile industry. Sometimes you look sequentially numbers, sometimes you look year-on-year basis numbers. The third reason is, of course, the value-added product. That's where most of the chemical companies are moving towards, which also includes Himadri Specialty Chemical. Because of that, the margins outlook, that also increases going ahead. Some of the products are having backward integration as well, and that augurs well. That's what the industry analysts say. The overall guidance for the next 2 to 3 years, the company is going through inflection. So what will be the important points to cover, what the company has already stated to the exchanges? We will get you all of them at our KYC show, and its foray into the new industry verticals. You talk about lithium ion, you talk about electrical vehicles. So where does the company stand? And especially R&D factor is very much important when you judge company which is going through an inflection point like Himadri Specialty Chemical. And also the expectations from the budget 2026. That's the burning question which we ask all the guests as we are going towards the budget in the coming days. So these are the important questions which we will ask the management also, and in the management would be Anurag Chaudhary. He's the CMD at Himadri Specialty, where we'll ask Anurag all these key details and the outlook going ahead as well. But it's a specialty chemical industry, and I would like to talk about the company. It is a bit technical, so I'll try to make it simple for you. And what does the company actually do, and what's the outlook going ahead before we go into the ratings? The company manufactures carbon materials and chemicals. Just to put that in a simplified manner, there's a coal pitch manufacturer also in India. So there are different varieties of businesses, and company has been in an acquisition spree as well. They are manufacturing advanced carbon material in India. This is a domestic space, but they do have some international clients as well, especially in the tire industry. And also they are focusing on building comprehensive product portfolio of specialty tires in the coming years. Some acquisitions were also there, which augurs well for the company. To service the off-highway, that's OHT, which we call it, the commercial vehicles, agri-industrial and the EV segments. That is where the specialty tires foray comes in. And in this segment, the product margin is also on the higher side. They will be leveraging their expertise in the carbon black products to develop these tires. They are an old player already in the industry when it comes to the carbon black. Also, looking at how the financials have pointed out, I have taken a long-term view, the 9-month view, the 9-month FY26 view. The EBITDA per ton, that's a 15% year-on-year increase coming ahead, and the level is at 16,934 rupees. PAT, there's a significant growth, 41%. And it's around 564 odd crore rupees. So these are the 9-month numbers which I'm talking about. But moving on, apart from this, there are key clients also. There are Indian names. Of course, I've talked about the tire names. Apollo Tires comes in, Pidilite comes in, and also there are some international clients also which we would be focusing on. Apart from this, the company's recent news flow is very much important. 2 of them are there. The first is the first ever liquid coal pitching shipment that has gone to Middle East as well. This happened in the month of December. That's what the company stated. And also the trial production has started for the specialty carbon black capacity as well. Management seems bullish, and we'll ask Anurag on these important developments going ahead. FY28 growth map is something which the company has given, and remember, these are full year operations. The first is for specialty carbon black. Also moving ahead, other sector which will be focused will be the builder tires. That is where the production scale-up is happening. It seems like a turnaround story is being played out. This is for OHT, this is your off-highway tires, and also the commercial vehicle and the PCR segment as well. The anthraquinone and carbazole, these are kind of a specialty chemicals. That's where the full year operations will also kick in. And apart from this, let's pull out the commercial plant for LFP, that is your lithium ion, that cathode active material, that plant will also be operational going ahead. Naphthalene Bland's Duroflex TM, that's the name which we are talking about. That itself will also see an important inflection point. But apart from this, let's move on to the show's format. When we get a company, I've explained to you what Himadri does. and why we have called Himadri. But what are the key ratings for Himadri? There are 8 of them where we judge a company in KYC. This includes income statement, balance sheet, cash flow, return ratio. These are all the numbers I'm talking about, but apart from numbers, there's other story as well. That's the story of the shareholding, the street cred, how much the stock has moved, be it 1 month, 6 month, or even if you could say a 5-year basis. How do the valuations look? I've taken the past, present, and the future to give you an entire picture of how valuations come in, and outlook. That's also very much important, especially with a company like this on forward-looking sectors. The first one is definitely going to be the income statement, and of course we have discussed the 9-month PAT numbers also with you. But overall, let's look at the long-term basis, how things have moved. The revenue has done really well. It's 18% CAGR coming on a 3-year basis. But even if you look at the EBITDA numbers, that has also been strong. That's around 73%. But the most important thing is the PAT. That is where the movement has happened. It's up 105%. So on a long-term basis, for a long-term investor, this is a very strong numbers which I'm seeing. And net, the Q3 numbers also, if you see, there has been decent going ahead, but the net profit, that's up 36% on a year-on-year basis. So net, it's a strong thumbs up when it comes to the income statement. The second one, of course, we'll talk about it, but the margin trajectory, that has something which the management has walked the talk, and each time it is expanding. It's at 21% currently, and interestingly, we might see this up move going ahead as the company is focusing much more on the value added segment. So the first criteria, we have already got the numbers. Let's go on to the second criteria. That happens to the balance sheet. Balance sheet net, remember there are two important aspects to it. Recently, the promoter stake also went up. There was a fund infusion coming in. That's where the strengthening also happens to the company. But the borrowings, that's something which has gone up. Company is going for expansion. So net, the debt equity ratio is not a big concern because the company is at that cycle of the business, you could say, and the cash balance is also very decent, so 652 odd crore rupees. So it's a strong balance sheet, and of course the borrowing levels is elevated, and that is because of the entire setup. But net, it's a neutral rating when it comes to the balance sheet. So we have spoken about two important numbers, but the third important number is also very much important, and that is the cash flow segment. How does the company actually work? And that is where some divergence is coming in my analysis. The net cash flows, of course, it's down 60 crores in FY25. We will be looking at the numbers in the 9-month FY26 also. That's on the positive side, but the cash flow to PAT conversion, that is really strong for FY25, and it has maintained itself over the last 2 to 3 years, and that is why I will be giving cash flows a neutral rating. Apart from cash flows, let's just talk about the return ratios. ROCs, when you look at it, generally anything above 15 to 20% for a chemical company is good. It's healthy. Let's see how much that helped, and the way the margins went up. Now the ROC, the return on capital employed, that's also going up. There was some inflection point in these 3 years, but then it has sustained and maintained. That's the thing, 28% here, 34% here. The ROC numbers are very strong over here. So I would be giving this a strong thumbs up when it comes to the return ratios. We have spoken a lot about the numbers, but shareholding is very much important as well. There was a recent fundraise, there was a promoter participation in that, and the conversion was there of equity from the warrants, and that is why we see the promoter stake going up from 50%. It has gone up to 52%, and it's sustaining here. You must be wondering, what are the institutions doing? And interestingly, I'd just like to point out the FIs, a minor stake increase is there from 5%, it has gone up to 6%. On the other side, it might look like a reverse trade where the DIs have kind of increased the stake till March, but then again reduced it till 3%. And interestingly, the retail participation is very high in this counter, and that's what we have seen. But now it seems like it is slowly coming down as well. That's where the institution gets active. So net, it is healthy, but I'll still give this a neutral rating when it comes to the shareholding pattern. Street cred, this is the next rating I would like to talk about. And net, if you look at the share performances, how it has been for last 1 month, it's up 7% odd. But if you're a short-term investor, be it 6 months or 1 year, that is where the downtick is coming in 6 months year-to-date basis. But if you're a long-term investor, congratulations, it's been a multi-bagger. 5-year returns has been 832% when it comes to Himadri Specialty Chemicals. So net, it is still a neutral rating when it comes to the street cred. But let's look at the 7th parameter. That's the valuations. Is the stock cheap? Yes, the stock is cheap. Why? I'll give you that example. Current P for the Himadri Specialty stands at 35 times the 12-month forward P numbers. But in the past, I saw how much changes which have happened. The peak numbers I'm talking about, the 5-year average high P, the high P, the peak P, that was 70 times. From there, it has corrected 50% almost, and almost 39 times is the 5-year average. So it's still below the average, 50% discount coming in from its peak, and that is where valuations turn very favorable for this counter. And over the last 1 year or so, if you see the charts, the stock hasn't done much. Now the numbers are coming and inflection point is also there. So it's a strong thumbs up when it comes to the valuations. But there's a last but not the least. The last is the outlook. The outlook, what does the company talk about? The company itself is moving towards the high value added products. That is where we are seeing the stock. The specialty carbon black, that's where the company wants to, come up with a full year operations, and the commercial plant, that cathode active material, that is where the completion will happen, and Street will be looking at when the incremental benefits come in. And of course the naphthalene balls, the Durofresh segment, that is also a complete closure we can expect. Birla Tyres, that's the turnaround story which I was talking about. And also there are new age areas where the company is focusing on, be it electric vehicles, lithium ions. That is where also the overall outlook will be coming. And yes, green chemistry, that's what I'm talking about. Management has been bullish. We checked the annual reports, we checked the Q2 numbers, Q3 numbers, and also the investor presentation, and green chemistry has been talked about a lot. But let's give you the final ratings, the KYC ratings for Himadri Specialty Chemical. What are those ratings? Let's pick it up. Of course, the income statement was strong. The 9-month PAT number did exceed the FY 25 PAT. The balance sheet and cash flow is largely neutral, but return ratios, they have been strong, more north towards the 30% odd numbers. Shareholding street cred largely neutral, but valuations are very attractive compared to its peak numbers. It's down 50%. And outlook on the future chemicals, the value added segment, that is where I have given a strong thumbs up. So in total, the KYC rating for Himadri Specialty Chemicals comes in at 6 out of 8. Is generally on the higher side of the average KYC ratings which we give, especially on the future and the valuations front. That is where we feel there might be some alpha in it. But we caught up with the management. Anurag Chaudhary, the CMD at Himadri Specialty Chemical, to talk about the details on their growth outlook. Do listen into that. Anurag ji, welcome you to the show. Could you give us the key details about how the performance was in Q3? What led to this strong performance?
So, good afternoon, Sirji, and it's a pleasure to be on your show, KYC. If you look at the way Himadri has grown over the years, our business model has really matured. And today, the profitability which the company is earning is not a one-time effect. It's the result of years of strategic moves and building blocks that we have built over the years. So we have engaged with our customers in specialty products, worked on with them, our R&D team has worked with them, and we supply our customers the product which is not ready for today and meets their future requirements also. So this gives us a sustainable profit margin. In addition to that, we have done a lot of work in terms of operational efficiency, improvement of yield, waste heat recovery system. So all these factors put together, high value-added products have really been the game changer for us.
Just to put that in perspective, the company's focus is moving towards the high value products. But I did check, there are some vision statements. I think for FY26, you have already got all of your blue ticks done already. It's already tick mark is definitely there. But for FY27, FY28, how does the company change? Because there's a lot of change impact written in your investor presentation. So what are the key strategic guidance and outlook going ahead for FY27 and 28? And you can divide it amongst different businesses.
See, I would like to summarize it in a different way. Like if you ask me for 2030 roadmap for Himadri. So 2030, from here onward to 2030, there are going to be a big transformational journey which we are embarking on. So if you look at the existing product portfolio, we have doubled our capacity for specialty carbon black. This quarter, we have increased our capacity from 60,000 metric ton to 130,000 metric ton for specialty carbon black. We have announced a capex of 120 crores for anthraquinone and carbazole, very high value-added products. Then we have working on setting up first lithium iron phosphate plant outside China in the world with a capacity of 40,000 metric ton in the first phase with a capex of 1125 crores. In addition to that, we are working on other battery chemicals, components like anode material. In anode materials also, we are working on synthetic anode, natural anode, and silicon carbon. Only company which is positioned to cater to all three types of anodes, plus hybrid anode. This is a unique positioning which Himadri is going to have. These products are at advanced stage of research and development, and in next 4 years time, you will see a lot of these products coming into commercial production. So,
right. Anurag ji, you spoke about the R&D part also, and generally R&D takes a lot of time also, be it the chemical industry or the medical industry. But your new products which are keeping on coming, any timelines if you could give us to our audience?
See, R&D is a long drawn effort. If you look back at Himadri, we have been talking about lithium ion batteries for last 14 odd years. So that time there were several chemistries were up in line, but since then we had a vision that this is the chemistry which is going to play a critical role in future. And today it's a reality. If you see today, everyone is talking about lithium ion batteries. And everyone is doing something or other related to this. But Himadri has the first mover advantage. We are working on this chemistry for many years. We have spent huge money in terms of research and development. For research and development, one thing, I was in Mumbai attending ET CEO Roundtable Conference the last month. The who's who of industry was there. So the one thing came out very clearly that globally companies spent 2% to 3% of their top line in research and development. But in India, companies are spending only 0.2%. So that time I felt very pleased to say that Himadri is spending 2% plus in terms of research and development.
And Anurag ji, yeah, definitely. And Anurag ji, I presume you are in China right now, and largely any chemical player who is in China must be, of course, looking after some important businesses as well. So what is the ground channel check suggesting, for the company here? New order wins we can expect?
See, I keep on traveling globally. I have my R&D team right from Australia to Japan to China to South Korea to Europe to America. So we have a 148 members team with 24 PhDs in different streams of chemistry. So I keep traveling all over the world.
Yeah, that's pretty interesting on that. But Anurag ji, budget expectations. You are an industry veteran in the chemical space, so specialty chemical also. What are your views or request coming in for the budget 2026?
See, the government has been very proactive. The encouragement, the motivation this government is giving is unparalleled. See, in most of the sectors, they are coming up with PLI scheme. Recently, they have come up with a R&D scheme in which they are encouraging investment by the corporates in developing new product, process, and technology. And Himadri is going to be an integral part of all these things. So I think proactive steps the government is taking is in the right direction to convert India into manufacturing hub. We recently, even China, there was a imposition of duty, but they have removed export tax on battery materials. So that is again a positive thing for other geographies. And I expect the government to continue with the policies and strengthen the hands of the industry to do more research and development and make India Atmanirbhar Bharat, the swapna of our Honorable Prime Minister, a reality.
Anurag ji, you spoke about lithium ion and also the carbon side of it. There's an expansion also taking place. Apart from this, electrical mobility, that is also a sector which, India, there's a growth coming in. Of course, the base is very low. So how do you positioning this and how the inquiry is looking like for this segment? I'm talking about your electric mobility.
See, sir, electric mobility as it is at an inflection point. If you go back, you see at a point when Nokia mobile was there and BlackBerry was there, we never ever imagined about today's generation of phones, smartphones. So, but when the revolution came, the growth was unprecedented. Same thing is going to happen with electric vehicles. Today, it has coming at an inflection point from where you will see potential.
All right. Feel there is a kind of technical error. We'll try to get back with the management. But of course, Anurag was speaking about the importantly how the growth is coming in for Himadri Specialty. The company is in its inflection point as well.
So from here, you will see exponential growth coming in electric vehicles. There are many reasons which are supporting it. The running cost for electric vehicles is 1/8 of our IC engine. There is 2,200 plus moving parts in IC engine, whereas there's 23 moving parts in electric vehicles. The maintenance cost is hardly there. So looking forward, you will see a big change happening in the mobility industry also. China is a reality now. In China, you see already more than 50% of the four-wheelers have been replaced by EV.
All right. Anurag ji, apart from this, of course, I would like to understand there's so much, futuristic, projects are there which is undertaken at Himadri. But any kind of fundraise, because I think there was a recent fundraise also. Going ahead, do you think another fundraise would be required or will it just come from internal accruals? Because your growth plans are very big for the next 2 to 3 years.
Recently, there was a conversion of warrant which was issued to our team members and the promoters. So we converted that warrants into equity. That was the only fundraise. And there is no plan for any fundraise from third party in future. In addition to whatever capex we have projected will be met through internal accruals. If you look at the balance sheet of Himadri, we are a debt-free company. Last year, we had a 381 crore plus cash positive in our balance sheet. Plus this year, we have 300 odd crores from our warrant conversion. And then we have, in 9 months already, we have 700 plus EBITDA. So looking forward next 3 years, we have a huge cash accrual. And already we have a capex plans, announced capex plan of around 2,300, 400 crores. Plus we will be also announcing few more capex plan of around 2,000 crores over the next 2 to 3 years.
Yes, Anurag ji, and what's the guidance going ahead for the company?
So 2024, FY 2024, we had a PAT of 411 crores. In FY 25, I gave a guidance that in next 3 years, that is by FY 27, we'll double the PAT to 800 plus crores. Good thing is that we have been able to do this in next 2 years instead of 3 years. Again, now in FY 26, I'm giving a guidance that FY 25, we had a PAT of 548 crores. So we will again double this PAT in 3 years time from 548 to 1100 crores by FY 28.
Anurag ji, the last.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Benchmarks crack under pressure today. Nifty struggles to stay above 25,000 level after slipping below for the first time since 6th of October. Sensex sheds more than 600 points amid rub-off from the global risk-off sentiment. All major sectors in the red today. SRF under pressure after delivering weak set of Q3 numbers. Persistent, on the other hand, saw inline performance, but Q3 profit dragged by one-time labor code impact. Stock down more than 4%. All eyes on Dr. Reddy's third quarter results. Continued pressure on US to drag performance for the company. Revenue profit downtake on the cards. Strong show likely for India business. The scenic Swiss town of Davos is heating up with talks on tariffs, political mileage and world order as global leaders and policy makers converge in the small city in Swiss Alps. NDTV Profit brings all the action from ground zero with live coverage and exclusive insights. All eyes on Trump's commentary from Davos. Hello and welcome. You have tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets. Lot of action over there and a clear sign of weakness. A large part of the weak global cues and many factors which are really giving uncertainty to the market, and therefore Nifty 50 finding it difficult to really hold on to the 25,000 levels. It did slip below 25,000 mark today and limping back slightly, but not looking like a comfortable run at the particular moment above that particular psychological level. But not just Nifty 50. Remember, the broader market, which is the mid cap as well as the small cap universe, they are the ones which are underperforming the key indices by a huge margin, closer to 2% downtake on mid cap and small cap index. Well, when we look at the sectoral play, Bank index is also slightly underperforming the key indices. IT is doing bad. Defense is the one which has dragged the most. In terms of some of the contributions, well, taking a look at the key factors that are really putting pressure on Nifty 50, the big boys like ICICI Bank, L&T, HDFC Bank, Axis Bank, Reliance Industries are the top draggers. In terms of percentage drag and not in terms of heavyweight drag, Trent is on my radar with more than 3% downtick and a huge amount of weakness coming in there. Eternal, TCS, HUL are some of the gainers with a slight tinge of green on the screen. But Sharad has all the details of the internals of this mayhem that we are seeing in the market. Sharad.
Well, thanks a lot for that, Nisha. Nifty is retesting the 25,000 levels. This is the first time it has actually fallen down below the mark. This is since October 6, 2025. Of course, initially we got to know that the Nifty fell below the 200 DMA and then the 25,000 mark, and that's on an intraday basis. But yes, a minor recovery is definitely happening in the trade, which Nisha actually pointed out as well. Might be slight, kind of a short covering, but market is still in an oversold position. Speaking about the RSI numbers, that's on the lower side, that's around 28, 29. But the main concern remains is the global risk-off sentiment. That's playing out for the third straight day. That's what we have seen globally. This is happening. And of course, the issues are happening across the segment. The rupee, that's near its record low levels. That's also one concern. It's around 91.5. It's fallen, or you could say weakened 50 paise in just one day. Imagine. There is no RBI intervention news flow also, and that's a concern for the street as well. FI shorts are unchanged at 11%. You could say the longs are at 11%, or largely we could say these numbers. But the FI is remaining seller for the 11th straight day, and that is something which you'll be watching out for. Weak breadth in the market continues, and India VIX, it's up near that 14. It's up 23% in the last 5 days. So, of course, a lot of reasons are there, but the global yield market, the bond markets are showing concern. Over to you, Nisha.
All right, Sharad, thanks so much for all those details. And Persistent has posted its numbers. It does beat the expectations, but there are very pressure points. Sandeep Kalra, CEO of Persistent Systems, joins in with us on NDTV Profit. Sandeep, always a pleasure to welcome you on NDTV Profit. My first question, in terms of your operational performance, you have seen an uptick. But when it came down to the net profit level, that's where the dip has happened. So between profit and profitability, what has really transpired and the factors at play?
So let me start by the high level commentary, and then that dwells into the answer that you are asking me to give. So if we look at the quarter gone by, we had a 4% quarter on quarter revenue growth, 17.3% year on year revenue growth. This translated into $422.5 million in dollar terms. In rupee terms, it translates into 5.5% quarter on quarter and 23.4% year on year. Now, when you are looking at the profitability this quarter, if you look at it and you look at the entire industry, it was impacted by the new labor codes that were recently announced in India. Now, this impacts our entire India employee base. And from that perspective, it had an impact of 2.3% on EBIT margin and 1.8% on the PAT margin. Now, if you look at your question, the PAT came in at adjusting for this at 11.6%. But if we add back the one-time impact of this new labor code, the PAT would have translated into 13.4%. And then obviously the question you are asking would not be there. So on an overall basis, if you look at operational PAT, excluding this one-time impact, it is at 13.4%, which is a healthy growth.
Right, Sandeep. So the entire sector has been really plagued by the one-time labor code impact. Any future impact, anything recurring, or was it one time? What will be the impact going forward?
Yeah, so the way to look at it is for the entire industry, and this is not just Persistent. There's a one-time impact, which is a catch-up for the past, based on whatever the clarifications have been provided by the new act. Now, going ahead, it's a part of the operational EBIT, operational PAT, and we do not expect any such impact going ahead, unless there's any new regulation that comes our way.
All right, so thanks for that clarification. But focusing on the regions and the performance that the company has shown, Sandeep, India and Europe have shown weakness. What are the factors really impacting the growth there? And going forward, how do you see it?
Yeah, so to put things in perspective, North America accounts for more than 80% of our revenues. Europe accounts for roughly about 8.5 to 9.5% of our revenues. India is in roughly in 10% range. The rest of the world is very small in the range of 1.5, 2%. Now, for the quarter gone by, on a year-on-year basis, the bigger picture is North America grew by 18.6%, Europe grew by 22%, India declined by 2.5%. Rest of the world grew by 37.9%. This is on year-on-year basis. And look, from our company perspective, and even if you were to look at Europe in the context of the overall industry, we are growing pretty much in the top quartile. If Europe grows at 22%, can it do better? Yes, it can, but we are satisfied and we'll try and do better than that. India obviously has multiple impacts. India, we also have to decide how much we want to do in India, because profitability in India, we have to choose the businesses that we go after, which are in line with the profit expectations we have. Second part of it is also impacted by the currency side of it. If you look at year on year, there's a significant currency depreciation, and that also adds to the numbers. Nothing to worry about. Healthy mix of numbers. If you look at what we just discussed, EBIT grew, PAT grew significantly, revenue grew significantly at the company level. So pretty comfortable with the mix.
Right. Since North America, Sandeep, is your largest market and of course 10% of India business, then what's your outlook for the current quarter going on in terms of the performance in both North America as well as India and the factors impacting it?
Yeah. So look, we don't give forward-looking guidance, so I'll not quantify the things. I'll give you a directional view to things. If you look at our current, markets, as I just said, North America grew by about 18.6% in the last quarter, year on year. We are expecting, unless there is significant policy changes brought in by the new administration, there should be a healthy growth in North America. Similar in Europe. Now, from a sectoral perspective, our banking financial services is growing at roughly about 30% year on year. We expect it to lead the growth for the near term. Healthcare life sciences had tepid growth for the last 2-3 quarters. It's coming back big time. And remember, healthcare for the last 2 years was the leading, vertical for us across the industry. And it had grown at one point in time upwards of 60% year on year. So from our near future, we see banking financial services leading, high tech following, followed by healthcare life sciences, secular growth, decent growth across all three sectors. And as far as India is concerned, India will be a play where we have to pick and choose the businesses we want to do. There are two kind of businesses we do. One is the domestic India business, where we are a significant player in the financial services, and we are behind a number of significant transformations happening in the financial sector in India. The other side of it is where we work with the GCCs and where we pick and choose the businesses we want to do, because obviously there the profit expectations are very different from a customer perspective and our perspective.
That's right. But Sandeep, right now with rupee depreciating so fast, also there are many global uncertainties that are plaguing the businesses across the board. So what are those important macro factors, not in your control, but which are going to be impacting your business in the near term, in this quarter and the next? Can you give us a few key drivers and negative as well as positive impact of that?
Yeah, so look, we don't give forward-looking guidance. If I was to, kind of delve quantitatively into what you're saying, it's pretty much going against the norm that we follow. But from a near-term perspective, I don't see in the next 3 months something can change very significantly that can kind of have a very big headwind or a tailwind for us. So we are on a trajectory. Our endeavor is, come good macro, bad macro, come policy changes, etc. We will try to work the best in our industry. And from the third pivot, which is the very positive pivot for us, which is the AI side of it, where we have been investing ahead of the curve, where our capabilities are very differentiated as compared to the industry, where we are winning deals based on the seeds that we had sown in the last several quarters. Several of those smaller things are turning into bigger deals for us. We are positive. And that's where, look, in any environment, there will be companies that will outperform, there will be companies that will go sideways. Our attempt at any point in time is to build the best capabilities, have the best, go to market, be closer to the customers, and deliver in any of these environments. So we remain positive about the performance.
All right, Sandeep Kalra, thank you so much for giving us insights about the company and the performance. All the best for this present quarter. And that particular counter is seeing pressure because of the one-time hit because of labor code provision that had to be made in this particular quarter. The stock down closer to 4%. But remember, Nifty 50 is seeing some support coming in at 25,000 levels and comfortably moving above that. So some buying seen at 25,000 levels, 25,100 being clocked in. Keep an eye out on the markets. We'll slip into a short breather and come back with more news and updates. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. You're watching Markets at 12 and Nifty 50 trying to really see some bit of recovery at this particular moment. Definitely some buying coming in at the lower levels. Jigar Mistry, who's the co-founder of Buoyant Capital, joins us now to give his perspective on the markets. Jigar, quite a crash today in the market. A huge amount of sell-off is seen because of various factors. What's your sense on the market movement today?
Hi, Nisha. So yes, I think it was sort of brewing up for some time. What had essentially transpired over a few sort of almost from 2020 until 2024, some of them needed to get unwound. And I think this is reasonably healthy, the way in which it is transpiring. As we stand today, I think large caps from very expensive are now coming to more average valuations. They are not yet cheap. Small caps are not even at average valuation. So we are not all that optimistic, but things are turning out a little better as we speak.
Jigar, if we look at those pockets in the market, which are going to see a further downside because of the valuations not aligning with the various factors impacting the market, what would those be?
So let me run you down, Nisha, a little bit, take you back in time. And what happened was that, from 2020 till all the way now, 80% of the demat accounts, 81% of the demat account that have opened have come during this period. Now, this is the time when most investors essentially saw like a 32% sort of CAGR on Nifty, 45 to 52% CAGR on small cap, and slowly and steadily it started getting into the expectations that this is what normal markets tend to produce. Now, you could show a lot of data, 5 or a 10-year rolling return for large cap or small cap is at around 12 or 13%. But unless people sort of experience it themselves, it's a rather difficult transition, getting away from 25% expectation to a 13-14% expectation. That transition doesn't happen without some amount of volatility, some amount of, ups and downs playing out. All the excess is in small cap. Now, over a 3-year rolling return, you are looking at around 12-13% return, earnings growth, whereas the valuations were almost at, implying a 24% stock return. So there was about 7% compounded for 3 years sort of a fraud that needed to be taken out. Some bit of it is in the price now. Some more, I think once that happens, you should see reasonably decent levels to get in.
I think that's a resounding view, Jigar, coming in from almost all the market experts that there is a further downside. Very quickly, what should be the investment strategy at this particular time? If there is money on the table, should there be profit booking? Is there a stop loss that should be incorporated, or wait and watch and wait for the right time to re-enter? What should the strategy be at this point?
So, Nisha, for a fund like ours, the perspective is slightly different. What happens is that, if you come to a conclusion like we have, which is that, India is not really Japan circa 88, 89, which is to say that you're not going to see 2 or 3 decades of sort of flat market returns, because the underlying fabric is fairly strong. You're more people working a little more smartly. So labor force participation, productivity gain, all of that is coming broadly into a fairly decent line. Now, with that perspective, you essentially want to say that you will want to avoid excesses on either side, right? When things are going too great, you don't expect a lot. When things go too bad, that's when you start deploying slightly higher quantums of money. So clearly, for a fund like ours, we are always invested. Cash as an alternative asset class, we don't see a lot of value in that. And there will soon come a time when we'll start getting a lot more aggressive, looking at sort of the defensive stance we have had for a while now.
All right. All the best, Jigar. Thank you so much for your insights right here on NDTV Profit. All right, let's shift focus to one stock which is a sight for sore eyes in an otherwise very weak market. India Mart Intermesh, that the particular stock is up over 4%. The stock, the company really beats the street estimates in the third quarter collections growth and was a key positive coming in. What didn't really fare well for the numbers is the paid subscriber additions. Dinesh Agarwal, who's the CEO and founder of India Mart Intermesh, joins in with more details on that. Dinesh, thank you for joining us on NDTV Profit, and many congratulations. Your stock is still holding up. The market seems to like what you have performed in the quarter. Can you give us the key deliverables, the key factors which drove the growth in the quarter?
See, 2 things, 3 things, maybe. One, we have probably done a slightly better job at upsell and retention of the gold and platinum customers. We have also seen some bit of effect coming from the increased prices in the silver bucket, as well as the busy infotech performance has also added to the collections growth. And that is how our collection from customer, which used to be 10-11% in the past quarters, has now come at 17%. Thank you.
Right. So, Dinesh, paid subscriber decline has also been seen as a key negative. Can you give us a sense on that particular aspect and how it's panning out for this quarter?
Yeah, normally we try and do about 2,000 paid supplier net addition in the quarter. However, in the beginning of the last quarter, we took a price hike in the silver from 28,500 to 32,000. which is a minor price hike that we have taken. However, the sales teams and current customers take a little time to adjust to that, and we have guided that for the next 2 quarters, there might be some impact on that. But in the long run, the overall price increase would help improve the collections as well as margins over the longer period.
So what you're saying is that the price hike will be absorbed by the market, and therefore it will offset the lower additions. So that you are confident in. How many quarters will this really show up, Dinesh?
I think just another more quarter, and then it should start to show up.
All right. So for this particular quarter, this realignment is still to be worked upon, is what you are mentioning.
Yes.
On the other hand, the lower marketing spends also aided your margin. Now, Dinesh, as we understand, lower marketing, marketing and expenses are discretionary in nature. You can play around with that particular factor and that tool in order to really impact your margins and the profitability. What is your view and your strategy for this particular quarter and the rest of the year in terms of the marketing spend? Because that will have a direct impact on your margins going forward.
Yes, we have guided that we have set aside a budget of about 10 crore rupees per quarter for the marketing. We have been able to spend about 6 crore rupees so far every quarter. This particular quarter, because there was the Diwali holidays and there was Christmas and New Year holidays, so we had paused the advertising for certain number of days, and that is why you see a slight dip in the marketing expense. But going forward, we will continue to press pedal on that to expand our marketing across more and more buyer categories, as well as we will continue to do social media marketing for the supplier side on the LinkedIn and Instagram and Facebook.
Right. So there will be a marketing spend, and we'll keep an eye out on that particular aspect since that had a considerable impact on this particular quarterly result. But one more important aspect is also that most of the brokerages in the market is expecting higher revenue growth in the coming quarters. Will that start kicking in from the present quarter? Can you give us some guidance and outlook on the performance?
See, let us understand the way it works in our subscription industry, and especially in an industry where there are more annual and multi-year subscription. Collection from customer is the leading indicator of the deferred revenue. So collection from customer has grown by 14% in standalone and consolidated level 17%. And that is resulted into a deferred revenue increase of about 16% in standalone and 19% in the consolidated. So revenue is typically being recognized on a daily, monthly basis from this deferred revenue. So effectively, you see a 2-3 quarters delay from the collection per customer and deferred revenue to start showing up in the revenue. Revenue is typically a 15 to 20 months moving average of the deferred revenue and collection from customer. So we will see some uptick, but we will probably start to see some uptick maybe 2 quarters down the line.
All right. So enough guidance as well as insight that you have given, Dinesh, for the next few quarters and in the near term, how the company is going to perform. Congratulations on a good performance. The stock is really lively in an otherwise weak market. Thank you so much for joining us on NDTV Profit. A quick look at the market. Yes, there is recovery, but eternal share price, that is something to be watched out for. A sudden spike up in Zomato's company Eternal. So keep an eye out on that. With that, it's a wrap on Markets at 12. Thanks so much.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री।
Hello and welcome to NDTV Profit. This is Hiral Datia bringing you our all new offering, Trending Stocks. With me is Sharad Dubey standing at the NDTV Profit market page with all the action in the markets today. Sharad, interesting day of trade. I mean, the kind of downtick that we've seen since yesterday and the recovery that's come in right now, what is that indicating? Because we were in that oversold zone already.
That's right, Hiral. Thank you very much. Largely, I would like to say a little bit of short covering is coming in the markets, but the concerns were definitely there. Nifty falling below the 200 DMA, then that 25,000 mark, and that really scared the entire market participant. But then after that, a significant recovery has happened in the markets, and this is as a measure of short covering and largely oversold positions were there. But let's just see how Nifty Bank has also panned out. The story remains the same, and even I'm seeing the mid-cap, small-cap indices also showing some kind of recovery over the last 45 minutes to 1 hour as well. But what are the key factors to watch out for in a very busy market today? The first one is definitely when the market is finding a good support at the 25,000 levels. So that's I would say a strong support. Intraday basis, of course, this 25,100 is something which I would like to track. The recovery is there of nearly 250 points from the day's lows itself, and that is showing some strength in the market. Of course, more short covering might be expected in the coming days, and the markets are still in the oversold mode. That means the RSI numbers, that's below the 30 when it comes to Nifty. But yes, the overall VIX, that has gone up almost 20% in the last 5 days. But the biggest concern is rupee near its record low levels. They have weakened past more than 50% in just one trading session. That has been very eye-opening, and largely this is the position which we are getting in the markets. Overall, the bond yield setup and the global setup, the global risk-off sentiment is still there for the third straight day. Over to you, Hiral.
Thank you so much, Sharad, for that. But one stock that is trending in trade. Let's pull up a Central Bank of India and see what that counter is doing on the back of the stable third quarter that has been reported. In fact, that stock has also corrected.
recovered from the day's lowest levels, but we're still trading with cuts of 0.2%. It's an interesting quarter because there is a broad-based recovery that we're talking about. Kalyan Kumar, Managing Director and Chief Executive Officer of Central Bank of India, joins us to discuss more on this. Welcome to the show, Mr. Kumar. Always a pleasure to speak to you as well on NDTV Profit, and this is Hirala on this side. You know, I have a question with regards to net interest margins. First up, there is a sharp drop that we've seen in this quarter. Now, what is the outlook looking like if you have to look at the guided range for FY26 and 27? Because you've said that you are confident of that 3% kind of a number.
Yeah, thank you. Thanks for the opportunity. Good afternoon. If you can see, this time our NIM was 2.96 and previous quarter it was 2.89. There is a recovery of 7 basis points in this last quarter, Q3. And I have given guidance to the market that we are going to maintain NIM 3%. And reason behind it is actually there are a lot of scope available. We are having CASA, very strong point is for Central Bank of India, as our CASA is 47.13%. And also I can tell you that more than 65% branches of Central Bank of India are maintaining CASA 50 and above, 50 to 55%. So a lot of scope is available in this segment. We have devised several products for different segment of customers, and also proper marketing teams are on the job. So from CASA side, again, it is strength point and we are building on those side. Another focus area is our RAM sector. If you can see our previous quarter, September quarter, this loan book of RAM was 72%, where good yield was available. And this quarter, it has reduced to 69% because it is again rebalancing of our books, corporate and this RAM mix 69-31. It is again aligning with our guidance to market 65-35 ratio plus minus 5%. The RAM sector also, I can tell you, in agriculture, our focus in SHG, where 9.86% is the return yield we are getting out of that. That is one focus area. And another for creates the MSME side also. And we are conducting mega outreach program across the country, 100 plus places. Right. In that way, we are going to protect our margins.
Right, Mr. Kalyan, the concern is definitely on the NIMS front, the net interest margin. There seems some compression here. Going ahead, do you see this still bottom out in the coming quarters, or the pressure would be remaining there?
See, our loan book, 60% loan book are external benchmark link rate. The pressure is there. It is fair to say that pressure is there. But the initiatives, as I told, in CASA side and also RAM side, and also towards the curtailment of expenditure and improvement in fee-based income side, like centralized forex sale we have established. So from these segments, we are expecting good amount of income as we have diversified our revenue portfolios. So that's why I'm confident that we will maintain NIM at 3% in Q4 also.
Okay, so that's with regards to net interest margins. You're talking about the CASA as well. The other question I have for you is in terms of your CASA strategy, Mr. Kumar. Total deposits have grown, but the CASA ratio is approximately around 47.1%. How does the bank plan to further improve CASA mobilization, taking the competitive deposit environment right now? And your outlook when it comes to the credit to deposit ratio, is there a specific threshold that the management wants to maintain to ensure, liquidity remains balanced?
See, our credit to deposit ratio, previous quarter, Q3, Q2, it was actually 66. Now it has improved to 72 in the Q3. In that way, CASA part actually is the strength of central bank, 47.13, and you can see CASA has grown by 8.53% in Q3. And similarly, we have initiated several steps like devising several products segment-wise. And technology also plays very important role. We have provided tab to each and every branches. Onboarding of customers are very, very pleasant now. And our mobile app, Sent is actually is like supermarket place, meeting all the banking requirements of customer. So with the integration of technology into our business model, for current account customers, we are having cash management services, supply chain finance platform, and also corporate mobile app, corporate internet banking. The technology integrated into the business model, having advantage of geographical presence in those areas where CASA potential is huge. In that way, I am confident that we are going to improve our CASA numbers. And also this growth rate, at least 8.53, we are going to maintain in current quarter also. And CD ratio, as I told, this is an opportunity before bank to grow because our peers are anyway above 76 or 80. Our aim is also to reach to at least 75 up to March quarter, and after that again improvement would be there in CD ratio.
Okay, so Mr. Kalyan, let's talk about the asset quality and the capital side of it because the provisions have spiked, in this quarter. Secondly, the slippages have been contained at around 658 odd crores as well during the quarter. So what is the expectation when you talk about the slippages in the final quarter, particularly agriculture and MSME? And another part to that is your capital buffers, because the CRAR has moderated slightly to 16.13. So any plans when it comes to capital raising 3FPO, QIP to support that 19+% advances growth going ahead?
See, we are having sufficient capital. If you see, our CET1 is 13.87%. That is sufficient to support our growth in this quarter, at least. In this quarter or in this financial year, there is no plan for capital raising. We are having enough capital. Regarding maintaining of asset quality, this is one of the good work done by Central Bank of India team, that our slippage ratio in this quarter was at 0.25%. And 9 months it is 0.74%. And looking to the asset situation and all, I can tell you it will be ranging between 1 to 1.22%. There is consistent decline in slippage ratio, and Central Bank of India has implemented so many processes, improvement, and also fit on street model. We are having war room, integrated call center that is integrated with the propensity model. With that, we are able to maintain our slippage ratio consistently. It is on declining trend. This quarter it was 658, and this current quarter also in Q4, we are sure that it would not be more than 700 crore slippages. So we are maintaining this. That's why it is impacting our credit cost also at 0.37%, aligning with the guidance given to the market.
Got it. All right, Mr. Kumar. Thank you so much for speaking to us. Always a pleasure to have you on NDTV Profit as well. So that's the management of Central Bank of India with their outlook of what improvements are expected going ahead. But moving on, let me quickly take you through the watch list that we will be focusing on as well, apart from a Central Bank of India. What we have for you is Eternal, that will be reporting numbers today. That stock is seeing some good moves. JSPL, you have Morgan Stanley, which is an overweight on the counter. Credit Access Grameen has reported the third quarter numbers, a strong set coming in on that one. MRPL volumes are pretty strong, so we are going to talk about that one as well. Alkyl Amines is trading at the day's highest levels, and there has been some flavor when you talk about Alkyl Amines and Balaji Amines over the last couple of trading days as well. Kalyan Jewelers, one of the top losing counters, volumes are up nearly 6 times what's brewing there. And the Indigo cancellation fiasco, the way it's going to hit the third quarter. That's a story that, our colleague Danish has been getting for us as well. That's what has created some bit of pressure. SAIL, Morgan Stanley has an underweight on the counter, and you have a ICICI Bank, which is falling for the 5th consecutive session. Sami Hotels is down 10% in a week. SRF, L&T Finance also is what we're discussing today. And DLM on the Q3 earnings, along with a Shopper Stop that is reacting to numbers as well. Persistent, which is reacting to numbers. Along with that, you have a Coforge, which is under pressure. So that's the watch list that we are going to discuss. But Sharad, over to you for the rapid fire today.
Well, yes, before that, Hiral, let's look at the markets. And Nifty is back in the green. It's trying to retest that level, and that's a very interesting take coming in. We already pointed out earlier in the show, short covering will happen, and 250 point up move from the day's low is something which we are watching out for. But yes, important levels to track, because today 25,000 levels was breached and even the 200 DMA was breached. But coming back to the rapid fire, joining us is Sachin Sarvade. The first stock, Sachin, is alkyl amines. What's your view on that?
Alkyl lab you are talking about?
Yes, alkyl amines. All right, the next stock is Kalyan Jewellers. It's at 52-week low. Yeah.
Yeah, Alkyl, sorry. Actually, the stock is currently trading above the 20-day moving average. However, overall trend is down. Immediate resistance will be around 1656 levels. If it is crossing that level, then we can expect more upside of around 1700, 1750 levels.
And the next stock is Kalyan Jewellers, 52-week low.
Kalyan Jewellers, overall we can see it is continuously making a lower top, lower bottom, and the trend is also down. Even momentum is weak. Stay away from this stock actually.
All right, stay away from both Kalyan Jewellers and even we are speaking about it. But next stock is Sami Hotels. What's your view on that? Okay. Yeah. Sachin, you can hear me?
Yes, yes.
Yeah, please go ahead. Sami Hotels is the stock.
I'm not getting the ticker actually.
Sami Hotels is the stock. And if not, then you can give your views on SRF also.
SRF, yesterday we can see even in the closing call I have told it will come down, but this is the current demand zone right now. It is right now 6% down, and it has already entered into the demand zone, which is 2500 and 2700. One can enter in the stock for the upside of 2800, 2900, but do not expect much from the stock. Overall, the stop loss for the stock will be around 2400. If it is breaching 2400, then the stock has more downside, wherein we can see 2000 levels as well then.
All right, Sachin, L&T Finance, what's your view on that?
LTF overall trend is bullish for the stock, and we can see today it has actually retested the 100-day moving average.
The query is L&T Finance. Sachin.
Sorry?
L&T Finance, Fin.
Yes,
Finance.
yes, L&T Finance.
Yeah.
L&T Finance. It has retested its 100-day moving average today, and one can buy at this level. The overall trend is bullish for the stock. Even the RSI has almost entered into the oversold levels also. At the same time, it has retested 100-day moving average, and it has got a bounce from that level. A good recovery from the lows also. Overall, we can see 300 and 315 levels in the near term.
All right, Sachin, Cyient DLM, weak set of numbers coming in. What's your view on that?
Which one?
Cyient DLM.
Cyient DLM, overall structure of the stock is weak. Lower high, lower low is continuously making. Even the trend is down. Stay away from the stock actually.
All right, that's all folks for the rapid fire. Thanks a lot, Sachin, for that. Over to you, Hiral.
Thank you so much, Sachin and Sharad, for taking us through the rapid fire. But moving on, the key question from here on is those individual stocks which are buzzing in trade as well. We have Eternal. Let's pull up that one on the screens. Ahead of the numbers, that stock was seeing some good momentum in trade today at the day's highest levels in spite of this kind of a market 5.5% up move. Mahima is with us. Mahima, I mean, a 5.5% up move on the day the company is going to report numbers. What's happening?
Right. I think the only stock which is probably keeping the Nifty in check right now is Eternal, and this is on the on back of the expectation that it's going to be a strong quarter for Eternal going forward, despite of the gig worker strike that took place in peak festive season. The expectations, the estimates that Bloomberg suggests is that revenue may see a rise of around 2 times. EBITDA also may see a rise of almost about 1.5 odd times, and margins may, however, margins may slid at that 2% mark versus that 2.9% mark, but may see some recovery sequentially. The net profit also may be at that 115 odd crores versus that of 60 odd crores in Q2 FY25. Now, festive season sales might overall get impacted due to gig worker strike on 25th of December as well as 31st of December, but that was focused on certain areas only, so we'll have to see as to how that pans out. But overall, strong revenue growth, and this will be largely backed by Blinkit and Hyperpure, and profitability, however, may see some some pressure in terms of where Eternal stands because of QC expansion. We'll have to see as to how that pans out, and plus the entire shift in terms of inventory model, whether that's completed by this quarter or not. In terms of key things to watch out for, what is their guidance towards expansion of stores after everything that's panned out around gig workers, recovery in food delivery, whether it's on the way or not, because that's not been the case for the past couple of quarters for Eternal. Quick commerce market share expansion, whether that's happening or not considering competition into picture, and Hyperpure revenue growth, at what rate is that happening, and overall going out business, what is the expansion looking like and how much has it picked up in the last quarter. So this is the overall view of what you can expect from Eternal's earnings.
Okay, so that's with regards to Eternal. Stay with us. Let me also go across to Gaurang Shah from Geojit. Gaurang, welcome to the show. Always a pleasure to speak to you as well. My question coming to you is with regards to your expectation on an Eternal, a 5.5% up move coming in on the day of the earnings.
Thank you, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to you and to your entire team. A small disclosure, Hiral, all recommendations are a part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of investment, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their internal investment interest. So, look, first of all, I think, Hiral, there was a lot of concern in terms of the crowd that is going to come into this quick commerce stroke food delivery platform. We saw correction, then we saw the numbers, then we saw an uptake, and then we saw some kind of stake sale, which pushed the stock down. But from a long-term point of view, Hiral, our fundamental team is positive on Eternal. We have a buy coverage, buy stroke hold coverage on Eternal. Our sense is that the number of dark stores that have been opened in 2025 and the lineup of dark stores that are going to be opened in 2026 and thereafter will add to the quick commerce delivery platform revenues in terms of top line and bottom line. They have also ventured into newer geographies, which will have a larger subscriber base and a larger market to cater. Positive on Eternal from a long-term point of view.
Okay, Eternal from a long-term point of view is what you're looking at. But moving on, Cupid is making a strategic 331 crore investment in Bazaar Style Retail through a preferential warrant issue. Mahima joins us with all the details. Mahima, what do you have for us, and what is the rationale that you're seeing?
Right, so here, I mean, if you take a look at how these stocks have run up, I think the kind of correction that it's seeing today is probably on account of this news, where Cupid is going ahead and investing in Bazaar Style. So Bazaar Style has kind of issued preferential allotment of warrants worth rupees 331 crores to Cupid. The issue price is set at 328.25, which is almost a 3% discount from its yesterday's closing price. In terms of where the overall business update stands for Bazaar Style, revenue from operations saw an uptick of around 13% in revenue. Sales per square feet was down by around 15%, so not a very good quarter despite a festive season being there in this quarter, but there was also a postponement of festive season that's happening in Q4, and that is why overall retail sales were impacted. But I think the street probably not liking this development, and that is why we are seeing the stock tanking, and how both these stocks, in fact, because Bazaar Style, if you take a look at last couple of weeks, 1 month, it's been up around 21%, but today down around 6% in trade. Similarly, Cupid has seen a run up of almost 160% in the past 6 months, but is now down, in trade today and down almost 21% in the past 5 days. So probably the development that street was not expecting, and that's why the stock is under pressure. Both of these stocks are under pressure.
Okay, so that's with regards to Cupid and Bazaar Style Retail. Gaurang, your view when it comes to this interesting investment bet?
Well, look, Hiral, I think what needs to be seen is not just the one-time news flow, but also the capability of the company to deliver in terms of earnings. Now, unfortunately, we don't have any fundamental coverage on either Badar Style or Cupid, but I would request the viewers, stroke investors, that don't look at just one-time news flow. Look at the impact of the news flow and look at the capability of the company to scale that acquisition or any other investment they've done, how it is going to reflect on the top line and bottom line from a long-term point of view.
Well, that's an interesting take. Hi, Gaurang, Sharad here. The stocks we are focusing on is, of course, JSPL and a lot of steel-related stocks. Positive broking upgrades also definitely coming in. But is this the right time to, kind of book profits in this sector, or is there any structural play at work here? And if yes, Gaurang, which stocks or which pockets are looking good? Gaurang, sorry, you can hear me?
Yeah, now I can hear you, Sharad. Tell me. Sorry, I couldn't hear you before.
Not a problem. Gaurang, the question is on the steel players. A positive broking report came up, and largely we see there is a structural up move coming in as far as the numbers are concerned. Which pockets or which stocks are looking attractive for you?
So, Sharad, I think you need to be positive. Don't have bias towards one side, ferrous or non-ferrous. I think you should have both ferrous as well as non-ferrous. And with that perspective in mind, we have coverage on Tata Steel, JSW Steel, Jindal Steel, Hindalco, Vedanta, NMDC, and Nalco. One more advice to the investors: if they eventually understand this team as a sector for investment, then have at least 2-year plus kind of time horizon, Sharad, because whatever is happening at the international front has a direct impact on the international commodity prices, ferrous, non-ferrous, and that has its impact on the performance of the company domestically or otherwise. So have a longish time horizon.
Long time horizon when it comes to metal counters. But moving on, let's pull up a credit access Grameen on the screens and see what that counter is doing in trade. Post the numbers. Interesting set. Revenues have grown. Your EBITDA is what is actually a fantastic one. 126%. Margins have also expanded substantially. So basically, it's a strong operational performance. It seems to be a turnaround quarter for credit access Grameen as well. Investec has maintained a buy. They have a target price of 1,450. And they're saying it's at the start of an upcycle. 11% up move coming in today. Gaurang, would you still be a buyer?
Hiral, definitely yes. Not only credit access Grameen, but even look at the numbers of AU Small Finance. On both these companies, we have a positive coverage from our fundamental research team. If you have it, hold on to it. If you don't have it, you can start accumulating at current levels. Given the uncertainty in the market, use dips to average at lower levels.
That's a view coming in for Credit Access Grameen and AU Small Finance Bank as well. But Gaurang, let's just see Shoppers Stop. The numbers were on the weaker side. The stock has earlier tanked in the day's trade as well, down almost 6% right now. Shoppers Stop, the story is not coming out. And India's retail also, we see a lot of retail names, the high valuation ones, have seen a significant correction. What's your view on that, Shoppers Stop, or this entire space as a whole?
So, Sharad, this underperformance was the basic reason why we have removed our coverage from Shoppers Stop some time back. Even when the going was good, when you have the comparison of the peers of Aditya Birla Life Fashion, or if you take a matter of fact, Trent, we have coverage on ABFRL as well as Trent Asset Disclosure. On Shoppers Stop, because of the underperformance, because of the reported numbers being much below the weather, even when it compares to the competitors, my sense is that ABFRL and Trend could be a better investment idea from a long-term point of view. Won't comment on Shoppers Stop because we have recently removed the coverage from this.
All right, that's pretty interesting on that, but markets are giving a very good update on the markets. Earlier we started the show in red, but look at that up move coming in, and now it's near its day's high level. it's in the green, and that's the beauty of the markets. Of course, the short covering is coming in, largely oversold positions were there. So how much does it close at those levels? Will it be 25,100 or will it be back to 25,200? That's something we'll be watching out for. But right now the flavor of the market is a strong recovery coming in. So that's all, folks, for trending stocks. From me, Hiral and Gaurang, thank you very much for joining us, and for the entire team at NDTV Profit. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर, ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर। Celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January.
SRF under pressure after delivering weak set of Q3 numbers. Persistent, on the other hand, saw inline performance with Q3 profit dragged by one-time labor code impact as well. Stock down more than 4%. And all eyes are going to be on Dr. Reddy's third quarter results. Continued pressure on US to drag performance, revenue, profit up, downtick. In fact, on the cards, strong show likely for the India business. And it's the scenic Swiss town of Davos that is heating up with talks on tariffs, political mileage and world order as global leaders and policy makers alike converge. In this small city, NDTV Profit brings all the action from ground with live coverage and exclusive insights. All eyes, of course, are going to be on Trump's commentary when it comes to Davos. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities. News and updates on the top buzzers at this hour as well, all while you grab lunch. And let's also quickly take a look at some updates coming in as far as the US Treasury Secretary's comments are concerned. There have been some glitches in UK trade deal, and of course Trump is going to be late by 3 hours, and that's key commentary coming in there as well, because you did have the Air Force One that headed back on the back of a technical glitch. That was a very important update that we were watching out for. Other than that, of course, this is an interesting update in terms of what really happens when it comes to Davos. Like we told you just a few seconds earlier, of course, the commentary coming in from Trump against the backdrop of everything that has been happening and all the headlines is very, very important right now, because you do have Donald Trump in terms of his war with his trade war that could potentially happen. That is something that is very important, and there at the bottom of your screens and on your screens as well, you do have that update coming in. So that sort of update is something that we're definitely going to be watching out for in terms of the other key commentary coming in from Davos as well. Let's try and get in some commentary from Davos as well when you talk about this one, because you do have a bunch of updates trickling in. As of now, the updates that you have is that he's going to be reaching 3 hours late. Of course, the things that you have at hand right now are that you do have US and Europe stuck in a little bit of a trade war after that commentary coming in over Greenland tariffs when it comes to Trump. Other than that, of course, you do have Europe that could scale up its response. And you did have their emergency meeting as well, and that's something that we're looking at. But tell you what, let's also very quickly take a look at what the markets are doing. We've seen a very smart recovery when it comes to the Nifty as well, managing to get back in the green. That's Nifty for you, as you can very clearly see on your screens, 50-point uptick coming in. And just about 10 minutes ago, it was sharply, at least in red. Right now, you have that 50-point recovery coming in, uptick coming in. As far as Nifty is concerned, for Sensex as well, 68 points higher is where Sensex is for you. Quickly, let's also take a look at the picture that you have as far as sectors are concerned. Right now, it's a mixed sectoral picture that you're looking at. Just a few minutes ago, it was not, tilted in the favor of green as it is now, because you do have oil and gas leading gains. When it comes to sectors, energy, metal consumption, auto, media, some of the sectors that are doing well right now, defense is on the back foot. IT is on the back foot, banks not doing all that well, pharma, service, PSU banks, some of your other sectors as well that are, lagging behind right now. But, when you take a look at some of the stocks that are doing quite well for themselves, there's actually a Credit Access Grameen on the back of its Q3 numbers, up about 11% in trade right now. Eternal ahead of its numbers, 6% uptick is what you're seeing coming in for that particular counter. Quickly, let's also take a look at some of the counters when it comes to Nifty 50 as well. So what's doing quite well is Interglobe Aviations, ONGC as well. On the flip side, there's actually a bunch of counters that are on the back foot. So something like an ICICI Bank, Trent, Apollo Hospital, BEL, Eicher Motors, and Tata Consumer down anywhere between 0.5% to 1.5%. So that's something that you're seeing in terms of some of your top losers from within the Nifty 50 pack. But quickly, let's also move on, try and get you the word going as far as gold and silver are concerned, because you've seen that sustained strength coming in as far as gold prices are concerned, and that's the story for today as well. Let's kickstart that coverage as well, and we do have Ajay Kedia, Director, Kedia Advisory, joining us on the show this afternoon. Thank you so much, Mr. Kedia, for joining us this afternoon, and it's quite an interesting afternoon when it comes to gold at least, because there were those concerns that gold might just crack under pressure given all of the volatility that you have right now. Given the way that it's managed to sustain this record run, there's of course a lot of safe haven demand. Do you believe that that is the key wind in its sails right now?
Yeah, very good afternoon. Definitely, I see 2025 was a very special year for commodity, particularly for gold and silver, where we have seen prices hit a multi-year high. And fundamental, we know central banks are consistently buying because of de-dollarization. Geopolitical tension is a part of momentum we have seen since 2022, and still it's going on. But the game changer was the Donald Trump, because Donald Trump tariff war has struck, and uncertainty has created a havoc, we can say, in the market, and that is why we have seen prices has rallied around 80% in last 1 year itself. But important was the ETF, investment buying. So I think all these factor has contributed the rally in 2025, but nothing has changed in for 2026 also. Here also we have seen, as soon as we stepped in 2026, we have seen US, Venezuela, now we are US, Greenland, or we can say US, European. So I think the tariff concern will impact the supply side, and that is why we have seen the prices moving in a very awkward move in gold and silver. Today we are very close to 4,900 for gold, whereas near to $100 in silver, particularly for silver, where gold silver ratio has crashed down with a high we have seen in 106 in last year, and now it's around closer to 50, which is around 53% fall. That clearly shows industrial demand is onwards, supply shortage will continue to be there, and silver as a shadow metal continues to.
And Mr. Kedia, we will delve a little deeper when it comes to silver as well. Of course, you do have man of the day, Donald Trump, who's running 3 hours late. So there's actually a bunch of comments that we could be watching out for when it comes to the entire front, especially when it comes to gold. But, in terms of silver, there's actually a lot that you're looking at right now, because, you do have some investors being a little bit concerned. There's actually two sides to this entire party. One side is the people who've actually showed up to the party, and they're just, sort of looking at the others and very happy that they've invested, but just a tad bit worried if it's going to correct from here on. And the other is the entire side that's not managed to make it to the party. Which side do you think you would prefer to be in right now, and what do you expect from here on?
I think the rally has already been missed, because see, first of all, as an investment point of view, we have never been thought, or we have never allocated our portfolio in gold and silver as a strategical shift. And those who have made also, they have got a very good return. And I think when the prices was around $60, $70, has almost everybody has started profit booking. So I think at the $94, $95, no one is still holding. Only the speculative demand of, or we can say the supply short has been there, which is currently holding the prices. So I think from the investment perspective, we have already lost this rally, unless and until a meaningful correction of, let's say, 30-35% doesn't come. I think re-entry as an investment on silver would be very doubtful from current level. But still, fundamental remain bullish only. Stay calm as of now, because volatility and margins are too high right now.
All right, so if you've bought in, hold on to it and just be there, hold on for a while. If you haven't, stay away from it. It's a little bit of the sense that I'm getting from your comments, Mr. Kedia. But when it comes to copper, what are you expecting? Because Goldman, of course, sees continued flows of the metal into the US. There's a lot of bullish triggers here as well. What are you looking at in terms of prices when it comes to copper?
Last year, we have seen a quote that copper will be new gold, but I think copper is a new silver, because there was a story going on that China's one of the biggest solar manufacturing company, Longi, has clearly told that as the silver prices are going up, we can shift to copper. So copper is a metal which can substitute silver. Secondly, the supply side, we have already seen, like Indonesia or Chile is supply concerns are still going on. Prices were underweighted, but with the interest rate are cutting down and industrial demand is continuously going, we are expecting this year we can see a level like 15,000, 15,500 on LME. That means on domestic side, easily the price can move towards the level of 1650, 1700. So I think majorly still the rally has been due for copper. A corrective dip or consolidation would be possible in next 15-20 days, as Chinese Lunar New Year holiday would be there. But overall this year, I think copper, aluminium, zinc, all three metals are going to be on higher side. Maybe from here 30 to 40% gain is easily possible.
Right, and Mr. Kedia, just out of interest, I wanted to try and understand what mode of investment would you bet on when it comes to silver and copper? Would you perhaps be looking at an ETF allocation at this point in time? Staggered buying is the approach that you're looking at here when it comes to silver and copper. In case somebody, has an iron stomach, decides to actually invest in both of these metals, what would you be sort of betting on?
So first of all, we come to silver. We have always heard about SIP, which is systematic investment plan, but I think the word has totally changed. Now it's silver investment plan. You can go ahead with silver ETF, but be cautious because whenever we invest in ETF or as an investment, we look for returns. Whatever the returns we have seen in last couple of years was tremendous and phenomenal. We don't expect this type of return would be possible in 2026 or 2027. A time correction is required. So better would be SIP, so that whenever there is a sharp correction, you will be getting more units. And in case of copper, we don't have any ETF right now. So there are options available, either derivative product, which is not mainly suggested for an investing point of view. So you can buy and keep a delivery, or otherwise you have a nifty metal index in that there are many stocks which are been contributing. So I think a stock is the only option available for copper right now. We don't have any ETF in India.
All right, then. So that's a very important insight coming in when it comes to the investment that you have in gold as well as silver and copper in particular. Thank you so much, Mr. Kedia, for helping us out with that. I quickly wanted to try and understand which are the metals that you're the most bullish on when it comes to all three of the metals that you talked about.
So out of, if I want to rate for 2026, I will be more bullish on copper. Then it would be aluminium, zinc, but bullion from here, it's a risky bet. At least a correction of, let's say, 30-35% if I am getting. So silver would be definitely I will be again in, but gold we should wait for at least 20% correction or time correction. So precious metal would be slightly I will be off, but the copper, aluminium, these two commodity I will be betting for 2026.
Right, then stay cautious when it comes to prices and hang in there. That's the commentary coming in. Thank you so much, Mr. Kedia, for joining in and helping us out with the pecking order, some of the modes of investment that you can be looking at when it comes to some of these commodities that are sparkling quite bright. But let's also talk about one stock that is actually doing quite well for itself, and that's Eternal, poised for a strong third quarter performance with revenue expected to nearly double year on year, led by rapid Blinkit expansion as well as quick commerce growth. And Mahima, in fact, is joining in terms of what the street is penciling in. Mahima.
Right, so I think Eternal is the only counter that's keeping the Nifty in check right now, up 6% as we speak, and this is ahead of its earnings, as you can see on the charts as well. In terms of where the expectation stands, Bloomberg estimates suggest that revenue will grow almost 2x as compared to Q3 FY25. EBITDA may rise around 1.5 times. Margins may slightly see a downtick of around 100 basis points, but still a 2% margins will be a sequential uptick from what it did in Q2 FY26. In terms of net profit, it may rise to that 115 crore mark versus that of 60 crore mark earlier. In terms of what to expect, festive season sales might see some impact because of the strike that gig workers saw on 25th of December as well as 31st of December. But strong revenue growth is expected in Blinkit, and largely that will be the counter that will drive the top line growth for something like Zomato. Profitability may see some impact because of the quick commerce dark store expansion, but overall high marketing spends will also likely put some pressure on margins. In terms of what to watch out for, firstly, in terms of expansion of dark stores, what is the guidance? Will that change because of the change in norms for gig workers? Is there recovery happening in food delivery, because that's not been the case for the past couple of quarters for Eternal? Quick commerce market share expansion, how is that happening considering competition into picture? And hyper pure revenue growth, how is that panned out? And lastly, going out business, how has it panned out in this quarter, and how is the growth looking like, and what is the guidance for this particular segment? So this is the overall view of what you can expect in Eternal earnings.
Well, absolutely, and thank you so much, Mahima, for helping us out with that update. It's looking quite upbeat for the stock as well as the expectations, but it's time for a very quick break. Thank you so much for tuning in. More news and updates on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर, ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. Thank you so much for staying tuned in. Well, like we told you just a few minutes ago, you do have US Treasury, Besant, who's given an update, a big update regarding US President Donald Trump's arrival in Davos to participate in the World Economic Forum. This particular participation is key on a couple of counts. One, that entire Board of Peace commentary. Second one, of course, is the entire US and Europe saga that you have right now. On that backdrop, let's go across and listen in to this key commentary.
I believe President Trump is going to be about 3 hours late. I haven't seen the updated schedule. And that if this is what all President Macron has to do when the French budget is in shambles, I would suggest that he focuses on other things for the French people.
All right, then there you go. So that's key commentary coming in there when it comes to, US President Donald Trump's arrival when it comes to Davos. And that's going to be a very important visit. It's going to be key commentary that we'll all be watching out for. But in terms of what else we're watching out for, it's the budget for Bharat series that we should be putting the spotlight on. And in fact, we put the spotlight on the auto sector itself as a whole. The industry is cruising on strong momentum. GST 2.0 has powered a 5% growth last year and an impressive 18% surge in the third quarter itself. But to keep this pace going, the sector has a clear budget wish list. Here's what the big players across passenger vehicles, commercial vehicles, and farm equipment want from this budget.
India's auto industry is on a dream run aided by the GST 2.0 cuts, and in calendar year 2025, the industry recorded 5% jump in wholesale sales. The main jewel in the crown for the industry was the Q3 performance, in which wholesales for the industry recorded an 18% jump. But in order for a smooth ride, the industry has a budget wish list, and they believe that if the government can make certain announcements, then this dream run will continue.
Skoda Auto Volkswagen India is of the view that the upcoming budget should have announcements for the further growth of the EV segment. As the union budget approaches after the successful and welcome implementation of GST 2.0, the industry will be looking for policy continuity and long-term clarity. Sustained support for domestic manufacturing and increased allocation for road and transport infrastructure will be key priorities. Rationalizing the inverted duty structure for EVs will strengthen domestic manufacturing and competitiveness and will further accelerate India's transition to sustainable mobility. Continued focus on building the EV ecosystem alongside measures that support household disposable incomes will be essential to sustain demand momentum and reinforce the sector's role in India's broader economic growth. On the other hand, The CV and farm equipment players are of the view that the government has already been proactive with policies like GST 2.0 and RBI interest rate reductions. However, they expect the government to continue its growth-led initiatives and reforms for the agriculture sector.
So we are just a few weeks away from the union budget. What are your expectations from Ashok Leyland's perspective?
Government these days is so proactive that we don't need to wait for a budget really. One thing that the government should consider is really coming up with some program or some scheme around scrappage of the old vehicles.
The government in the past 4 to 5 years have done all the positive gestures and announcements as far as the farming community is concerned. In terms of visibility, in terms of incentivization, in terms of ensuring the money reaches the farmer. We are a 1.4 billion population today in India. We have to be self-sufficient. In many areas, we are self-sufficient. We can also become a food basket for the world. And also, as I mentioned slightly earlier, that in mechanization, we're only 47% in comparison to America and Canada at 90%. So I think that is the opportunity which the government and the industry and the farming community need to work towards in convergence.
I would certainly hope it's a consumption and a growth-led budget. As long as the domestic growth and the domestic demand continues to be robust, the industry will perform. And lastly, as we've been discussing exports, if there are some things that can be done to be able to help and boost exports, if there are some policy interventions that can be brought in there, that would be most welcome. If there are some policy corrections on duty drawback and things like that, and those conversations are on, the government has been considering a few of these things to strengthen the general capability of India and exportability. That's the only thing we can continue to push for.
India's auto industry expects to continue its journey on the fifth gear, all thanks to GST 2.0 cuts. The industry also believes that in the upcoming budget, the government makes certain announcements through which the government can increase the EV infrastructure across the country. Besides that, the industry has also suggested to bring in a scrappage policy for commercial vehicle segment, and at the same time, the industry has also demanded that the government must make certain announcements and certain policies which can increase farm mechanization across the country. The industry believes that if the government is able to support the industry in the long term, then nothing can stop India from achieving the tag of becoming the largest auto industry in the whole world. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
Alright, and thank you so much, Danish, for getting us all of those details. So that entire sector is in fifth gear. That's what it makes it to the budget wish list there as well. But speaking of some important updates, as we wrap up on the show, of course, you do have rupee hovering close to the record low, and that's something that you're looking at. You've seen a smart recovery when it comes to the markets, but let's also quickly take a look at a couple of buzzers when it comes to earnings. Of course, there's Shoppers Stop that is down about 5.5% thereabout. It's a mixed quarter that you're looking at there. At least when it comes to the revenue, you've seen a downtick of 69%. So that's what you're looking at for the revenue. That is up about 2.6%. And the EBITDA is down about 11.3% as well. Margins, in fact, have contracted just a tad bit. So that's something that you're looking at for Shoppers Stop. It's quite the mixed quarter, but it's perhaps the profit figure that is rattling investors a little bit. So that's something that you're looking at here when it comes to Shoppers Stop. What else should you be looking at in terms of earnings? There's actually a Credit Access Grameen that makes it to that list on the back of that almost 12% gain coming in. When you take a look at the numbers, you have the revenue that is up about 8%, EBITDA that is up about 126%. You've seen a stellar move coming in for the EBITDA there when it comes to this particular counter, possibly by that particular stock is also up about 12% in trade as well. And you do have a turnaround quarter that you're looking at when it comes to the third quarter for Credit Access Grameen. So largely on the back of that, you do have some strength coming in for the stock as well. Investec has maintained a buy with the target price of 1,450 rupees. And it's also talking about how the companies are the start of an upcycle. There's also a growth pickup that they see, and margin expansion and credit cost reduction is also something that they see on the cards. In fact, this is their best pick on the MFI upcycle as well. And the valuations also appear quite reasonable to Investec. That stock is doing quite well, but that's all the time that we have on the show. Thank you so much for tuning in.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपके गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either in the back of price or volume action. But before that, let's check what's on the show today. Firstly, we'll be speaking with the management of Pharma. Now, if you look at the Q3 number, the company delivered a very strong quarter. The revenues and EBITDA increased nearly 64% and 86% on a YOY basis. PTC India Financial, the stock was down largely on the back of weak Q3 numbers. The company's profit nearly halved compared to last quarter. When it comes to Bazaar Style and Cupid, both these counters were down in trade, and this is after Cupid announced that they will be infusing funds into Bazaar Style. So that would be an important counters to watch out for in trade today. And lastly, when it comes to Harsha Engineers, that stock is down for the 4th consecutive session. But what is interesting today is the volume number. If you look at the volumes, they are nearly 30 times that 20-day average. And it's not only Harsha Engineers which is interesting, it's the market also that is interesting today. Quite a volatile trading session. We declined more than 300 points in trade, but we did manage to recover nearly 380 points from the day's lowest level till now. And if you look at the markets right now, they are just down 24 points, but we did manage to grow above the 200 DMA as well in trade. But that's all when it comes to the Nifty 50, and that's the benchmark index. But Varsha, what's been buzzing when it comes to the small cap segment?
Well, when it comes to small cap segment, we have seen recovery, sharp recovery there also. Still, it's down almost 0.65%. But let's see which are the stocks which are in focus when it comes to small cap stocks. You have Rosel Tech, which is buzzing in trade today. Even you have ESEF, Small Finance Bank also, which is under radar. Now, Ceneris Pharma, as Somit was saying, is buzzing on the back of strong Q3 numbers. And you also have Nosil, which is also trading, it's up almost 5 to 6%. Volumes are trading at 4x. Now, it's a rubber chemical company. Though, let's also focus on the losers. Which are the stocks which are, on the losing side? There you go. You have Bazaar Style, which is, under pressure. You have Tourism Finance, Anup Engineering and Vanberry. These are all the stocks which are under pressure. So, overall, we did recover today very sharply. But, on to the management in our small cap segment, we, as Somit was saying, Ceneris Pharma, strong Q3 numbers that the company has seen. This is on the back of their own products and of course the CDMO segment that they have, they are concentrating on. But to speak more about the numbers and what lies ahead and what are the growth prospects for next 2 to 3 years, I'm here joined by Mr. Swapnil Shah, who's the promoter and managing director of Ceneris. Hello, Mr. Shah. Welcome at NDTV Profit and congratulations on a strong set of numbers. Now, you've seen a very strong growth. Will this growth sustain, number one? And do you want to revise your guidance upwards? Because anyhow, you're going to surpass the guided number.
No, thank you. Thank you for having me on your show. Growth has been strong that you've seen. Most likely, we should be able to outperform our guidance for the year. And, we are working towards it. So I think let's see how the year ends up with. But we are optimistic on outperforming our guidance.
So basically, you're going to surpass your 50% growth guidance in revenue and 100% growth guidance in PAT. Got that view. Also, what about FY27? Considering the acquisition of Apnar also, what growth are you penciling in for FY27 when it comes to revenue and PAT?
So Apnar will contribute significantly next year. Also, we are expecting some contribution this quarter as we speak. As far as FY27 is concerned, it seems to be a very strong year for us. What kind of numbers should we expect in terms of percentages on both revenue as well as EBITDA? I think it is a little early right now. I think we are keeping a very close watch on all parameters that we currently operate in, both on all three large driven businesses, which is regulated emerging market as well as branded generics in India. I think probably post a full year result, I think we'll be able to give you a specific guidance on how FY27 looks like it, and furthermore to even FY28. But from the notionally, what I can say, it looks very strong for us FY27 as well.
Can you confidently at least say that you would be able to surpass the FY26 growth numbers in FY27 as well? I don't need a number, just a qualitative line.
Difficult to say because we already grown more than 100% on FY26, right? So the base has already become bigger. So on a bigger base, same percentage, growth. I don't know yet, but as I said, FY27 looks quite strong for us. We have 28 ANDAs that are approved, yet to be launched, right? So the launch will happen every quarter for next 4 to 6. So it's a very strong year on regulated side. Also CDMO, CMO, a lot of products are going to be commercialized. Emerging market looks very strong. This year, last quarter, as you know, we've done the highest revenue and EBITDA on emerging market. The growth momentum will continue this quarter and following next 2, 3, 4 quarters. We have multiple products getting commercialized, getting a lot of emerging market market product approvals that we have received. So there's going to be significant growth as well as on the emerging market. Even branded generics.
Right.
Will yeah.
Sir. Sir, speaking about the emerging market, as you were mentioning, in this quarter, we have seen margin expansion of nearly 1,200 basis points on a YY basis. What has driven this growth, and any guidance for the emerging markets, if you could share?
So the larger growth is account of two reasons. One is that we've changed our product mix, right? So from a very commoditized product base, we have a lot of now new specialty, new launch, first to launch, second to market kind of products on emerging markets, multiple geographies that we are present in. That is one thing. And the second thing is we have changed our trade channels, right? So earlier, a lot of business was been done locally in Indian rupees to now business is being done in dollars. So we are directly exporting it to our large distributors and our partners that are situated in multiple different geographies. So a lot of dollar revenue exposure has gone up, and product mix has changed, which has kind of led to the growth in emerging markets as we speak.
Mr. Shah, I know that you cannot give the number for FY27, but for FY27, if I were to talk about after the Apnar acquisition, will there be any pressure in margin? Because I know for FY26 you're guiding around 30 to 31% of EBITDA margin, but because of this integration and all, will your margin suffer in 27?
So I don't think so. Again, the two structural reason. One is we are going to be cash positive in Apnar from this month itself, right? So as I said, we already have 3 products that are already qualified, and commercialization is starting from this month itself. So that's one reason. The second thing is a lot of US products where US manufacturing is optional, we are moving them to Apnar. We are moving them to India. So I'm releasing my US capacity for higher margin business, which we already have, which will be replaced, and relatively lower margin business where US manufacturing is optional is moving to India. So if you think about it, the higher margin capacities get opened up, and Apnar capacity is being utilized with a low manufacturing cost. Keeping those parameters in mind, I don't think there will be any impact on a margin. In fact, we see other way around. We see maybe margin could go up by 100, 200 basis points in next year.
100 or 200 basis point of margin expansion that you are eyeing for FY27. Got that view. Also, sir, the CDMO is positioned as a growth lever for Ceneris. What percentage of revenue can this segment reach in next 3 to 5 years?
So we will have the CDMO have about 35% of total revenue next 2 to 3 years time frame as we speak, and that will kind of sustain as we grow overall base and CDO business continue to grow. But I think 35% of overall revenue, we feel CDMO, CMO vertical side of the business will continue to have that kind of exposure.
Right. Also, just wanted to understand, sir, going forward, say over the next 1 to 2 years, what is the kind of product launches, what is the kind of drug launches that we could expect from the company?
So as I said, we have 28 approved ANDAs that will be launched. Products are being requalified through different regulatory pathways, which will be launched. A lot of business, a lot of products are going into government business. A lot of products are going into specialty niche distribution as we speak. So there is a significant growth. I mean, if you look at it, 28 ANDA launches itself is a size of one whole company, right? Which is significant. So those 28 launches that will happen in next 6 to 8 quarters will significantly drive our growth on the regulated side of the business.
Right. On that note, what's the medium-term revenue mix target for, regulated versus emerging markets? If you have any aspirational target for next, 1 or 2 year maybe?
So currently we are at about 65, 30 and 5. That is a mix that we currently operate in. I feel we'll be within the range of 65 to 70% being dominated by regulated market. The remaining would be domestic branded generic business and the emerging.
You're expecting the API segment to contribute in FY27?
That's correct, yes. So we are expecting API side to be FED accreditation. We'll get FED accreditation probably by mid FY27. And that will start contributing largely on our margin side, because a lot of products that we currently buy from a third party will be backward integrated to our site.
So, Mr. Shah, the revenue mix currently, if I see, 55% comes from your own products, 45% is CDMO. What's the target in future?
So that I said, CDMO will have that 35% of overall revenue mix, which will sustain and grow as the overall pie of revenue will continue to grow. And that we feel that I think that's going to be quite sustainable on the CDMO CMO.
Mr. Shah, my two questions. One is, of course, the capex plans that you have, for FY27, and any more acquisitions that are being lined up. And the third one is the backward integration plans, if any.
So capex is kind of now scaled down with Apnar acquisition. So whatever the capex was planned, we kind of pushed because we got those additional capacities on board, which we were going to spend for. So I think capex need for at least next 12 to 18 months has significantly reduced for us because of the acquisition. So I think that's a good play from the capex standpoint.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Ceneris Pharma. With that, let's also welcome in our fundamental guest, Tapan Doshi, research analyst at CA-Tapan.in. Tapan, you heard the management, very strong guidance given even for FY27. The management is confident that product launches would drive growth even going forward. How are you looking at this counter at the current valuations?
No, if you see the results are quite good, Sumit, and even the guidance is quite good. Of course, CDMO business is going to grow very well from here. And as such, next 5 years, I think CDMO business overall will grow a lot. And if you see their margins are also stable and it may increase from here. Customer diversification, they are working on it because still I think there is some as it is small scale operation, a few customers there, but they are going to diversify. But they have a very strong ANDA pipeline and that will help them. Even the niche complex generics also will help them to increase the margin. So yes, I'm quite positive. When I see the valuation is okay because it is the growth is justifying the valuation. So yes, I'm positive one can buy at this and even at deeps level for a long term. I think it is a good play to play.
Tapan, you say that Ceneris Pharma is good for long-term play, but any other small-cap pharma stocks other than Ceneris that you're eyeing for?
Well, if you ask me, I think I am quite bullish on CDMO business now. So I think I will go for Syngene. I think that is also a good company. There also a good amount of contracts may come, and in future I think they already do my guidance is quite good. So there also I think margin will go up overall. And if you see from US also, I think US is actually blocking somewhat Chinese firm. That is where the Indian firms will be benefited. So I think another company, I think Syngene International, one can check.
Right. The next stock that remains in focus is PTC India Financial. The stock's trading in the numbers were pretty weak for PTC India Financials, and this is because the company's profit nearly halved. What could be the reason behind this? Let's get in Jasmeet with more details.
Well, Sumit, thank you for that. If you look at the overall company, it's an NBFC which performs and overall acts in the energy segment of the companies. If you look at the overall key takeaways from the result, what we see is that the loan disbursement for the company has improved this particular quarter, showing a long-term profitability going forward. Further, the overall loan sanction has also increased by almost 4.28 times on YY basis. The overall, which shows revival of future growth in pipeline once the company goes forward. But one thing that's impacting the company and where the stock is down is the profit. Though the company has a healthy volume coming in as a disbursement has increased, but those profits are still down for the company, and that's the reason the stock is staying in trade. If you look at the other key aspects, the return ratios have weakened, indicating the lower profitability in terms of the capital generated by the company. Further, the overall profit has declined due to the lower interest income in this quarter, that as we saw. If you look at the overall key financial net profit is down about 26% at 49 odd crore versus last year of the same quarter at 67 odd crores. In terms of overall NIIs, they are down 33 odd percentage. So all in all, we see a good base for the company, good disbursement for the company's loan, but the overall net profit and NII has tanked on the back of low conversion. So that's something to watch out for.
Right. Tapan, PTC India Financial's profit largely halved on a sequential basis. Do you think this counter could be interesting post the fall in share prices that we have seen today?
Sumit, if you see the last few quarters, their results are not so great. They have a legacy stress asset which is actually bringing the profitability down. Gross NPA no is actually remaining elevated. Credit cost is remaining high, and no, the growth is not so great. Limited growth we can see from here. So PSU governance perception is also there here. So I think the earnings volatility is actually bringing this stock down. Even for the future also, I think there are much better players in NBFC and all that. One can look at it, but I think this is an avoid from my side.
If not PTC India Financial, then any other small cap NBFC that looks interesting?
Well, talking about small cap, of course, Ujjivan Small Finance Bank, I like it. Even Home Credit, that also quite a good stock. You see, wherever the wherever the MFI lending exposure was there, now that is improving. Even we can see that in the Poonawalla Finance also. I think that is where I think the good uptick is coming in because the interest rate is coming down. In future, what will happen, that net interest margin of all these NBFC will go up. So one can look at it, even though these stocks have gone up, but I think next 1 or 2 years it will remain good for these companies. I think credit cost will be at a lower level, and from here I think credit growth will be at least maybe around 20% odd. So I think these companies will be benefited as their NPAs are actually now lower because MFI lending issues are mostly resolved.
Right. Before we move on to our next small cap stock, let's go across to Sharad to understand what's been buzzing in the F&O segment.
Well, thanks for that, Somit. And it has been a very, very kind of, big up move coming in and then a down move. And you can just see now it's almost even Stevens when it comes to the gainers and losers. Eternal Indigo holding up the fort, and Eternal up 5% ahead of its numbers, likely the numbers just after the post-market hours. But Trent, ICICI Bank, BL, that's where the selling pressure is definitely there. But the total mood of the market has changed. For a brief moment, Sensex was above in the green and a good amount of short covering was seen. And largely in the contracts also we see still the markets are in that oversold category as well. BankX also we see the significant downtick coming in when it comes to IndusInd Bank, Kotak Mahindra Bank, and even the pressure coming in HDFC Bank as well. Stock specific moves, that's where we are focusing on. Long build up for Eternal and Dabur. It's convincing when it comes to Eternal. Also looking at the short covering names, these include InfoEdge and Samvardhana Motherson. InfoEdge of course back on a good earnings as well. Apart from this long unwinding coming in for UPL for second straight day, we are seeing a big pressure coming in this counter, and L&T Finance also making it to the list. Short build up, Kalyan Jewellers, it's maintaining that stock. Last time also we had discussed that 1045 stock is down 11%. On the other hand, SRF selling has intensified, it's down almost 7% in the trade. So definitely the market deep gashes are still there in the broader indices.
Thank you so much, Sharad, for all the details. Well, moving on, Harsha Engineers is under pressure in trade today. Now, what's worrying the investors? Let's get Anushi to tell us more about that.
Well, thanks for that, Varsha. So high trading volumes are what we are seeing for Harsha Engineers, 20 times compared to its 1 month average is what we are looking at. 30 times, in fact, versus its 20-day average is what we are looking at. The stock being down for the 4th consecutive session. If you just look at its past performance also, in 1 month, we are seeing about a 1% of a decline. Even in this 1 week, we are seeing about a 5% of a decline. And 6 month also, the stock has seen about 8% of correction as well. So it's not a stock that has done particularly well in these last 3 periods that we are talking about. But just a bit background about the company. It is a manufacturer of precision bearing cages in India, and it is now diversifying into complex and specialized precision stamped and brushing components is what we are looking at. If you talk about its first half results, the company saw about a 6% of a revenue growth. Meanwhile, its margin stood at 17.5% versus 16.8%, and net profit saw about a 14.4% of a jump. Since those results, there have been no such recent developments or updates coming in from the company's side. But in terms of how the conference call shaped up, the management continues to have a cautious commentary in terms of the next 1 to 2 quarters performance. Top line growth, if we see, is majorly going to be domestic led. Your top line growth is expected to be in high single digits. with India growth to be in mid-teens is what we are looking at. However, Harsha Romania is something that we have to continue to see how that particular business would pan out, considering that they made a profit last quarter, and this is after several quarters of losses that we are seeing. So how and what is the EBITDA trajectory for this is something that we should be watching out for. But this is the overall perspective that we have for this particular stock.
Thank you so much, Anushi, for all the details. Well, Tapan, management is cautious for next 1 to 2 quarters. What about you? How are you viewing these stocks? What is your advice to investors?
Even I am cautious. Now, if you see their results is not so great from last, I think 1 or 1.5 years. And if you see there is a clear margin pressure and which look like it will continue for next 1 or 2 quarters also. Export demand is not there. Again, the client concentration risk is there already. Working capital issue is already there. No, it is actually going on a much more intensified year, and that may create a problem. Again, Europe slowdown is impacting the stock. So my take is, I think unless the revenue and profitability don't go up, I think better to avoid this stock.
Right. Next counter that remains, in fact, couple of stocks that remain in focus is Bazaar Style and Cupid. Now, this is after Cupid has announced that they are looking to invest close to 331 crore rupees in Bazaar Style, and this will be via preferential allotment of warrants. Now, the issue price that they have fixed is at close to 328.25, and which was at a discount of nearly 3% compared to yesterday's closing price. So this actually raises the question of why Cupid is actually investing in Bazaar Style, which is completely, I believe, an unrelated company. Tapan, did you go through this announcement? What's your take on this investment coming in from Cupid into Bazaar Style?
No, even actually, I am not also convinced, Sumit, because both, actually area is completely different, and here, they don't have that type of expertise. But I think this investment actually will create a tension within the investor, where the Cupid is going from here. They were doing well in their own business, but I think this diversification looks out of the way, and that is when I think that is why the fall is there. So I'll wait. It will be a wait and watch. Let us see how the things will pan out from here. But from here, I think one should wait and let the complete merger or whatever acquisition happen, then only take a call once the profitability is out.
What is your view when it comes to Bazaar Style?
Bazaar Style is a okay stock, but the problem is in that the segment there is lot of competition, okay, and margin are already under the pressure. You have already seen many other companies in the same sector is facing lot of issue. So I think again the valuation is on a higher side, so it is not giving me as a comfort level to get into that stock. So here also I think we'll have to wait. Again, the way the stocks are currently falling, still the demand is not coming up at a rural and urban area. So my take on even Bazaar Style, I think wait and watch only.
Tapan, I just wanted to ask about Cupid. Now, company is actually, is moving to an FMCG company, right? Being a condom manufacturing and moving into the FMCG products. What is your view on Cupid? Will Cupid get that, valuation of an FMCG company maybe, in next 1 or 2 years? So just wanted to have a context on valuations when it comes to Cupid.
Now, if you see the Cupid valuation, already it is trading at 164 PE. And FMCG normally, see, if it gets want to have that FMCG label, it has to perform accordingly. And FMCG is a very, very tough market. They had a niche area, condom segment, which was quite niche and where they were the leaders. Now coming into FMCG, lot of competition is there. They must have seen that at this sector, condom sector, they may not grow. That's why they want to diversify. But now market will wait and watch, because at this PV, no one I can say the pros is not on your side. I think one has to wait for this, how they are going to perform. It will be a tough fight for even Cupid also to be a top performer at that segment. So I think better to wait and watch, and I think valuation may go down if something happens, acquisition happens.
Just wanted to discuss one more stock with you, Tapan here. If you look at this counter that I was looking at, Shoppers Stop, that stock is down around 5% in trade, and this is after, I believe, the Q3 numbers. But the stock has recovered. In fact, at one point of time, it was down 10 odd %. Any view on Shoppers Stop?
See, if you see trend, shopper stop, everywhere, what is the problem coming? Problem is that LFL growth, like for like gold or SSG growth, same store growth. There, no, it is coming on a lower side. And we can see direct competition from online retailers. Of course, they also have their online segment. But no, here the no much of the sale is happening online nowadays. And even the Diwali season also. And if you see, these companies were earlier, if I talk about trend, they were used to grow at 40, now it growing at 15, 20. Even Shopper Stop also, now the overall the sales growth has gone down. Now, if you don't perform, the valuation which you have been given earlier will go down, correct? And that is so trend is coming down, Shopper Stop is coming down, and still I don't see they are bottoming out. I think they has to perform at least SSG growth, same store growth should be at least on a maybe 10 to 15% at least in order to give the comfort. Until that, I think it's a complete avoid.
Thank you for joining us and giving us the perspectives on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement.
Hello and welcome to NDTV Profit. I'm Sharad Dubey and with me is Mahima Vastrajani, and well, we are welcoming you to Ask Profit Afternoon Edition, where you'll send in your queries in the WhatsApp. You can see up and the numbers flashing down where you can send in your stock queries, and we'll ask our technical and fundamental guests. Just a short check on the markets. There has been a recovery after what we saw. The Nifty, if you could just pull up, that was down less than 25,200. A recovery was made, short covering was there, but it's still very volatile. And rupee, that is at record levels at 91.7. That's weekend pass. That's the key concern of the markets. But moving ahead, now important development has come in. Our government has formally invited financial bids for the strategic disinvestment of IDBI Bank. Shrimi joins in with more details. Shrimi?
Yeah, a very crucial development coming in. Top sources in the government told us that government formally invited the financial bid for its strategic sale in the IDBI Bank. In fact, this is coming after, a host of security and regulatory clearances, and what we've been given to understand that potential bidders have been given 4 weeks of time to file the financial offer. Now, what will happen next? That once the potential bidder will file for the financial offer, the government, through cabinet approval, will announce the winning bidder, and they are aiming to announce it by end of March. And post that, it will take some more time, given the fact that it's a, very sensitive sector. And both government and RBI is involved throughout the process. So perhaps the transaction would close in the next financial year. If you remember in the Air India case as well, we have seen that it will take around 4 to 5 months of time between announced bidder and the final transaction to actually get sealed. So as far as fiscal, maths is concerned, the fiscal context is concerned, the receipt from this disinvestment, if you see under the proposed transaction, both government and LIC is expected to sell 60.72% in IDBI Bank. If you see the total valuation, which is coming to around 75 to 76,000 crore, so that receipt will reflect perhaps in the next financial year. Now, as far as disinvestment target is concerned, that's also crucial ahead of the budget, because the government will take a call on the budgetary estimates as well. Disinvestment is no longer is a separate accounting. It's a part of capital miscellaneous receipt. And that the target for this financial year is actually 47,000 crore. And so far in this financial year, the government has garnered around 8,700 crore. So clearly a shortfall. But this shortfall is not actually concerning for the government at this point of time. But the main big story here is that government is moving fast on the IDBI disinvestment, which has been dragging for some time. But now with calling for financial bid, we will see, they are getting close to the transaction, and it will be sealed perhaps by, between July and August is what the sense we are getting.
Thanks a lot, Shrimi, for that. Interesting development coming in for IDBI Bank. I just want to show the chart as well. IDBI Bank, what's the reaction happening in the stock? If you could just pull up the daily chart, and we see, yes, there's a good up move coming in the stock itself. But now joining in, we are having our guest for Ask Profit Afternoon Edition, Kunal Rambia, Fund Manager and Trading Strategist at The Streets, and Prashant Tapse, Senior VP Research Analyst at Mehta Equities. Good afternoon to you, gentlemen. I'd like to start with Kunal. Views on IDBI Bank before we move on to our viewers. Kunal, what's the view coming in? Interesting update coming from Shrimi on the speeding up of the process of the disinvestment.
Good afternoon. Thanks for having me on the show. So overall formation on the IDBI Bank is pretty much sideways, consolidating since almost June 25 so far. And this counter has not shown any extraordinary moves, though it's a up move, but it's a muted up move. So I think with the stop of 90 levels, one can definitely accumulate this counter. The volumes are pretty good, which is supporting the muted up move. So with the stop of 90, I think one can initiate the trade at this level where the risk reward ratio is extremely favorable.
Right, now let's come back to our show, your Ask Profit Afternoon Edition, and these are the numbers you can call in there. These are the numbers it's flashing on the screen where you can put in your queries and we will get in all your answers. First one is, of course, Venkat here, and he is holding 45 shares of CE Infosystem, that is MapMy India. The price is at 1792 rupees per share. He needs a 6 month suggestion on this, and in recent months, nothing has happened. MapMy India, Prashant, I want to get you on this. What's your view on this? What should Venkat do?
I think he should try to be avoiding this stock at this point of time. If he is holding, I think it should be the exit call from my side. If you see the financial numbers, the valuations are very expensive at this point of time. Plus, the quarterly earnings are not so good, so that I will have a very positive outlook. For me, it's a negative outlook for the stock for the near term as well as the long term. So exit is my call.
So the exit call coming in for MapMy India. Another query from WhatsApp is Suman from Kolkata. 30 shares of Zaggle prepaid he has. Average price is roughly at 309 rupees. Is the right time to accumulate? Good to hold for long term? Kunal, your views?
So again, the recent correction in the market has brought almost all the counters near to the support level, and this counter is also one of them. The strong support is near 270, though as of now it's near to 280. If the counter consolidates near this 270-280 mark, I think this can offer a good risk-reward ratio. Overall trend is definitely negative, but from risk-reward point of view, I think, this is the level to watch out for. Keep a watch on it for 2-3 days. After consolidation, you can initiate a buy with the stop of 270.
Right. Of course, a good time to enter for L&T. That's actually for Interglobe Aviation. That's the query coming in from Suresh Babu. He's from Hyderabad. And the question is Interglobe Aviation for long term. Kunal, I want to get you on this. Is it a good time, or is it the valuation still kind of on the higher side?
See, to be honest, after this chaos, this counter has come down significantly, right? And from those 6,200 levels, we are near to 4,600. Even if I look at the overall long-term trend on the charts, which are like 3.5 to 4 years trend, this counter is looking very attractive to me. We turned bullish on this counter somewhere near mid of December, where the counter first time made the low of 4,800. In fact, counter is still at the same level. With the stop of 4,500, it's a clear buy. And the upside can be till again 5,500 to 6,000. We are just waiting for the dust to settle, but overall the trend is very, very strong on the long-term charts.
All right, that's pretty much interesting on that. But Mohan from Bengaluru is joining us. Hi, Mohan. Of course, the markets are very dicey, but which stock you are holding?
I'm holding some, I bought 10 shares at Thangamayil Jewelry at the rate of 1,432. I just want to know whether can I add these shares more or for long-term perspective.
All right. Congratulations, Mohan, on the profit. And you have picked the right stock, actually. The momentum is very strong. And from the HNI circles, what I'm hearing is the significant buying is happening across the DIs. Prashant, short-term view on Thangamayil. Should there be some more addition in this counter, or a little bit of profit booking is there right now?
I don't advise a new fresh addition at this point of time. I think the way how gold has rallied and the way how the earnings have been presented by the gold jewelry businesses. So I think there should be some kind of profit booking attempt, at least 50% from the current levels, or trail your stop losses to 3,700. But it can be a two-way to hold the stock for the short term.
All right. Now Udit is joining us from Mumbai. And hi, Udit. What stock you're talking about here?
Good afternoon, Sarath. I am talking about New Gen Software. I hold around 50 shares of New Gen with 1030 a piece. Huge loss. I know circumstances are dictating terms now. I understand that. In spite of that, if I discount that, is this stock still good enough to hold on to, or do I average at this level, or do I get out booking the loss?
Yeah, Udit, that seems a concern. Your buying price was 1,030 and now it's, it has gone down almost 30 to 40 odd percent. Kunal, I want to get you on this. Is it the right time for Udit to actually, average up or exit the stock? What's your view on that, New Gen Software?
So no, certainly not to average out, first of all, because if the counter is in downtrend, I definitely agree on one point that the risk reward ratio might be favorable, but unless this, the falling knife stops somewhere, we should not be holding this counter. Now, if I look at the broader term, the chart of the counter, this counter was having a strong support near to 775, 780 levels. I'm talking from 2024 consolidation bottom till now. But it has decisively broken that also, and the volumes are very, very high. So I would advise to stay away from this counter, because now already it's in loss and our viewer is holding it. Wait for a dead cat bounce somewhere near to 775, I think he should book the losses and move on to some other IT companies which are literally looking good and the momentum is really building strong.
But if Udit is there with us, just can you recommend Kunal which IT stock can he go?
So I'm betting honestly on the large cap IT counters. The first is Infosys. Today also it's trading at 1650 days high, and the overall trend since last 3 to 4 months is very, very positive. So with the stop of 1550, we are long on Infi and the target remains at 1800 to 1850. The second is TCS, where again the trend is very, very muted but positive. Near to the support with the stop of 3000, one can go long on TCS also. I think these are two better counters, though the recovery in Newgen can be faster. But here we will have a risk reward ratio which is favorable and the capital protection which is a must in such kind of markets.
Definitely some kind of recovery also happening in this large cap IT names. But now moving on, Siva from Hyderabad, he is holding 1000 shares of CG Power and Industrial Solutions at 650 rupees per share. Of course, there is a loss. He has stated it's a huge loss, but it's not that big loss also, to be honest. At these levels right now, the company's fundamentals are still decent. Kunal, is good time to average out or exit the stock? Feels like it can be a good average play.
So beginning of 2025, this counter was near 530. From there, a big upswing was seen and again counter has reached the same level. Interestingly, on 19th of Jan, the highest volumes were recorded. The highest volume of the entire year were recorded on that day. We also shortlisted this counter, but only we were waiting for the higher top, higher bottom to just confirm the trend, which did not happen. But yes, this level is very attractive. If the counter manages to close above 590 to just 600 level, which is a round off level, we will definitely be into it. And I would advise our viewer also to average out at that point in time with the stop of 560. So with the stop of 560, buying above 600, and then let's ride the rally if at all there is a significant recovery.
That's the view coming in. But Hanish from Bengaluru joins in. Hi Hanish, which is the stock you want to ask our technical or the fundamental guests?
So I would like to ask on with respect to SBI card as well as Tata Motors, but anyone is trying for me right now?
Right. So it's Tata Motors CV, right? Okay. So there are two stocks, Tata Motors CV and SBI from Hanish. I would like to take the technical views first. Prashant, your views, which would be better, Tata Motors CV or SBI in current levels?
I think Tata Motors CV can be a better stock in this market. I think that is making all-time highs, and the way how CV cycle is going forward, I think that is creating a lot of good earning visibility for me. So currently, I think continue to hold this stock at this point of time, and even if you can add more, adding more at this point of time is highly recommendable. And SBI Cap, I think that is also a good stock right now. NBFC, that is a great company right now to accumulate. Going forward, the consumption story will be more on the spending cycle of a credit card. So SBI credit card can be a best stock at this point of time.
All right. Apart from this, Kunal, even your views on it, SBI or Tata Motors CV, fundamentally, which looks good now?
See, honestly, so we have created one of these strategies on it, and that's a short-term derivative strategy I would like to share. That's on Tata Motors CV. The only reason being this counter actually rallied multiple times from 320, 330 levels itself since March 2022. Post this, the adjustment of the prices. So I think the downside on this counter is very minimum. So with the stop of, I think, around 325, one can go long on futures and short straddle. Now, short straddle logic is that even if the counter remains sideways, we still end up making something for this remaining month and for the next month. And if there is a positive rally, you are anyway long on the future. So upside is protected, upside is kept, but still 5.5% on the upside can be really good on large cap counters. So a very strong view on Tata Motors passenger vehicle from trading point of view. And if someone wants to go ahead with fundamentals, I think obviously SBI is a better play because overall the trend has been really strong. And even in the correction, this counter has not really come down much.
All right. Okay. So that's the view coming in on SBI as well as Tata Motors. But moving on to our next caller, Ashok is calling us from Andhra Pradesh. Ashok, hi. Very good afternoon to you. How can we help you today?
Yeah, ITC, can we buy at this price level? I have already 400 shares with average price of 355.
Okay, and this is, I believe, from a long-term perspective.
Yeah.
All right. Okay, Prashant, I'll come to you on this one. ITC, what's the view like?
Yeah, continue to hold and add more at this point of time. I think the way taxation will always keep on hitting this kind of sector. Every year there is some kind of news from the government keeping some extra excess duties or some taxes on these kind of goods. For me, at 320, 310 is a good level to start accumulating for long-term investors. Again, it's a very big conglomerate having a lot of other businesses also. So very good at this point of time.
Okay. All right. So that's the view coming in on ITC. We've got the next question, which is from Ananta, who's writing us from Vijayawada. She's bought around 405 odd shares of Stalin India Fluoro at an average price of 261. Now sitting on a loss of around 27,000 odd rupees. Wants to know if she should average out at the current price or exit. 1 year is the time frame. Kunal, I'll come to you on this one. What's the view like?
See, again, I would avoid such counters. The only reason being, these counters are either in upper circuit or the lower circuit, and the risk management goes for the toss, whether you're a short-term or a long-term trader. So I would avoid this counter for now, for the sake of the view on the chart. I think 185 can be the good support, and below that 155 can be the next support. Keep these levels in mind, but I would advise an exit on this counter as early as possible.
Right. Now we are moving on. Sunil from Mumbai. He's calling. He's holding Angel One at 200 shares. Hi, Sunil. What would you like to do with this counter?
Yes, sir. Yeah.
Yeah.
No, I just want a short-term target, sir.
Okay, short-term targets for Angel One.
And stop loss.
Okay, and stop loss. Short-term targets and stop loss coming in for Angel One. Prashant, what's your view on that?
I think the stop loss should be anywhere between 2350 on a short-term basis. But again, very much positive on this stock, on the sector as well. The way how BSE has performed, the way volatility has created a lot of good earnings show by Angel One. So I think BSE, Angel One as well as Grow. I am very much positive on this. Obviously, 2370 can be a stop loss for him for short term.
All right. Apart from this, another query coming in, and that is from Prakash from Chennai. He's having a tactical bet on UPL. It's invested at 775 rupees. Roughly 250 shares is there. He wants his view, of course, on the long term and the short term. First of all, Kunal, I'd like to ask you on these levels.
Absolutely. Today's low was the extreme low, which was seen on the counter 670, and in fact, it has recovered really sharp from that level. 690 is a present level. I think this bottom might remain intact for the coming days if the counter is in the positive trend of last 1.5 years, if it wants to continue in the same trend. So yes, with today's low as a stop, one can definitely think of initiating a fresh long on this. But just one question, and that is that this counter has come down significantly. So if there is a good spike, and if you feel that from the short term perspective, this 5.5-6% is enough for you, take an exit. Otherwise, trail the stop loss. With the stop of 670, it's a buy as of.
All right, so that's the view coming in on UPL. We've got our next caller. Neeraj is calling us from Gujarat. Neeraj, hi, a very good afternoon to you. I believe you focused on Vedanta.
Yes, I hold around 15,732 shares and my purchase price is 248 per share. Now, I'm confused whether I should book profit or should wait for company allocation. Like I have heard that the stock is going to split in 5 different companies.
That's correct. Okay, Neeraj, got your question. So I'll take this up with Prashant. And Prashant is already sitting on profits of over 66 lakh rupees. Should he wait for the demerger or should he book his profits?
I think a lot of demerger valuation has been discounted in the price. The way stock has been already doubled in last 52 weeks. The low was 362 and the high is almost 388. So at least 50-60% profit booking should be done at this point of time. And again, rest of the stocks can be taken care with respect to the demerger. I think before March, the demerger will get cleared. So upside is very limited from the current level. 720, 730 can be a best level to even book more after booking 50% from the current level. So my advice is 50% book profit, rest take it to 720.
All right, okay, so that's the view coming in on Vedanta. It's time for our rapid fire round for Ask Profit. Prashant and Kunal, you both know the drill. Try to keep your answers as short as possible. We'll try to throw as many questions as possible. The first question that we have is from Rama Devi, who's writing us from Hyderabad. She's invested in Hindustan Copper. The purchase value is 571 and 174 is the quantity. Should she continue to hold from a short-term perspective or not? Kunal, your view?
Absolutely hold with the stop of 525.
All right, there's Chandrasekhar from Bengaluru. He's holding 10 shares of Vari Energy's average price is 1900. Can he hold for a long time? Prashant?
Exit at this point of time.
Okay, Sterling and Wilson is the next one. The person is holding 150 shares at the levels of 210. Can I buy, hold or sell from long-term perspective? Prashant, your view?
Buy for long term.
All right, Guru Shankar from Pune, he's holding Eternal Zomato. That's around 75 stocks at 74. There's a profit of 16,000 rupees coming in. Should he hold the stock or sell, Kunal?
Looking at the profit, one should not exit. Yeah, it's a hold with the stop of 275.
Okay, the next one is on Paradeep Phosphates. Google from Odisha wants to know if this is the right time to make an entry. Kunal, your view?
It's an exit as of now.
Interesting. Sterling, Wilson and Renewable Energy, 150 shares were bought at around 210. Good time to sell or exit or even average out. Kunal?
I think the PO answered, but still, I'm very bullish on this counter from the risk reward point of view, waiting for the breakout of 210. One can add about that level.
Okay, the next one is from Bhaskar Reddy. He's asking whether this is the right time to buy HDFC Bank. Prashant, would you recommend that?
As a long term, yes, buy at this point of time.
Vasu Patel, he is asking, should he invest in Gravita? Current holding is 1,000 shares, or should he average more out? Prashant?
Considering the recent fall, I think yes, one should start buying at this point of time.
Okay, the next one is on Praj Industries. Abhinay Gupta is holding 185 shares at an average cost of 446. He wants to know if he can hold, buy or sell. Kunal, your view?
So it has broken the main support, so exit for now, but re-enter about 305.
Alright, okay, so that's the view coming in on Praj Industries. But with that, we're completely out of time on this edition of Ask Profit as well as Rapid Fire Round. Kunal and Prashant, thank you so much for giving us all those insights and helping our viewers solve those queries. But with that, as I said, completely out of time. India market close up next. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions.
Hello and welcome to India Market Close. I am Sharad Dubey and with me is Hiral Dadia and Somit Sarkar. We have seen a very eventful day actually. The markets actually cracking below the 25,000 mark, also dipping below the Nifty 200 DMA levels as well, but then a recovery also coming in and now a slight bit of correction from the day's top levels as well. And Nifty still down 80 points. Concerns are still there in the market. I will be listing these concerns in some time. The Nifty Bank, that has seen a much more bigger fall and it's down 600 points. It hasn't recovered that much what attempt Nifty tried to make in the day's time. But yes, the advance decline ratio earlier, it was really bad, almost 1:10 in the ratio for the bears, but then slight increase definitely has happened. But nevertheless, the markets are still traveling, with a negative touch. Let's pull out the Nifty constituents to show you what has happened here itself, and largely we see Eternal over here. The stock is up 5%. The company will be coming out with its results. Apart from that, Indigo, Hindalco and Max Health, Ultratech, all of them showing strength in the trade. But where the fall is happening, this is of course coming in from HDFC Bank, ICICI Bank. That's where the sell-off is there. Apart from that, Nestle, Trent and BEL also make it to the list. Of course, the India VIX levels, that has also jumped up 10% and near the 14 odd levels. But definitely the market is in their oversold territory. Let's look at the sectors which would be in focus, what the sectors have been doing, and largely we are back to the metal and PSU banks where we had seen some strength, but again we are in a sea of red and barely Nifty Infra is there in the green, and big sell-off especially in the defense and the consumer durable segment. But to put the perspective in the mid-cap space, stock-specific moves, earnings, all the details Hiral is getting. Hiral?
Absolutely, Sharad. The pain is absolutely deep when you talk about the broader markets. If you pull up the mid-cap 150 or even the small-cap 250, you'll see the kind of cuts that are coming in on both these indices. 1.3% on the mid-cap 150, and if you have to look at the small-cap 250, 1.3% is the kind of cuts. Let's just pull up the intraday charts of both the indices, and that will tell you. Because the recovery that has come in terms of the benchmarks is critical. We did see that recovery come in the broader markets as well. Again, come down, but we're not at the day's lowest levels on the broader markets as well. Overall, if you see in terms of individual stocks, let's look at the ones which are gaining first. Credit Access, MRPL, Eternal, India Mart, KPR Mills, J&K Bank, smart gains coming in all these names. What's losing out? Kalyan Jewellers, a 12% downtick coming in on this counter. SRF continues to trade under pressure. Cyient is down, Force Motors, Laurus Labs, Paytm, Ciet are few of the ones which are losing out in trade. So interesting moves, Somit, that we're picking up so far in terms of the markets as we speak. But one stock that is in focus right now is a Supreme Petro. Anything that you're picking, Supreme Industries, I beg your pardon, anything that you're picking up on that front before we speak to the management?
Well, pretty much inline set of numbers is what the street has said. Now, if you look at the EBITDA number, that came in at close to 314 odd crore rupees, and analysts were estimating this number to be close to 304. Margins came in at 11.7 as against estimates of 11.5%. The piping volumes, now that grew nearly 16% on a YOY basis to close to 147 KT, and piping realizations that came in below by around 6 odd % on a YOY basis to close to 124 rupees per kg. Blended EBITDA per kg also 10% down to close to 17.1%. But let's go across to MP Tiparia, the managing director of Supreme Industries. Sir, when it comes to the FY26 volume and margin, are you maintaining your volume and margin guidance that you had given earlier? I believe the volume guidance was 12 to 14% that you had guided for FY26, and margin was close to around 14%. Are you maintaining that guidance?
No, we have given a guidance of plastic piping 15 to 17% volume growth. And we maintain that we will grow 15 to 17% by volume in plastic piping system. And margin side, we will grow between 13.5 to 14% overall in the company.
Right, but I believe the total volume guidance was 12 to 14%.
You are right.
So that is also maintained for FY26?
We maintain.
And we had seen a lot of the volume numbers were not that great so far. But are you seeing a pickup right now when it comes to overall piping segment volumes?
We are quite happy that we have grown this quarter 16%. But just to share with you that in PVC resin, PVC plastic piping system, our company has grown 14% first 9 months, where the country has a degrowth of 7% by volume in PVC in plastic piping. As per the raw material producer. So we are happy that we country had a 7% degrowth, we had 14% growth.
And just one question from my side on the PVC pricing. We have seen a severe downtick coming in. Do you expect further downside on this PVC resin prices, or they have stabilized for now?
Dear friend, already too much down happened up to December. Since January beginning, the price has started inching up. Several producers in the worldwide have to close their operation. Some have reduced their operation. It became uneconomical for them to produce PVC. So we do not see, based on current crude price trend, we do not see any possibility of PVC price to come down. Actually, starting from 1st January, PVC prices are inching up.
Mr. Taparia, good afternoon. Hiral on this side. Now, PVC prices have seen a drop as well in the third quarter, right? Now, the stakeholders want to know from here on, what was the inventory loss, if any, in the third quarter? And in terms of outlook for PVC price stabilization in the fourth quarter?
One thing, I can say in the first 9 months, there was fall in all the polymer prices. So our company may have suffered an inventory loss between 100 to 120 crore rupees 9 months. Now this quarter, we do not anticipate any further inventory loss coming. And we believe that prices will slowly and surely, definitely on PVC and other polymer also inching up.
Mr. Taparia, hi, Sharad here. I was just checking your segments, industrial product segment, that's where the degrowth has come in. If you just see on a 9-month basis, which we have compared, is there kind of a demand pressure in the industrial product segment? And if it's there, will it bottom out in the coming time?
Different. We are only supplier of component to the industrial companies. So the component which are industry we were supplying for them, they had a demand poor. So we cannot forecast about the demand, how they are going to fare, but we don't consider any great happening in the industrial component segment.
Okay. Mr. Taparia, the question that we are looking at over here is, now you are talking about the margin guidance of 13.5 to 14% for FY26, correct?
Yeah, right.
Okay. And currently your margin is at around 11.7%, correct?
And so the numbers are already with you.
Correct. No, so my question is, from a 11.7% in this quarter, a 12.3% in the previous quarter, what will lead you to achieve that 13.5 to 14% margin?
We do not anticipate any more inventory loss happening in any polymer in this quarter.
Okay, so that is what will help you to gain back that margin loss that has happened. Is that what you're saying?
That will prevent the erosion in our margin.
Okay.
9 months of our margin were eroded due to the too much fall, which was not seen like that.
Understood.
All the polymer, everywhere the price has fallen.
Okay. Now, when we talk about the Wavin business integration, the 250 crore acquisition of Orbia Wavin's business, how has that progressed? What is that revenue contribution you will see from this business in FY26? And you have your industrial products business, which has seen a 13-14% decline in terms of revenues. So, is this decline or has this segment actually bottomed out from here on? Two questions.
No, first I talk about the Wavin. We had a capacity of 71,000 ton, and the capacity is fully integrated, and we are now able to run the plant properly. Our overall capacity of the company around 1.2 million ton, and we anticipate that we may sell between 60 to 65% in this year overall. And the same capacity of Wavin also have been put to use, and goods are selling. There is no issue. Industrial component, as I said earlier, depend on our customer, and if their demand of that particular model is weak, then our demand in turn will be weak. But industrial segment in our company also comprise material handling system and also cylinder. We are having good business growth in material handling system and good that we are expecting for cylinder.
Right. Thank you, sir, for giving the entire views on the company and growth outlook going ahead. And it's very good to talk to you. But moving on, we are joined in by Kunal Shah and Dharmesh Kant. Thank you, gentlemen, joining in. Kunal, I just wanted to get your views in. Just right now, we just spoke with Supreme Industries. What are the technical levels suggesting?
I think for Supreme Industries, we have already witnessed a good correction from the higher levels. The important levels to be watch out here for Supreme Industry will be 32.20, 32.30 zone. That has been the demand zone for the stock. If we see any reversals from those levels, that would be a good opportunity to go on the long side. The immediate hurdle for the stock is at 34.20, and once that is taken out, you can see the short covering coming toward 3600. So overall, the setup is bullish. It's a buy on dip stocks. Dips to be utilized as a buying opportunity. A real strength will come once the stock surpasses 34.20 on the upside.
And Kunal, Nifty and Nifty Bank, I just wanted to get your views in also, because it has been very volatile. Very important levels were breached. Nifty Bank also not showing that much strength in the recovery as what Nifty has recovered. What will be the key, technical levels to watch out for, and is there any options trade also?
Okay, so firstly for the Nifty index, the fall what we have seen from the top of 26,373, we have already on the technical charts have completed the wave 3 as per the Elliott wave. So here you might have some technical bounce coming back for the indices towards 25,300, 350 zone, which is the resistance zone for the markets. And again, any rejection from those levels will lead the markets toward 24,800 on the downside. So the downside level, what I'm looking out is 24,800, 750. That is the maximum downside is what I'm looking at. And on the higher end, the resistance continues to be at 25,500 mark. So I think now this is going to be a broad range. We are heading towards the budget. So probably market will consolidate at these levels. 24,800 to 25,500 would be a broad range in which I'm expecting Nifty to consolidate. Today we have breached the 200 DMA for the Nifty index, but we have reclaimed that again on a closing basis. We are trading right now also above it. So probably a doji candle will be formed in today's trading session, which indicates an indecisiveness. So probably a consolidation from here on, and then probably we'll see the correction going forward post the budget. So overall, the view remains negative. Pullbacks should be utilized as an exit opportunity. Now the Bank Nifty. So Bank Nifty was the one index which was strong, and in today's trading session, in yesterday's trading session, we breached the 20 DMA, and then we had a follow-up move in today's trading session. Now 58,700 is a key level to watch out for. We have seen multiple bounces from those levels, and in today's trading session, we breached that level on an intraday perspective. But again, now we have reclaimed that levels on the higher end. So if we get a close below 58,700 in today's trading session, expect some more correction in the Bank Nifty towards the mark of 57,600, 57,700 on the downside. So for Bank Nifty, till the time 20 DMA is not reclaimed on the higher end, that is 59,500, the view continues to remain as a sell-on rise mode for the Bank Nifty.
Right. Shifting focus to another stock that has declined significantly in the last couple of trading sessions. In fact, UPL has come down nearly 15% after the company announced that it will, in fact, not after the company announced, they came out with the RHP or DRHP of the subsidiary that is Advanta Enterprises. Let's get in Varsha to understand what does this mean for UPL and what could have been the reason behind this fall, Varsha?
Well, I think this is all a profit booking that the market is doing after this news. Let's see how Advanta Enterprises is important and what this means for UPL. Talking about Advanta Enterprises, which filed DRHP with IPO size of around 36 million shares, that is 3.6 crore via OFS, and the UPL will sell around 2.8 crore shares. Now, Advanta is UPL seed business, if you see, and why Advanta is important, let's let's highlight on that. It's a seed vertical of UPL, global hybrid seeds player, and among top 10 seeds companies globally. Now, UPL holds almost 78% of stake in Advanta. Rest is owned by KKR and Alpha Wave. Now, talking about the long-term value creation. Now, if you see, Advanta has grown nearly 3.5x in USD terms over last 10 years and has a revenue CAGR of around 18% in last 5 years, with EBITDA CAGR of 23% and EBITDA margin of 25% and ROC of more than 25%, which is highest among its peer companies. Now, talking about the impact on UPL, how the listing of Advanta Enterprises will benefit UPL. So, objective is to reduce UPL's group debt, and the proceeds will be used for the debt repayment. The net debt EBITDA, if you see, currently UPL has almost 1.6x, which is expected to go down to around 1.2 to 1.3 times, a massive reduction when it comes to overall debt. Talking about the valuations, of the Advanta Enterprises, considering the FY26 net profit of around 1,000 crores, with taking multiple P ratios, case 1 at 30, if we take the P of 30, the Advanta's valuation comes at around 32,340 crore. That's the market cap we are expecting post listing. On the a bull case, if you see, taking around 1,000 crores of PAT with 40 PE, considering the industry average as well, the company's valuation comes at around 43,120 crore, which is 51% of the UPL's market cap. So overall, this is beneficial for UPL considering the reduction of debt on its balance sheet. But yes, market is actually booking profit, and overall, considering the mood in the market, UPL is also down in trade.
Well, thanks a lot, Varsha, for that. Dharmesh, I want to get you on this. UPL Street is punishing the stock a lot, it seems, for the last 2 trading sessions. Is there a value emerging, and what's the outlook looking like for UPL? Of course, the deleveraging is also at play now.
Yeah, I mean, it all depends upon what kind of a valuation multiple this entire thing happens and how much is the stake been diluted by. The money comes back to UPL, and among the partners, how much is the OFS being structured. But Advanta was a cash cow for UPL. I mean, out of the revenue, 12% was contributed by Advanta, and with a consistent, profit margin of around 17%. So that was a contribution which Advanta did consistently, irrespective of UPL other business going up and down. So on console level, it was a balancing factor. So let's see the entire deal structure, how it goes through, and then how much of that part of the profit will go out of the consolidation and it gets converted into minority interest has to be seen. On the face of it, it does look that UPL will get some leverage on its debt portfolio, but at the same time, its own business of chemicals, agrochemical and all has not been doing that great. So that's the reason I think people are taking some money off the table of UPL.
Yeah, Dharmesh, just stay with us very quickly. We need to just cut across to an exclusive conversation coming in from Davos, where SBI Chairman C.S. Sethi is in conversation with Tamanna Inamdar, Managing Editor of NDTV Profit.
Thank you for that. Yes, in these cold climes and in this beautiful backdrop, we're having a conversation with the State Bank of India Chairman, India's largest bank, over here at Davos, where I must tell you the ongoing commentary is that India seems to have taken over a lot of the promenade. Sir, thank you so much for coming into our studios and speaking with us. Absolute pleasure. How's the trip going so far?
Thank you, Tamanna, for having me here. So far, so good. I think a lot of fruitful meetings and also a lot of fruitful discussions where you could participate and listen to the people what exactly is happening in a very difficult geopolitical environment. Yes, It's been a good trip.
In a few hours from now, everyone's waiting to hear what Trump says. But in terms of what you are looking at here in Davos, a little birdie tells me that a lot of your conversations are around AI and adding that kind of tech to the prowess of State Bank of India. Are you shopping here, speaking to possible partners?
No, we do have partners and, of course, long-term partners. More importantly, my conversations with them is for the last 3 to 4 versions of Davos, we've been talking about AI. A lot of proof of concepts have happened, and we have not seen adoption of AI in the BFSI space at scale. So my venture here is to understand how do we bring AI adoption at scale as big as State Bank of India with 530 million customer base, that you need to have something which will change the customer experience and also improve the productivity of our employees. I think this is what I've been focusing on. But what I believe now is that a lot of entities have moved away from POCs to adoption. And adoption also has a critical element in the sense that you need to have large-scale change management, the way how people use both of your employees as well as the customers. So this has been my focus. It's been a good conversation so far.
How do you see AI changing both the customer experience and your core requirement of financial inclusion? As India's largest bank and largest public sector bank, that's also a big part of the mission. How do you think that this can really change the game from that context?
So it's not that we have not used AI in the past. What we are talking, obviously now moving from the predictive analytics to Gen AI and agentic AI. So we were one of the early adopters of AI models, both for purpose of the customer service, lending, for instance, and also fraud risk management. If you really see cyber protection of our customers, where transaction monitoring happens, and also we need to protect them from the cyber frauds. A large-scale Gen AI adoption is happening in SBI on the fraud risk management side. But we can definitely use in terms of creating hyper-personalization. Today, a lot of people receive a lot of calls on many products, right? How do we cut down on them? What Tamanna really requires, only those calls should go. I think
Indians will thank you if this is a model everyone can adopt.
This is what AI is capable of doing, in the sense that you don't disturb or you don't trouble the customer as much because you have not understood the customer much. If AI tools can provide that insight in terms of what customer needs and when does he or she wants to be contacted for. I think these are some of the things on the customer side. But more in terms of the customer protection side, I think agentic AI and AI have humongous applications going forward.
Now, let's come back to a bit of the domestic business. I know we're sitting here in Davos, but we must talk about what is your outlook on urban consumption. Some of those concerns which are being talked about there, are you actually seeing it? Because you will be in the right position to see if that kind of consumption is coming in. A lot of the conversation that after the GST rationalization, it is banks who will see that uptake as people want to go out and consume more and take loans to do the same.
So we did see. Of course, I won't be able to speak about our Q3 numbers because the results is scheduled sometime during February. But broadly speaking, I think consumption demand helped in terms of growing some of the consumer loans. What we have seen is that, since you mentioned about urban consumption, the consumption numbers which have been announced now shows that the rural consumption is picking up faster than the urban consumption. And another, dimension of the consumption is that it has been more in non-discretionary items. That means, auto sector, white goods have shown much more uptick than the discretionary or non-discretionary spending. Sorry, discretionary spending was more than non-discretionary. So I think GST has to help maybe the lower middle class to consume more, That consumption in the urban areas is yet to be seen. But on the discretionary spending, we have seen a significant uptick, both on the auto sector as well as white goods.
So I won't ask you about numbers because, like you said, it's the silent period. But just want to get a sense of how you're seeing deposit growth. Deposit growth has been a pain point for the industry and for several reasons. How do you look at it as the largest player?
So the kind of financialization, the overall financialization of savings which have been there, and the unconscious asset allocation which has been happening. People earlier probably used to have savings, and savings are destinations were only bank deposits. But today you may not call it asset allocation in the truest sense, but you would like to keep some money in the mutual funds, and some money goes to the insurance, some to the pension fund. So which means that I personally believe that it is a kind of irreversible movement which is happening from the bank deposits to the other alternative financial instruments. It may change if the stock market is doing, probably more flows will be there towards that. But broadly, the banks have to live with a lower deposit growth rate. That's one. Number two, I think we also have to see that how do you structure your balance sheet? Do you want to structure your asset growth purely based on deposits, or you can go to the market and some of these savings which are currently going to various instruments have to come to the real economy, right? Back to the real economy. They are coming in some form. But ultimately the banks have to build their balance sheets based on not only on deposits, but other alternate instruments, market instruments, certificate of deposits, bonds. I think this is inevitable. I think that will definitely happen.
Eyebrows raised when, a bank of your size goes after certificate of deposits.
See, this is. I mentioned certificate of deposit to make you to ask me that question. So I think it's important to realize that every bank in India has to look for alternate sources of funding their balance sheet. This is what happened globally. If you really take my New York office, for instance, 75 to 80% of the balance sheet is built on market borrowings, not on deposits. So as the individuals and households diversify their saving instruments, the banks also have to diversify their source of funding.
Just one last point. We've talked about deposit growth slowing down. Interest rates are also coming down. I'm not going to ask you for a number, but margins or 4% margins, thing of the past for now. Banks have to look at other ways and avenues.
The margins, I think, are different for different banks. The way we structure our liability franchise, what kind of asset segment what we are doing, what kind of risks we are taking on the balance sheet, they all determine our margins. But broadly, I think the margins are likely to moderate as we go forward. It is also a fact that, while the asset side, that is loans, are getting repriced faster, the deposits are taking a little longer time to reprice, which means that the margin pressure will be there. But as I mentioned earlier, I think on the guidance side, we are still sticking that most of the banks will be able to maintain the margins, not because of anything, but the better management of the liability side.
You also have a big listing coming up for State Bank of India Mutual Fund, SBI MF, and that's, the red hot space, really. But do you think that there's that kind of an appetite for so much paper?
So the investor community is also, very diversified. I think this is one stock I believe that is widely being looked forward to. We are the largest AMC in the country, and we had created value not only to the investors, two of the investors who backed the company, but we created value in the ecosystem of the overall mutual fund industry. I think it's a good stock to invest in.
There you have it. One last question, sir. We're speaking ahead of budget. What would you hope to see as the message that India gives? And I think this time the budget is going to be important because it's a domestic budget, but it's coming at a time of so much geopolitical crisis and turmoil. What is it that you are looking forward to?
I think the whole the financial system obviously looks at budget from a directional point of view, and broadly, it is expected that fiscal management, which has been the hallmark of this government, will be maintained. And if you see, despite so much geopolitical uncertainty, the resilience which has been shown by the Indian economy is admirable. There is absolutely no doubt about it. So the government, we assume that would continue to be on the path of fiscal consolidation and fiscal management. And whatever, I think, on the taxation side, they've been very liberal in the last 12 months, if you see, both on the indirect taxes as well as direct taxes. So we don't expect much on the taxation side, but I think more in terms of ease of doing business and also very clear direction that the fiscal management continues to be the key.
Well, that's great, sir. I hope we get to a chance to speak to you after the budget and get your views then as well. But there you have it, the State Bank of India chairman. And I think the big headline for me, amongst other things, is the SBI mutual fund. He's saying it's a good stock to buy, so take a look at that. Thank you so much, sir.
That's an interesting conversation. SBI mutual fund, that's going to be a good one to buy. That's the word coming in there. And margins are going to moderate from here on. That's the other key takeaway that I'm picking up from the conversation that Tamanna has been having with CS Sethi as well. The stock not doing much, but just down around 0.7 to 0.8%. It's 2:55. We've missed the window by 10 minutes, but Samit Sarkar continues with us with all the chatter from the dealing room. I know, Samit, I mean, there is absolute mayhem in dealing rooms as well, I'm sure, because of the way markets have been over the last two trading sessions. First up, anything that you're hearing from a market perspective as to what is causing this nervousness, though we know it was expiry yesterday?
Well, there is no one specific reason for this nervousness. Consistent FI selling is the biggest reason that is considering this, that is leading to this worry. Apart from that, yes, rupee depreciation is another concern. But given the fact that there is a lot of volatility in the market, not a lot of stocks is being dealt by dealers, or there are not much of news flow that is coming in the dealing rooms. Few stocks that dealers have still highlighted. Firstly, it's Timex. Dealers are indicating that there are buy flows on the large HNI desk on this counter. Large influential HNIs have been accumulating in trade today, is what dealers have indicated for Timex. For Indigo and Coforge, there are buy flows on there are buy flows on the PMS desk ahead of the Q3 numbers. So keep an eye out for both the names Indigo and Coforge. And lastly, when it comes to MCX, there are sell flows that we are seeing. Despite the recovery in the market, that stock continues to be in red, and the dealers are indicating that there are sell flows on the large HNI desk ahead of the Q3 numbers. So though the data suggests that MCX numbers could be quite good for the third quarter, but it would be important to see why the sell flows are coming in just ahead of the Q3 numbers.
Thanks a lot, Samit, for that. Kunal, just before we take you leave, what are your important technical picks? That's something which we had missed out. If you could just give it in a short time.
I think two ideas would be there. First would be Federal Bank. Again, a good reversal what we had seen in the chart, and now we are seeing follow-up action coming in a weak market. So that's a buy for me. With a stop loss of 269 on the downside, looking for targets of 283 to 289 on the upside. So Federal Bank is the first stock which is there on the buy side. Second stock where I'll again focusing on the buy side over here will be CUB, City Union Bank. Again, good consolidation which has happened into the stock, and now we are seeing the base getting formed, and we expect further up move into the stock. So this is also a buy for me with a stop loss of 265, looking out for targets of 285 to 290 on the upside.
All right. Thanks a lot, Kunal, for joining in. And now moving on, earlier today, we had an insightful conversation with Sandeep Kalra, the CEO of Persistent Systems. He said that the company is expecting a strong outperformance from their banking financial services. He also shared his growth outlook for the company's North America and European market. Listen in.
If you look at our current, markets, as I just said, North America grew by about 18.6%. in the last quarter, year on year. We are expecting, unless there is significant policy changes brought in by the new administration, there should be a healthy growth in North America. Similar in Europe. Now, from a sectoral perspective, our banking financial services is growing at roughly about 30% year on year. We expect it to lead the growth for the near term. Healthcare life sciences had tepid growth for the last 2-3 quarters. It's coming back big time. And remember, healthcare for the last 2 years was the leading, vertical for us across the industry. and it had grown at one point in time upwards of 60% year on year. So from our near future, we see banking financial services leading, high tech following, followed by healthcare life sciences, secular growth, decent growth across all three sectors.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम।
Welcome back to India Market Close, but let's also get in Shivangi Sarda from Motilal Oswal Financial Services. Shivangi, welcome to the show. Always a pleasure to speak to you. In this kind of a market, your strategy and your top picks.
Very good afternoon. Thank you for having me. So we've seen that, the indices have been facing some sort of pressure, and we've seen profit taking and the best to take full control. But the good part is that we've seen a smart recovery from the lower levels, which has kind of, provided some bit of comfort to some pockets and sectors. Looking at the markets, there would be some sort of weakness which is likely to continue here because the call writers are still positioned with heavy, positions at these levels. Now we're looking at 25,400 as the next resistance levels with a support at 24,900 marks. And talking about Bank Nifty, of course, this is stronger out of the lot, but we've seen that, there has been some slight bit of profit booking here as well. But overall, Bank Nifty looks, more stable than the broader market, and one could actually start accumulating good PSU names even at these levels. We're looking at, 59,300 level as the next, resistance for Nifty with a support of 58,500. So,
right, Shivangi. And what would be your top picks?
So, top picks first up on my radar is Hindalco. We've seen that metal stocks have been doing exceptionally well, and even in such kind of a volatile market, they've been holding at the higher levels quite strongly. Hindalco recently touched an all-time high levels and is hovering near its all-time high territory as well. It has been making an upward sloping channel on the monthly basis, and it has been an outperformer consistently from the last 6 years. So definitely one of the strongest names in this entire pack and likely to continue the move here because RSI is showing positive signs from the lower levels and it is turning towards the positive levels. So we're recommending a buy here with the next target of 975 levels for Hindalco with a support of 920. So.
Right. And what about a counter like SRF? Yesterday it was down 4%. Today again a 7% downtick. Any support levels for SRF?
So SRF has been seeing a lot of weakness of lately. In fact, it's given a weekly breakdown. It broke the important support level of 2770 levels, which was an important level to watch out for this one. And even after the gap down today, we've seen relentless selling and every bounce being actually sold into. So SRF is something which we are, keeping a watch and wait and watch over here. There is no signs of reversal that we can see as of now clearly in the data, but there could be some bit of weakness that could continue even more here. So we're looking at a base of 27. We're looking at a base of around about 2650, 2630 levels. And the upside still remains capped at 2700 because of the call writers that are still present.
Shivangi, hi, Sharad here. Kalyan Jewellers, that's been a concern for the stock. The stock is down almost 14%. I'm just seeing that in the trade, kind of a recovery attempt was being made, but that's also getting nullified. Any technical views on Kalyan Jewellers? Good time to enter or any important stop loss?
So Sharad, when we look at the entire jewelry business space, there are stocks like Titan which have shown signs of reversals here at these levels. Of course, too early to say, but the data is suggesting that buying has started to happen at the important key retracement levels. But when you look at Kalyan Jewellers, we've seen that there has been a weekly breakdown. So clearly, Kalyan Jewellers is not moving with the entire broader market. And of course, with the gold prices, touching sky high levels, we've seen that, these stocks have actually kind of had an impact, but a positive one. But amidst all this, Kalyan Jewellers has not been able to sustain and it has actually fallen by more than 12% today. So overall, this stock may continue some sort of weakness on the technical front, and we could, kind of wait and watch on this one before starting to accumulate.
Okay, so that's with regards to where Kalyan Jewellers goes. In fact, that stock has nosedived in trade, extending losses for 8 consecutive sessions. Let's get a bull versus bear on this one. Mahima standing by with both the cases. Mahima, over to you.
Right, so Hiral, it's been, a bad day for Kalyan Jewellers for sure. And if we take a look at the bull versus bears, side of this particular counter, Q3 business update suggests that there was a revenue growth of around 42%. But that as compared to the rise in gold prices year on year, that stands at 65%. Though all of that revenue growth has largely come in from a pricing growth perspective rather than a volume growth perspective. And that's been the story for a lot of these jewelry companies. The second argument remains with regards to where debt stands. They've said they earlier paused their debt with regards to some land acquisition claims going on, but now they have resumed their debt reduction and they plan to be debt free by the next year. But at the same time, the working capital days for them have really gone up in the past couple of days, past couple of quarters, and has risen to around 23 days. This is also largely on account of the way prices have panned out as to where gold stands. The next one, with regards to where the profit CAGR stands, that's been at a healthy 38.2% CAGR over the last 5 years. But valuations are nowhere near cheap for something like a Kalyan Jewellers. It's still sitting at a 57 times PE versus a 5-year average of 67 times. Slightly, better than the 5-year average, but still very expensive as compared to peers like PN Gadgil or for that matter Thangamali Jewelry as well. Lastly, in terms of where the segment candor stands, now Kalyan is focused on growing this particular business for them. This is largely an online business and a store that focuses more on lightweight jewelry. Kalyan has the candor segment has recorded a revenue growth of 147% this particular quarter, but it is yet to be profitable. And the expansion plans that the company has for candor store addition is also something that could, put pressure in terms of where profitability stands. So this is the overall view of the bull versus bear case for something like Kalyan Jewellers.
Right, Mahima, while you're with us and the Zomato or Eternal will be reporting its numbers anytime soon, what is the street expecting here?
Right, so, Somit, the street is expecting a good set of numbers going forward from Eternal. It can come anytime now. Generally, they post their earnings around the 3 p.m. time, but overall revenue might see an uptick of around 2 times in terms of where it stood in Q3 FY25. EBITDA may rise around 1.5 times. Margins will be at that 2% mark versus that of almost 3% earlier, but that is largely on account of the additions of, the rapid addition of dark stores that they are doing. Net profit may also be at that 115 odd crores versus that of 60 crores in Q3 FY25. In terms of what to expect, festive season might get slightly impacted because of the gig workers strike, but overall strong revenue growth is expected. Higher marketing spends could also put pressure in terms of where the margin stands, and this is largely on account of competition panning out in the quick commerce and food delivery space. Lastly, key things to watch out for, the guidance in terms of where expansion of dark store addition is concerned, whether it is on track, whether they are increasing their guidance in terms of where the dark store addition is concerned. Recovery in food delivery will take place or not is something that the street is watching out for, because that's not been the case for the past couple of quarters. Quick commerce market share expansion, how much has that happened this quarter, considering the kind of pressure or competitive pressure that is there in the quick commerce space? And hyper-pure revenue growth, what is the trajectory looking like? And lastly, how has going out business scaled up in the last quarter is something that we'll be watching out for. So this is the overall view of what you can expect from Eternal earnings.
Right, Shivangi, despite the market volatility today, Eternal was one counter that has been continuously gaining in trade. Any breakout that we have seen on technical level, or any target that you can give?
We see that Eternal has actually witnessed a good comeback, and we've seen that the stock has already recouped most of its losses of the last 2 trading sessions, and it is kind of showing good strength, because even in such kind of a market, we are seeing that there is buying interest emerging at these levels. Now, Eternal, technically speaking, in the short term, it might have had some point of pain from the last 2 to 3 odd months. But positionally speaking, the stock is quite well placed, and actually quick commerce space, this one is quite positive, even with the expansion of Blinkit, not just Zomato. So this one's actually quite positive, and one should look at adding this or start accumulating this at a portfolio level. And immediately we are looking at some level like 295, and then positionally we could see levels like 305 levels.
So 305, that's the important positional level Shivangi is talking about. But moving on, Dr. Reddy's is set to announce its Q3 numbers today. Will the US pricing overhang sustain for the company? And what is the street expecting from Q3? Let's go to Varsha to find out.
Well, muted performance has been expected when it comes to Dr. Reddy's Q3 FY26 numbers, wherein revenue may fall 0.5%, EBITDA may fall around 19%, net profit may fall 22%. Now, this muted performance will be driven by, continued pressure in US. US impact will be due to negligible Revlimid, that is a cancer drug contribution, and of course, additional pressure will also come from the pricing pressure seen in the US market. India business is expected to partly, offset US weakness, and Europe is expected to deliver mid-single digit to low double-digit growth. Talking about the analyst expectation when it comes to, US business, so analysts are expecting around $310 million to $325 million of US sales for Dr. Reddy's. Now, talking about India business, wherein the domestic business is expected to have an improvement year on year, that is true for every pharma company. Well, India is expected to be the strongest growth driver. Growth will be supported by core therapy segments, and analysts are expecting double-digit growth. Talking about the Europe business, wherein steady growth is expected between 7 to 13%. Growth will diversify earnings and US pressure. What investors should watch out when it comes to Dr. Reddy's? Three most important things. One is the semaglutide, which is your anti-diabetic or anti-obesity approval timeline in Canada. Progress on some of their regulatory filings on the products that they have been launched, and any improvements in the US pricing pressure. These are the three key things which investors should watch out when it comes to Dr. Reddy's.
So that's the expectation when it comes to Dr. Reddy's as well. But moving on to our earnings candidate. Now, Rallis India is seeing some good gains today at the day's highest levels, gains of 1.5% coming in there on the back of the numbers that it posted. Varsha caught up with the management as well. Let's hear what they had to say.
The growth was led by volumes. What about pricing? When one can expect a recovery in prices?
So, I think, first of all, good morning to all my viewers. Pricing is a very, very complex subject. There are segments where we have some lever on pricing. There are segments we don't have lever. So when it comes to export business of crop protection, I think we have to be very competitive. Same way when I sell my domestic crop protection business, I have to be very competitive. So that is one area. A lot depends on China factor, because there are domestic producers, including us, and there are importers. So in order to do that, I think in that segment, we make sure that we want to focus on volume. We don't want to lose the market share. But when it comes to seed and soil and plant health portfolio, there we have a better leverage of pricing based on the value and the benefit we offer to the customer. So it's kind of 60% business where I don't have a pricing lever, 40% we do have some pricing lever.
Right. So, Mr. Shukla, as you said that you as a company is, concentrating more towards the volume rather than value. What was the volume growth in absolute terms, if you could, help us with? And of course, will this volume growth be sustainable for Q4 and for FY27?
So, obviously, market share is one. I said we really worry and care about it. So we'll continue to drive that. I would say we had double-digit volume growth across all the segments. There is one segment where we didn't have a lot of volume growth, but we have been able to use price lever, was a small CSM segment we have. So I think it depends. Because agriculture season was very good. There was good planting. As a result, there was a demand. So we didn't want to lose market share. We were very competitive in pricing. Going forward, given that crop is already in the field, while some of the crops have not done well, I expect this momentum to continue in Q4. And when we start a new season every year, we always start on optimism. A lot depends on how commodity prices will be there at the time of planting of the Kharif season, how, besides planting, how the rainfall will be have. Sometimes even good rainfall, too much of rainfall can also be very negative. So our idea is that be ready, be optimistic, and work towards developing more relationship with the customer, invest more time with the customer, make sure we have a right channel partners to serve the customers. That's all we control.
All right, that's a kind of optimistic kind of commentary coming in from the management for Rallis India. Let's see what the stock is doing. The stock is up 2%, and in a volatile day like such, Rallis has done well. But let's put the long-term chart for Rallis and see where the pressure was there. It's an, of course, agrochemical player, and see that's the downtick coming in as well. But Shivangi, on a positional basis, is Rallis looking a good buy from current levels? Shivangi, if you could unmute yourself.
Yes, Sharad. So actually looking at Rallis, we've seen that, of course, there has been some bit of bounce back today, but on a monthly basis, the stock is actually wiped off the gains of the minor attempts of recovery that it had made in the last couple of months. In fact, barring these 2 months, it has been in a downtrend from the last 5 odd months, and we've seen that weakness has persisted here. Even though there have been minor attempts in between. So overall, this stock is actually lacking a lot of strength here, and confidence is clearly missing. So I would recommend avoid from Rallis at these levels.
Any STBT trades today?
So looking at the markets, we've been seeing that the metal pack is actually one of the strongest out of the lot. And apart from this, we are seeing a lot of movement in some steel action stocks. So my BTST here would be Vedanta. It has been consolidating at the higher zones from the last 4 sessions. And after a very good breakout last week, we've seen follow-up is quite strong. And from the lower levels, it has actually shown immense buying interest from 660 odd levels today. So overall, this stock is quite strong and closing on the higher note, which is indicating that it would continue on a positive note. So 705 is what we're looking at for Vedanta, and with a stop loss of 665.
Right, Industars is another counter that one should keep an eye out for, because the company yesterday came out with an exchange announcement where they are saying that on Feb 2nd they will consider their Q3 results. But with the Q3 results, they have not announced anything about a dividend or a buyback. Now, why is this announcement important? Because Street was expecting a dividend announcement to come in from Industars side, given the fact that the Vodafone Idea AGR issue is now behind and the company has a lot of time to make the payment for this AGR. So the cash flow coming in from Vodafone Idea to Industar wouldn't be an issue. Hence, Street was expecting a dividend to come in from Industar's side in the third quarter numbers. Now, as a rule, Industars largely pays off all the free cash flow that it generates to its shareholders as a reward. Now, what the management has said so far when it comes to the dividend point. In the fourth quarter of FY25, the board deferred the dividend, citing that it would form a committee to decide the best way to pay back the money to shareholders. In the first quarter of FY26 result, the company said that the board will be relooking at decision of giving dividend at the end of the financial year FY26. In the second quarter of FY26, board said that they will consider and is committed to distributing the cash to shareholders, and the timing still remains at the end of this financial year Q4. But they also said that this is the case because there was no clarity when it comes to Vodafone Idea AGR issue. But given the fact that this clarity has come in, Street was expecting this amount to come in. Now, what could be the quantum of dividend if at all the company announces a dividend by the end of FY26? Now, for FY26, the company is expected to generate a free cash flow of close to 5,400 crore rupees, which is nearly 5% of the company's market capitalization, which means that the dividend yield could also be as much as 5% for Industar in FY26. Now, there are 3 possibilities why the company has so far not announced any dividend. Possibility 1 is the fact that the company is sticking to their guidance of announcing a dividend at the end of this financial year. Second possibility is that they are still analyzing their investment plans when it comes to the Africa business foray, and hence they are yet not announcing this dividend because they still do not know how much capital expenditure they will be doing in Africa, and hence they do not know the free cash flow that will come in by the end of this financial year. And the third possibility is that Reliance Jio might likely shift few of its tenancies out of Industars to other tower companies on Renewable. Now, Jio contributes around 12 to 13% to the top line, and if that happens, then the company's cash flow could take a hit, not in FY26, but in FY27 at least.
Okay, so that's with regards to where, Indus Towers goes. And if you look at Indus Towers as well, the stock from today's lows has recovered quite a bit now. Shivangi, any view when it comes to Indus Towers? And in turn, I would want to look at a Vodafone as well, because that stock, none of us have spoken about of this one since quite some time. It's languishing around those 10 levels. Let's just pull up a 1-month chart. That range has always been 8 to 12. Currently, you're at 10. Anything on Indus and Vodafone?
So here, when we look at this entire space, of course, Bharti Airtel is one stock which I would start looking at. And we've seen that this stock has actually seen a lot of weakness from the last 20 odd sessions. Now, if you pull out a chart of Indus Tower or a Vodafone, we've seen that, in line with the broader market, these stocks have actually not done quite well. And they've, kind of given up most of its gains of the last 1 month. So overall, I'm not expecting such comeback here at these levels. One could actually consolidate over here and, a little wait and watch at these levels, and not recommend to start accumulating here.
That's pretty interesting on that. But let's just point out Thangamel Jewelry. The stock is up 4% and of course on back of earnings coming in and some kind of a good volume move as well. See a sharp recovery also come after the fall. Your views on this, Shivangi?
Absolutely. This has been one stock which has moved right from the start of the session today. We've seen volatile cues in between, but overall it has made a good volatile day. We've seen that it is closing on a better note, higher than its opening levels, but then again, the swings are quite high. So I would recommend if one is trading in this stock to, strictly maintain a stop loss and do it on an intraday basis because of the volatile nature. But the levels that we could watch out is 38.30 levels on the downside, and on the upside, one could look at 4,020 odd levels.
Okay, so that's with regards to Thangamel. Let's just quickly put up all the metal names on the screens as well, because that is pretty interesting when you talk about what's happening there. Hind Copper, Hind Zinc, Hindalco, JSW, all of these have been trading in the positive. Shivangi, do you see Hind Copper, Hind Zinc sustaining the kind of up moves that have already come in so far?
So definitely, Hiral, these two stocks are quite positive, and we've been quite bullish on both of these names since we've seen that, of course, metal stocks and especially copper has also started to show signs of strength from here. If you look at Hindustan Zinc, this has been one of the most resilient stocks in the past few months. And even Hindustan Copper is holding at the life high levels currently, with good momentum. So would definitely recommend people to keep holding this stock, and one could also start accumulating at these levels because the support levels are quite intact. If we talk about the levels, Hindustan Copper, next is what we're looking at, 580 levels. And, Hindustan Zinc, one could actually, look at the next targets of around about 720 zones.
Okay, so that's with regards to where the metal names are concerned. Apart from that, Credit Access Grameen, AU Small Finance Bank, a spectacular set of numbers that both these companies have reported, and you've seen a strong reaction come in there as well. AU Small Finance Bank, though, trading under pressure. Shivangi, what are charts indicating for both these names?
So looking at, AU Small Finance Bank, actually, we've seen that the stock has actually not really performed in line with the overall broader sector. Now, if you look at the other banks in the same sector, we've seen that there has been much more strength. Of course, AU Bank has performed on a month-on-month basis from the last 4 months, but the kind of volatile swings that we've seen in this stock from the last 5-6 trading session has actually made it, quite volatile. So overall, we would expect some bit of swings to continue here, but my preferred pick would still be some of the PSU names that one can look at. For that matter, SBI is quite positive for the positional basis. Even PNB is looking quite good. And one could look at these stocks on a positional basis.
Vodafone Idea is another counter that remains in focus. It has increased prices of some of its family postpaid packs by around 7 to 9 odd %. Earlier, the 701 plan, which had 2 connections, is now costing 751. The 1201 rupees plan is now costing 1301, and the 1401 rupees plan, which had 5 connections, is now costing 1525 rupees. Now, earlier, These plans were very much comparable to Bharti Airtel in terms of charge per GB, but right now post this hike, they are nearly 7 to 9% expensive compared to Bharti Airtel. So it would be interesting to see whether Bharti Airtel also takes cues from this and increases its postpaid plan or not. Shivangi, quickly, any view on Vodafone Idea on charts?
Yes, so we just discussed the entire space as of now, and we've seen that there has been some bit of volatile cues of lately, but my recommendation would be a little wait and watch on all these stocks, which includes Vodafone, Indus Tower, Bharti Airtel. Of course, positionally, Bharti Airtel is quite strong as a portfolio stock, but on an immediate trading basis, one could actually wait.
All right. Thank you very much, Shivangi, for joining in and giving your technical views at India market close. But now let's look at the market closing, how things are shaping up. And of course, market staged a recovery, but it's not very convincing. If you look at it, it's still, 70 points down. It's below the 25,200 mark. But yes, comfortably above the 200 DMA levels and the 25,000 levels. Nifty Bank better placement and still down 600 points, but the majority of the pain which we had seen earlier, the broader market pain, that has actually recovered, but still 1:2 in the favors of bears. Let's pull out the Nifty stocks and show you what the stocks have been doing in the constituents. Largely we see it's even Stevens. Eternal will be coming out with its number. Stock is near its day's high level, up 5%. Interglobe Aviation and the steel related stocks also buzzing in trade. But what's not working are your two big banks, HDFC Bank and ICICI Bank. Apart from that, Tata Consumer, Trent are also taking the pain. But yes, today was a very volatile session and a big range was there which we saw. Let's see the sectors which is moving, or most probably most of the sectors are in red. A slight up move coming back in metals and the infra and the oil and gas space, but majority wise we see most of the sectoral indices traded in the red in the closing session. Let's pull out the advanced decline ratio to give you a perspective on how the markets fared. And yes, there were gyrations, but it still was largely in the favors of the bears. Let's pull out the mid cap and the small cap indices, because last two trading sessions there was a massive sell off, and today also the story remains the same. Mid cap index was down 1%. There was a slight attempt at recovery, but small cap was not that bad as compared to the mid cap. It was down almost 0.6%. Let's show the BSE 500 stocks where the action is happening, and in the last moment the Veranda Learning also went up. MRPL, Credit Access Grameen on earnings, India Mart doing really well, and earnings related numbers were something which we are looking at. But what's not working, that's the concern. Kalyan Jewellers, that's the top loser in BSE 500, followed by SRF, Shoppers Stop on the earnings sentiment. Cyient also down by almost 5%. So this is how the markets have fared, but the biggest concern definitely is the FIs selling and the rupee at the record low levels. Of course, weakening past that 91 mark, and more, almost you could say 50 to 60 paise of weakening we just saw in one single day. So that's a very big concern actually, and going ahead, the lot of bond yield expectations would be there in the market. But let's see what are the cues to watch. It's still earnings heavy day, and balance of trade would be coming in. US President Trump speaks in the evening at around 6 to 7 p.m. That's where the focus would be. Apart from that, these are the important corporate announcements which would be their cues for tomorrow. What is coming out from the lock-in is Anthem Biosciences, and focusing on the earnings post-market hours, Dr. Reddy's, that's what you should be looking at, followed by KEI Industries as well. And also for tomorrow, the earnings, Adani Group earnings would be coming in. Bandhan Bank will be looking at, especially the trading community. Coforge as well, after Persistent came out with the good numbers. Ujjivan Small Finance, Z, Syngene, and even Premier Energy. So these are the stocks which should be in focus for tomorrow, and this is the most important situation coming in. The live coverage will be happening at NDTV Profit. Trump's Greenland Gambit. What's the game going ahead? And we will be tracking, giving you live updates as and when it happens. That's all, folks, for India Market Close. And thank you very much for tuning in. And up next is Market Express by Malika.
is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार।
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम
Hello and welcome viewers, you're watching Market Express and I'm Malika Mishra. Let's get straight into the show and first check the markets. It was a day of high volatility on Dalal Street as benchmarks saw sharp swings between gains and losses in trade throughout the day. Nifty, after giving up the 25,000 level in morning, saw a sharp recovery of near 300 points, eventually ended around 25,150 odd levels. Broader markets witnessed a broad-based sell-off as both mid and small cap indices saw near 1% cut. Sectorally, other than metal and oil and gas index, others ended in the red. The Indian rupee falls to a record low against the dollar, touching 91.75 levels today amid continued foreign outflows from equities and rising geopolitical uncertainty. Bonds also rise on lower state debt supply. Credit Access Grameen is creating a buzz after a strong third quarter. The microfinance lender has swung back to profitability, reporting healthy revenue and a big jump in margins driven by better operations and lower provisions. Brokerage firm Investec also maintains a buy rating with healthy target prices as the company begins an upcycle. SRF posts a strong third quarter performance with profit jumping close to 60% and margins expanding even after one-time costs. Revenues up modestly, but despite the solid numbers, the stock tanked in trade as investors reacted to caution around future demand and industry pressures. Morgan Stanley maintains underweight with a target of 2,177. Shoppers Stop hosts a weak third quarter with net profit plunging nearly 70% year-on-year, while revenue inches up modestly amid soft demand. Operating earnings and margins contract as festive timing and uneven consumption weigh on sales. Despite some growth in premium offerings, the overall performance disappoints, leading to a slide in the stock. Persistent Systems has posted an in-line set of Q3 numbers, marking its 23rd straight quarter of revenue growth. Revenues were up about 5.5% sequentially to 3,778 crore rupees, while constant currency growth came in at 4.1% versus 4.4% in Q2. Margins expanded by 45 basis points, with EBIT rising 8.5% to 632.5 crore rupees and margins touching 16.74%. Total contract value strengthened to $674.5 million against $609 million in the previous quarter. However, net profit dipped 6.8% to 439 crore rupees, weighed down by an 89 crore one-time impact from the Labour Code. Bazaar Style Retail is in focus today after Cupid announces a strategic investment of around 331 crore rupees through preferential warrants in a deal stuck at a slight discount to recent prices. The value of fashion retailer posts year-on-year revenue growth, but same-store sales and sales per square foot fall as festive timing shifts impact demand. Both Bazaar Style and Cupid shares show volatility in trade as markets assess the news. Morgan Stanley stays bullish on select steel players even as markets watch volatility in this sector. The brokerage favors names with strong pricing power and domestic demand support, but it also flags risks from capacity additions and pricing pressures. Our desk looks at which steel stocks make the cut and why analysts see spreads and supportive macro trends driving the sector. India Mart Intermesh posts a solid third quarter with profit and revenue beating estimates, but weakness in paid subscriber additions keeps investors cautious. Despite strong collections growth, the number of paying subscribers falls slightly and brokerages see muted upside ahead. Jefferies upgrades the stock to a hold, trims its target price to around 2,100 rupees and forecasts moderate revenue and earnings growth over the next few years. Lupin has signed a major pact with Spain-based Galantium Health to bring finished formulations of semaglutide to global markets. Semaglutide, a GLP-1 receptor agonist, is widely prescribed to regulate blood sugar and appetite, making it a key therapy for type 2 diabetes and weight management. With this deal, Lupin expands its diabetes portfolio beyond India and will commercialize semaglutide across 23 countries, strengthening its presence in one of the fastest growing therapeutic segments. And in a big shake-up in the QSR space, Restaurant Brands Asia is set to be acquired by Inspira Global, with Ayush Agrawal taking majority control. The deal, valued at around 1,500 crore rupees, will be routed through Lenithis Foodworks and could trigger an open offer for public shareholders at 70 rupees a share. Inspira Global plans to infuse 900 crore rupees via equity and another 600 crore rupees through warrants, marking a significant recapitalization of the Burger King India operator. Cyient DLM's Q3 numbers disappointed with revenue down 31.8% year-on-year. Macquarie has maintained its neutral rating on the stock with a target of 380 rupees. The brokerage says that while management commentary is positive, it still needs more conviction, especially after the company missed estimates due to some tariff push-outs. Management, however, remains confident about returning to growth in Q4, but Macquarie says it would rather wait for execution before turning constructive. Rallis India delivered strong volume-led growth this quarter, driving revenue up 19.3% to 623 crore rupees from 522 crore rupees. EBITDA jumped nearly 32% to 58 crore rupees, with margins improving to 9.3% versus 8.4% last year. But profit took a major hit. Net profit slumped 81.8% to just 2 crore rupees, largely due to the impact of wage code implementation. The company saw broad-based volume strength across businesses, while B2B growth was aided by both higher volumes and better pricing. Tangamail Jewelry has reported a stellar jump in Q3 revenues, which more than doubled to 2,406 crore rupees from 1,132 crore rupees last year. EBITDA also saw a sharp rise to 172 crore rupees versus 83.2 crore rupees, though margins stayed broadly stable at 7.2% compared to 7.3%. Net profit too nearly doubled, coming in at 105 crore rupees against 48.2 crore rupees. Strong festive season demand and higher gold sales continue to drive the company's performance this quarter. Raymond Realty has launched a new luxury residential project in Mumbai, marking another expansion of its premium housing portfolio. The project carries a strong revenue potential of around 5,000 crore rupees, underscoring the company's growing ambitions in the city's upscale real estate market. With demand staying robust for high-end homes, now this launch further strengthens Raymond Realty's presence in one of India's most lucrative property corridors. AU Small Finance Bank reported a strong Q3 as well. Net interest income rose 16% to 2,341 crore rupees, driven by healthy loan growth. Operating profit was flat at 1,215 crore rupees, indicating higher costs during the quarter. However, net profit jumped 26.5% to 668 crore rupees, supported by lower provisioning and stable business momentum. On asset quality, gross NPA improved to 2.3% from 2.41% QOQ, which is quarter on quarter, while net NPA stayed flat at 0.88%, reflecting steady credit performance. Brokerage sentiment remains positive. Jefferies has maintained a buy rating and raised its target price to 1,220 rupees, signaling confidence in AU Small Finance Bank's growth and profitability outlook. Supreme Industries has reported a mixed third quarter with steady growth in sales volumes but pressure on profitability. Plastic goods volumes grew nearly 13%, while value-added product sales were up over 16%. Consolidated revenue rose 7% year-on-year, but net profit declined 18% due to softer margins. The company says polymer prices have started moving up in the new calendar year, which may influence cost dynamics ahead. Supreme has also reaffirmed its full-year guidance, expecting stronger volume growth in both overall operations and the plastic piping segment. United Spirits has posted a steady third quarter with revenues largely in line with expectations, though volume growth remained weak. The company managed to offset softer volumes through pricing and a favorable mix, but higher advertising and promotion spends weighed on margins. EBITDA grew modestly, while net profit saw a double-digit increase. Gross margins expanded sharply, but operating margins compressed due to elevated brand investments. The company has also announced an interim dividend of 6 rupees per share. Brokerage views on United Spirits remain constructive after the company posted steady revenue growth but softer volumes in the third quarter. Investec has maintained its buy rating, highlighting strong net sales value growth and expecting earnings momentum to pick up in the fourth quarter. JP Morgan also remains overweight, noting that revenue and gross margins held up well even as elevated advertising spends dragged EBITDA margins. Both brokerages point to the importance of monitoring the volume recovery trajectory going forward for the company. The overall stance stays positive, with margin pressures seen as manageable. Vikram Solar has posted a strong third quarter with significant improvement in profitability and operational metrics. Module sales rose 35% year-on-year, helping the company lift capacity utilization to 90% during the quarter. Consolidated revenue grew nearly 8%, but the standout gains came in margins, with EBITDA expanding more than 2.5 times and net profit rising 5-fold. The company's order book now stands at 10.6 gigawatts, offering strong near-term visibility. Domestic business continues to dominate the mix, contributing 84% of revenue. Let's take a look at some other important stories as well. The government has officially invited financial bids for the strategic sale of IDBI Bank, moving the long-pending privatization process into its final phase. Bids have been sought after all key regulatory clearances came through, clearing the path for serious contenders to make their offers. Potential bidders have been given 4 weeks to submit final financial bids. The government is aiming to declare the winning bidder by end March 2026, signaling a clear timeline for closure. Among the four front-runners, are Fairfax Financial and Kotak Mahindra Bank, both seen as strong contenders. And importantly, NDTV Profit's earlier news break on this development now stands confirmed. Netflix has stepped up its takeover bid for Warner Bros. Discovery, switching to a fully all-cash offer while keeping the deal value unchanged at $82.7 billion. The revised proposal offers $27.75 per share in cash, replacing the earlier mix of cash and Netflix stock. The move has won unanimous support from the Warner Bros. Board, which says the all-cash structure gives shareholders greater certainty and immediate liquidity once the deal closes. This shift comes as Netflix fends off a competing $30 per share hostile bid from Paramount Skydance, which has been pushing for more disclosure and even took the matter to court earlier this month. Netflix has also beaten Wall Street's revenue expectations for the holiday quarter, crossing a major milestone of 325 million subscribers worldwide. The streamer posted $12.1 billion in revenue from October to December, slightly above analyst forecasts of $11.97 billion. However, investors remain focused on its $82.7 billion bid for Warner Bros. Discovery as Netflix pushes for an all-cash agreement to secure major franchises, including Game of Thrones, Harry Potter, and DC superheroes. The company says the deal will give subscribers a wider, higher quality content library and more flexible plans with HBO Max added in. The International Energy Agency has raised its 2026 oil demand growth forecast to 930,000 barrels per day, up from 860,000 barrels per day earlier. That's an upward revision of 70,000 barrels per day and 8.1% boost, highlighting stronger expectations for global energy consumption. In its latest monthly report, the IEA says the upgrade reflects improving economic activity and firmer market fundamentals heading into 2026, signaling a more resilient outlook for global oil demand. On to some really important national stories now. The army has been deployed in sensitive areas of Assam's Kokrajhar district after mob violence left 2 people dead, triggering arson and clashes between Bodo and Adivasi communities. According to officials, the unrest began after a vehicle carrying 3 Bodos allegedly hit 2 Adivasi residents near the Karegaon outpost, sparking retaliation, violence and torching of the vehicle. 1 person died and another succumbed to injuries earlier this week. 4 army columns are now patrolling affected zones with flag marches planned, while internet services have been suspended and prohibitory orders imposed as security forces work to stabilize the situation there. In Kerala, a vigilance court has granted bail to Unni Krishnan Potti, the prime accused in the Sabrimala's gold loss case involving missing gold from the sanctum door frames. Now, the court allowed bail after investigators failed to file a charge sheet within the mandatory 90-day period. However, Potti will stay behind bars because he has been separately arrested in another linked case involving the loss of gold from Dwara Palaka IJ plates. The SIT has made 12 arrests so far, including Potti and former Travancore Devasam board presidents. Now, in a dramatic escalation of the Kapoor family inheritance battle, 80-year-old Rani Kapoor has moved the Delhi High Court seeking cancellation of the Rani Kapoor Family Trust, alleging it was fraudulently created to divest her of her entire estate. According to her suit, the trust holding stakes in Sona Comstar was formed without her informed consent, allegedly through forged documents and undue influence of her late son Sanjay Kapoor and his wife Riya Kapoor. She claims she was made to sign papers after a 2017 stroke and only discovered the alleged fraud after Sanjay's death in June 2025. The petition names 23 defendants, including Priya Kapoor and several grandchildren. Motorists across major Indian cities are still losing hours to daily traffic jams, up to an entire week each year, according to TomTom's 2025 mobility data. Bengaluru ranked as the world's second most congested city with average speeds of just 16.6 km per hour and a 15-minute commute covering barely 4.2 kilometers. Pune also featured in the global top 10, coming in at 5th position. Mumbai showed some improvement with congestion down 3.3 percentage points from 2024, yet commuters still lost 126 hours a year at average speeds of 20.8 km per hour. Meanwhile, Delhi's congestion worsened to 60.2%, costing motorists 104 hours annually. Mexico City topped the global list for the worst traffic. On to some international stories. Israel's Prime Minister Benjamin Netanyahu has accepted an invitation from US President Donald Trump to join the new Board of Peace, a body initially designed to support efforts to end the conflict in Gaza. Netanyahu's office confirmed the move in a post on X, noting that the board could eventually expand its mandate to address conflicts beyond Gaza. And viewers, that's all the time on today's Market Express, but on to our Budget for Bharat series. We put the spotlight on the auto sector. The industry is cruising on strong momentum. GST 2.0 has powered a 5% growth last year and an impressive 18% surge in Q3. But to keep this pace going, the sector has a clear budget wish list. Here's what the big players across passenger vehicles, commercial vehicles and farm equipment want from Budget 2026.
India's auto industry is on a dream run aided by the GST 2.0 cuts, and in calendar year 2025, the industry recorded 5% jump in wholesale sales. The main jewel in the crown for the industry was the Q3 performance, in which wholesales for the industry recorded an 18% jump. But in order for a smooth ride, the industry has a budget wish list, and they believe that if the government can make certain announcements, then this dream run will continue.
Skoda Auto Volkswagen India is of the view that the upcoming budget should have announcements for the further growth of the EV segment. As the union budget approaches, after the successful and welcome implementation of GST 2.0, the industry will be looking for policy continuity and long-term clarity. Sustained support for domestic manufacturing and increased allocation for road and transport infrastructure will be key priorities. Rationalizing the inverted duty structure for EVs will strengthen domestic manufacturing and competitiveness and will further accelerate India's transition to sustainable mobility. Continued focus on building the EV ecosystem alongside measures that support household disposable incomes will be essential to sustain demand momentum and reinforce the sector's role in India's broader economic growth. On the other hand, the CV and farm equipment players are of the view that the government has already been proactive with policies like GST 2.0 and RBI interest rate reductions. However, they expect the government to continue its growth-led initiatives and reforms for the agriculture sector.
We are just a few weeks away from the union budget. What are your expectations from Ashok Leyland's perspective?
Government these days is so proactive that we don't need to wait for a budget really. One thing that the government should consider is really coming up with some program or some scheme around scrappage of the old vehicles.
The government in the past 4 to 5 years have done all the positive gestures and announcements as far the farming community is concerned. In terms of visibility, in terms of incentivization, in terms of ensuring the money reaches the farmer. We are a 1.4 billion population today in India. We have to be self-sufficient. In many areas, we are self-sufficient. We can also become a food basket for the world. And also, as I mentioned slightly earlier, that in mechanization, we're only 47% in comparison to America and Canada at 90%. So I think that is the opportunity which the government and the industry and the farming community need to work towards in convergence.
I would certainly hope it's a consumption and a growth-led budget. As long as the domestic growth and the domestic demand continues to be robust, the industry will perform. And lastly, as we've been discussing exports, if there are some things that can be done to be able to help and boost exports, if there are some policy interventions that can be brought in there, that would be most welcome. If there are some policy corrections on duty drawback and things like that, and those conversations are on, the government has been considering a few of these things to strengthen the general capability of Indian exportability. That's the only thing we can continue to push for.
India's auto industry expects to continue its journey on the fifth gear, all thanks to GST 2.0 cuts. The industry also believes that in the upcoming budget, the government makes certain announcements through which the government can increase the EV infrastructure across the country. Besides that, the industry has also suggested to bring in a scrappage policy for commercial vehicle segment, and at the same time, the industry has also demanded that the government must make certain announcements and certain policies which can increase farm mechanization across the country. The industry believes that if the government is able to support the industry in the long term, then nothing can stop India from achieving the tag of becoming the largest auto industry in the whole world. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
And viewers, in a breaking news at the moment that could raise many of your eyebrows as it did mine, Dipinder Goyal has resigned as the eternal CEO and Goyal will take charge as Vice Chair and Director of, and in fact, Eternal appoints Albinder Singh Dhinsa as the CEO, the current CEO. Now, this is an extremely important news because I'm not sure if this was expected. My colleague Mahima, who tracks the proceedings and the major updates of the company, joins us on the phone line. Mahima, was this expected?
Right. So, Malika, I think this is a big update coming in. He's posted a letter out to shareholders saying that he's going to step away as the group CEO and has now appointed Albinder Dindasa, who's going to be the new group CEO of Eternal. He's founder of Grofers as well as the co-founder for Eternal and runs Blinkit right now as a CEO. He's mentioned that, off late he's found himself drawn to a set of new ideas, and that is why, he's stepping down. He'll, however, still remain on the board and board of directors and as well as remain as the vice chairman of Eternal, but stepping down as the group CEO. Probably what changes is that from here on it's going to be Albinder who's going to make the decisions going forward. Plus, the entire press release says that their alignment in terms of ESOPs is not going to change. Looking ahead, the idea of Eternal is going to stay as it was earlier as well. And in terms of Dipender Goyal, he said that his involvement in long-term strategy as well as culture, leadership, etc. for Eternal still will continue going forward. So this is with regards to the update coming in with regards to where Dipender Goyal stands. But overall, if you take a look at the numbers as well, Marika, it's a beat all round in terms of where the numbers, are concerned. Overall net profit surges 73% to the 102 crore mark, slightly lower than what the street was expecting of around 114 odd crore. But overall, it's, a beat in terms of where the profit is concerned. Revenue is also seen a good growth at that 16,315 odd mark, largely in line with what the street was expecting. So good set of numbers, but I think the idea of Dipender Goyal stepping down as a group CEO is going to probably disappoint the streets tomorrow.
Yeah, of course, because as you mentioned that Zomato as a company has done well financially, and in fact the stock was up about 5% in trade today as well. If we can get those charts there, you will see that they had an upswing, and in fact it was one of their sharpest intraday gains in about 6 months or so. But the big news of this given moment is the fact that Dipender Goyal has stepped down from his role as Group CEO of Eternal, transitioning to Vice Chairman, subject to shareholder approval, of course. And in his place will be Albinder Dhinsa, as Mahima highlighted. He currently runs Blinkit and also will be taking over what was earlier Dipender Goyal's role as a CEO of the company. But big update as far as Zomato is concerned, and let's see what these ideas are that Dipender is now pursuing after he steps down from his current role. But that's a wrap on this edition of Market Express and the breaking news. Stay tuned to NDTV Profit as we bring you a lot more news and updates. This is Malika Mishra. Thanks so much for watching.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Well, the world comes together in Davos in a sense every single year. We talk about AI, we talk about commerce, we could talk about clean energy. But I dare say the focus this time is about the relation between Europe and the United States and Donald Trump. Is that impacting business at all? The India story is always very important over here. We've got several Indian pavilions over here, lots of Indian business leaders. We've got excellent business leaders and those linked with Indian business right here in the NDTV studio. Rajiv Mimani with us, Chandrajit Banerjee and Sanjeev Krishnan. Thank you all very much for being with us. Rajiv, I have to ask you the obvious question. How closely are you, as CII President, looking at what might emerge tomorrow with Donald Trump and what he says here?
No, I have not spent any time in predicting. I think it's a futile effort. But clearly, I think it's on the top of the agenda of everyone. I think it's in the interest of the global economy, of the entire world, that I think the relationship between Europe and US, I think, settle down a bit. I think that's the key thing. I think that's the key talking point. From our perspective, I think the way we are looking at it is, how is India doing? How is India faring? And I think there, I would say that both from how our macroeconomic numbers are being looked at, the quality of reforms and the number of reforms that are being done, also the trade diversification that India has done, particularly the comments around the EU deal, UK deal, EFTA, Australia, New Zealand, the strengthening relationship with Middle East. And I think the reindustrialization of India through manufacturing and advanced manufacturing, I think in every interaction that we are having, I think that's being viewed very positively. Obviously, there's always a question on the India-US trade deal. And at least our view is that it's something that in the next, I think, distant future, I think hopefully, at least, if not the entire thing, at least some parts of it should get sorted out.
One of the reasons I was asking about Trump is also because what's happening here has resulted in the global markets being in a bit of a spook. They're scared. Our markets have suffered, the FTSE has suffered as well, and therefore, this insecurity that we find in geopolitics is impacting markets around the world. Is that a huge concern for you?
Well, I mean, certainty certainly has a premium. So there's no question about it that when there is so much uncertainty as there is now, markets will behave the way they have. I think, as Rajiv said, I think the conversations around here largely have been on US and Europe in some ways. But, I would actually, without sidestepping your question, I would say that, just the fact that the India-EU deal might get announced very soon, I think is a huge positive that we'll take away from Davos. And from our perspective, again, maybe corroborating what Rajiv said, I think Indian macro has been very, very resilient through 2025. Bunch of reforms which have been done. Even the survey that we released yesterday actually shows that a lot of Indian CEOs are now saying that we want to focus.
For taking that time. I appreciate that. So let me go right into it. Why do you believe that AI has the potential to be that significant engine of growth? And what makes this technology different than past technology cycles?
Yeah, this is, first of all, when you think about AI and you're interacting with AI in all these different ways, ChatGPT, of course, using Gemini, of course, using Anthropic, Claude, of course, and the magical things that it could do, it's helpful to reason back to the first principles of fundamentally what is happening to the computing stack. This is a platform shift. A platform is something where applications are built on top of. And this is a platform shift like the platform shift to PCs. New applications were developed to run on a new type of computer. A platform shift to the internet, a new type of computing platform, hosted all kinds of new applications, a platform shift to mobile cloud. In each and every one of these platform shifts, the computing stack was reinvented and new applications were created. This is a new platform shift in the sense that today you're using ChatGPT. It's important to understand that itself is an application, but very importantly, new applications will be built on top of ChatGPT. New applications will be built on top of Anthropic Claude, for example. And so it's a platform shift in that way. AI is really easy to understand if you realize what it can do that you could never do before. Software in the past was effectively pre-recorded. Humans would type and describe the algorithm or the recipe for the computer to execute. It was able to process structured information, meaning you've got to put the name, the address, their account number, their age, where they live. You create these structured tables that software would then go and retrieve information from. We call it SQL queries. SQL is the single most important database engine the world's ever known. Almost everything ran on SQL before now. Now we have a computer that can understand unstructured information, meaning it can look at an image and understand it. It could look at text and understand it. It's completely unstructured. It could listen to sound and understand it, understand the meaning of it, understand the structure of it, and reason about what to do about it. And so for the first time, we now have a computer that is not pre-recorded, but it's processed in real time, meaning that it's able to take the context of the circumstance, whatever the environmental information, the contextual information, and whatever information you give it, it could reason about what is the meaning of that information and reason about your intent, which could be described in a really unstructured way. You describe it however you want to describe it. We call it prompts. But you describe it however you like to describe it, and to the extent that it can understand your intention, it could perform a task for you. Now, the important thing about this is that because we're reinventing that entire computing stack, the question is, what is AI? You're asked, when you think about AI, you think about the AI models. But it's really important to understand industrially, AI is actually essentially a 5-layer cake. At the bottom is energy. Mm-hmm. AI, because it's processed in real time and it generates intelligence in real time, it needs energy to do so. Energy is the first layer. The second layer is the layer that I live in. It's chips and computing infrastructure. The next layer above it is the cloud infrastructure, the cloud services. The layer above that is the AI models. This is where most people think AI is. But don't forget that in order for those models to happen, you have to have all of the layers underneath it. But the most important layer, and this is the layer that's happening right now, the reason why last year was an incredible year, frankly, for AI, is that the AI models made so much progress that the layer above it, which is ultimately the layer that we all need to succeed, the application layer above that. And so this application layer could be in financial services, it could be in healthcare, it could be in manufacturing. This layer on top ultimately is where economic benefit will happen. But the important thing, though, because this computing platform requires all of the layers underneath it, it has started, and everybody's seeing it right now, it has started the largest infrastructure build out in human history. We're now a few $100 billion into it.
That's it.
We're a few $100 billion into it. Larry and I, we get the opportunity to work on many projects together. There are trillions of dollars of infrastructure that needs to be built out. And it's sensible. It's sensible because all of these contexts have to be processed so that the AI so that the models can generate the intelligence necessary to power the applications that ultimately sit on top. And so when you go back and when you reason about it layer by layer by layer, and you realize that the energy sector is now seeing extraordinary growth. The chip sector, TSMC just announced they're going to build 20 new chip plants. Foxconn working with us and Wistron and Quanta building 30 new computer plants, which then go into these AI factories. So we have chip factories, computer factories, and AI factories all being built around the world.
And memory.
And memory, right, exactly. Those chip fabs. Micron has started investing $200 billion in the United States. SK Hynix is doing incredibly. Samsung is doing incredibly. You could see that entire chip layer growing incredibly today. And now, of course, we pay a lot of attention to the model layer, but it's really exciting that the layer above them is really doing fantastically. And now, one indicator is where the VC funding going into. Last year, 2025, was one of the largest years in VC funding ever. And last year, most of the funding went to what is called AI native companies. These are companies in healthcare, they're company in robotics, and company in manufacturing, financial services, all of the large industries in the world. You're seeing huge investments going in to those AI natives because for the first time, the models are good enough to build on top of.
So let's just dive a little further. Obviously, everybody, I'm sure, uses their own chatbot and getting information. So, but you're talking about the dispersion of AI is going to be the key. Let's talk about it, like go into a little more upside ideas related to the dispersion of it in the physical world. You mentioned, obviously, healthcare is a great example of that. But where do you see the transformational opportunities in areas like transportation or science?
Well, last year, I would say last year, I would say three major things happened in AI, in the AI technology layer, the model layer. The first one is that the models themselves started out being curious and interesting, but they hallucinated a great deal. And last year, we can all reasonably accept that these models are better grounded. They could do research. They can reason about circumstances that maybe they weren't trained on, break it down into step-by-step reasoning steps, and come up with a plan to answer your question, do your research, or perform the task. So last year we saw the evolution of language models becoming AI systems that we call agentic systems, agentic AI. The second major breakthrough is the breakthrough of open models. Several years ago, was it a year ago? DeepSeek came out.
Last year.
And DeepSeek was, a lot of people were quite concerned about it. Frankly, DeepSeek was a huge event for most of the industries, most of the companies around the world, because it's the world's first open reasoning model. Since then, a whole bunch of open reasoning models have emerged, and open models has enabled companies and industries, researchers, educators, universities, startups, to be able to use these open models to start something and create something that's domain specific or specialized for their needs. The third area that had enormous progress last year was the concept of physical intelligence, of physical AI. AI that understands not just language, but AI understands, if you will, nature. And it could be AI that understands the physical world here, AIs that understand proteins, chemicals, natural physics, for example, fluid dynamics, particle physics, quantum physics, AIs that are now learning all these different structures and different languages, if you will. Proteins is essentially a language. And so all of these AIs are now making such enormous progress that these industrial companies, whether it's manufacturing or drug discovery, are really making great progress. And one of the great indicators is a partnership that we had with Lilly, that they realize now that AI has made such extraordinary progress in understanding the structure of proteins and the structure of chemicals, essentially be able to interact and talk to the proteins like we talk to ChatGPT, we're going to see some really big breakthroughs.
So all these breakthroughs raises concerns about the human element. You and I have had many conversations on this, but we need to tell the whole audience, there is a huge concern that AI is going to displace jobs. And you've been arguing the opposite. Obviously, the build out of AI, as you talked about, the biggest infrastructure build out in history is going to occur, which
energy is creating jobs.
Yeah.
Chips industry is creating jobs. The infrastructure layer is creating jobs. Land, power, and shell. Jobs, jobs, jobs. I mean, right? It's incredible.
So let's get into that in a little more detail. So you actually believe we're going to face labor shortages. And so how do you see that AI and robotics changing the nature of work rather than eliminating it?
Yeah, there's several different ways that we could think through it. First of all, this is the largest infrastructure build out in human history. Yep. That's going to create a lot of jobs. And it's wonderful that the jobs are related to tradecraft. We're going to have plumbers and electricians and construction and steel workers and network technicians and people who install and fit out the equipment. And all of these jobs, we're going to, in the United States, we're seeing quite a significant boom in this area. Salaries have gone up, nearly doubled. Yeah. And so we're talking about six-figure salaries for people who are building chip factories or computer factories or AI factories. And we have a great shortage in that. And I'm really delighted to see so many people in so many countries really recognizing this important area. You know, everybody should be able to make a great living. You don't need to have a PhD in computer science to do so. And so I'm delighted to see that. The second thing to realize, and so we theorize about the automation of tasks and things like that, and what is the implication to jobs. You know, I'll just offer some anecdotes. These are real world anecdotes of what has actually happened. Remember 10 years ago, one of the first professions that everybody thought was going to get wiped out was radiology. And the reason for that was the first AI that became superhuman in capability was computer vision. And one of the largest applications of computer vision is studying scans by radiologists. Well, 10 years later, it is true that AI has now completely permeated and diffused into every aspect of radiology. And it is true that radiologists use AI to study scans now. The impact is 100%, and the impact is completely real. However, not surprisingly, I say not surprisingly, if you reason from first principles, not surprisingly, the number of radiologists have gone up.
Is that because of lack of trust or is that because the human interaction with the results of AI is a better outcome?
Exactly. The reason for that is because a radiologist, their purpose of their job is to diagnose disease, to help patients diagnose disease. That's the purpose of their job. The task of the job includes studying scans. The fact that they're able to study scans now infinitely fast allows them to spend more time with patients, diagnosing their disease, interacting with the patients, interacting with other clinicians. Well, surprisingly, also not surprisingly actually, as a result of that, the number of patients that the hospital can see has gone up. Because, you know, there are a lot of people waiting a long time to get their scans done. And so now, because the number of patients have gone up, the revenues of the hospital has gone up, they hire more radiologists. This is the same thing as happening to nurses. We're 5 million nurses short in the United States. As a result of using AI to do the charting and the transcription of the patient visits, nurses spend half of their time charting.
Documenting.
And now they could use AI technology, and one particular company, Abridge, they're a partner of ours doing incredible work. As a result of that, the nurses could spend more time visiting patients.
Human touch.
That's right. And because you can now see more patients, and we're no longer less bottlenecked by the number of nurses, more patients could get into the hospital sooner. As a result, Hospitals do better, they hire more nurses. And so surprisingly, AI is increasing their not surprisingly, AI is increasing their productivity. As a result, the hospitals are doing better. They want to hire more people. You have too many people waiting too long to get into hospitals. And so these are two perfect examples. Now, the easiest way to think about what is the impact of AI on a particular job is to understand whether the job, what is the purpose of the job, and what is the task of the job. If you just put a camera on the two of us and just watched us, you would probably think the two of us are typists because I spend all of my time typing. And so if AI could automate so much word prediction and help us type, then we would be out of jobs. But obviously that's not our purpose. And so the question is, what is the purpose of your job? In the case of radiologists and nurses, is to care for people. And that purpose is enhanced and made more productive because the task has automated. To the extent that you can reason about each one of the people's purpose versus the task, I think it's a helpful framework.
Let's move this beyond the developed economies. Help me understand how AI is to broaden the world and help the world. I read an Anthropic piece this past weekend that basically said the utilization of AI most recently is very dominant by the educated society. And they're even seeing the educated component of each society being heavily more utilized. And obviously they're using it against their own model, Claude, so it may have its own biases. So how do we ensure that AI is a transformational technology, maybe like what Wi-Fi and 5G was for the emerging world? And when you intersect that, what does it mean for the emerging world? And John, how do we broaden the global economy? And two, getting back to the whole job situation with robotics and AI, there is going to be some substitution there. And there's substitution in the United States already going on. We may be creating more plumbers and electricians, but we probably need less analysts at financial institutions. Lawyers need less analysts, because they're able to accumulate the data faster. So let's just pivot on to the emerging world for a second, in the developing world. How do you see that play out?
Well, first of all, AI is infrastructure, and there's not one country in the world, I can't imagine, that you need to have AI as part of your infrastructure, because every country has its electricity, you have your roads, you should have AI as part of your infrastructure. Of course, you could always import AI, but AI is not so incredibly hard to train these days, and because there are so many open models, these open models with your local expertise, you should be able to create models that are helpful to your own country. And so I really believe that every country should get involved to build AI infrastructure, build your own AI, take advantage of your fundamental natural resource, which is your language and culture, develop your AI, continue to refine it, and have your national intelligence be part of your ecosystem. And so I think that's number one. And number two, remember, AI is super easy to use. It's the easiest software to use in history, and that's the reason why it's the fastest growing and most rapidly adopted. I mean, in just a couple of 2-3 years, it's coming up to almost a billion people. I think, first of all, Claude is incredible. Anthropic has made a huge progress, huge leap in developing Claude. Yep. We use it all over our company. The coding capability of Claude, its reasoning capability, its ability is just really incredible. And anybody who's a software company really ought to get involved and use it. On the other hand, ChatGPT is probably the most successful consumer AI in history. And its ease of use and its approachability, I think everybody should get involved. And whether it's somebody in a developing country or a student, it is very clear that it is essential to learn how to use AI, how to direct an AI, how to prompt an AI, how to manage an AI, how to guardrail the AI, evaluate the AI. These skills are no different than leading people, managing people, things that you and I do all the time. So in the future, instead of biological, carbon-based AIs, in the future we're also going to have digital versions of AIs, silicon versions of AIs, and we'll have to manage them. They're just part of our digital workforce, if you will. And so I would advocate that for the developing countries, build your infrastructure, get engaged in AI, and recognize that AI is likely to close the technology divide.
Right.
Because it is so easy to use and so abundant and so accessible. And so, I'm actually fairly optimistic about the potential of AI to lift the countries that are emerging, and for many people who haven't had computer science degree, all of you can be programmers now, And so in the past, we had to learn how to program a computer. Now you program a computer by saying to the computer, how do I program you? And if you don't know how to use an AI, just go up to the AI and say, I don't know how to use an AI. How do I use an AI? And it would explain it to you. And you say, I like to write a program to create my own website. How do I do that?
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Well, the world comes together in Davos in a sense every single year. We talk about AI, we talk about commerce, we could talk about clean energy, but I dare say the focus this time is about the relation between Europe and the United States and Donald Trump. Is that impacting business at all? The India story is always very important over here. We've got several Indian pavilions over here, lots of Indian business leaders. We've got excellent business leaders and those linked with Indian business right here in the NDTV studio. Rajiv Mimani with us, Chandrajit Banerjee and Sanjeev Krishnan. Thank you all very much for being with us. Rajiv, I have to ask you the obvious question. How closely are you, as CII President, looking at what might emerge tomorrow with Donald Trump and what he says here?
No, I have not spent any time in predicting. I think it's a futile effort. But clearly, I think it's on the top of the agenda of everyone. I think it's in the interest of the global economy, of the entire world, that I think the relationship between Europe and US, I think, settle down a bit. I think that's the key thing. I think that's the key talking point. From our perspective, I think the way we are looking at it is, how is India doing? How is India faring? And I think there, I would say that both from how our macroeconomic numbers are are being looked at, the quality of reforms and the number of reforms that are being done, also the trade diversification that India has done, particularly the comments around the EU deal, UK deal, EFTA, Australia, New Zealand, the strengthening relationship with Middle East. And I think the reindustrialization of India through manufacturing and advanced manufacturing, I think in every interaction that we are having, I think that viewed very positively. Obviously, there's always a question on the India-US trade deal, and at least our view is that it's something that in the next, I think distant future, I think hopefully, at least if not the entire thing, at least some parts of it should get sorted out.
One of the reasons I was asking about Trump is also because what's happening here has resulted in the global markets being in a bit of a spook. They're scared. Our markets have suffered, the FTSE has suffered as well, and therefore this insecurity that we find in geopolitics is impacting markets around the world. Is that a huge concern for you?
Well, I mean, certainty certainly has a premium. So there's no question about it that when there is so much uncertainty as there is now, markets will behave the way they have. I think, as Rajiv said, I think the conversations around here largely have been on US and Europe in some ways. But I would actually, without sidestepping your question, I would say that just the fact that the India-EU deal might get announced very soon, I think is a huge positive that we'll take away from Davos. And from our perspective, again, maybe corroborating what Rajiv said, I think Indian macro has been very, very resilient through 2025. Bunch of reforms which have been done. Even the survey that we released yesterday actually shows that a lot of Indian CEOs are now saying that we want to focus on India, not so much necessarily wanting to align themselves with the global business. And again, the trade basket diversification beyond, some places where there are challenges that India has seen is enormous, including in sectors which are labor intensive. And I think there are many positives that we'll take back from Davos.
Yeah. One of the best aspects of the India story of late is the IMF having projected their numbers, GDP growth numbers for India upwards. And that upward movement comes despite the fact that we continue to suffer from tariffs from America. What does that say about the state of India's economy?
See, Vishnu, we find that capacity utilization in India pretty strong. Sectors after sectors are, investing. Adding on to investments, number one. Number two, if you really look at the health of the Indian economy as such, it's resilient, it's strong. If you really look at the way the private sector is doing very well. Second, if you really look at how the banks are today, well flushed, and the health of the banks are much improved than what it was earlier. Next, if you really go in, you find the rural demand.
All the top voices from Davos right here at NDTV Profit, and we're speaking with Mohit Joshi, CEO and MD of Tech Mahindra. Mohit, are you liking Davos so far? We're speaking at a very sunny time, so it's nice and warm.
No, it's been wonderful, right? I mean, obviously, like anybody in our business, you have to be in Davos every single year, and I've completed more than a decade over here. But this year has been nice. I think the participation has been very broad and extensive. Thankfully, it's been sunny, it hasn't snowed, and a good set of meetings, a good set of dialogues. So, yes, so far, very good.
What do you think is going to happen in the Trump address? Is that something you're looking forward to?
That is unfortunately beyond my pay grade. My hope is that given the fact that all the leaders are over here in Davos, that we find some amicable solution and we step off the ledge in a manner of speaking. Certainly, I think the market reaction yesterday has been quite negative. And so hopefully, as always, the world finds a way through the latest crisis.
Mohit, if I look at you, and I don't want to use the word turnaround, but definitely the vast improvement in the numbers for Tech Mahindra since you took over. It's displaying in the stock and everything that you've done. For you as a leader in the industry you are, do you see more challenges ahead, more headwinds ahead because of what's happening geopolitically, what's happening with the rupee, what's happening with discretionary appetite, etc. in the United States? How do you look at it?
So look, I think there is no denying it that the past 3 years have been challenging for the industry, especially in terms of growth, right? And so for us, it was doubly difficult because we were seeking to drive a turnaround and a transformation within the period. But so far, we have managed within the constraints that the market has set for us. When I look at Tech Mahindra specifically, I do feel that our geography exposure is helping, because while we get about half of our revenue from the Americas, about a quarter of our revenue comes from Europe, about a quarter again comes from India, Middle East, Africa, and Asia Pacific and Japan. So geographically, we're quite well distributed, right? Again, from a sectoral perspective, our largest exposure is to telco. Telco is a very national business, right? It is largely a domestic business pretty much across the world. Manufacturing, again, has seen a resurgence across the globe. That is our second largest vertical. Financial services, healthcare, and life sciences, and retail. Again, these are businesses where we're looking to establish a very strong challenger position. So I do feel that, surprisingly for a company, of our size, the calibration that we have, sort of the spread that we have, has actually worked out quite well for us. Obviously, in addition to this, a lot of the steps that we've taken to focus the organization, to drive an increase in productivity, and to really build the organization for the future, a lot of those bets have thankfully paid off so far, though clearly too early to declare victory.
So I'm just going to come to the first part about telecom and a nationalistic business in that sense. Concerns over there from the American context. Also, do you think that the concentration of business coming from America will have to strategically shift, or you'll wait for this crisis, quote unquote, to tide over?
No, I think, look, telecom obviously has been a business that has been challenged over the past, over the past 4 or 5 years. There was that huge wave of investment that happened in 5G. And I feel most telecom companies have really struggled to monetize the revenue from 5G, right? But over the past 1 year or so, we have seen signs of stabilization and growth in the business. Our Americas business has done exceedingly well. Telco business has done exceedingly well in the recent quarter. So after a long time, we had both quarter-on-quarter and year-on-year increases. Our European telecom business is doing really well, but that's been driven more by the consolidation, where we've been winning in terms of consolidation. And Asia Pacific continues to be a growth area from a telecoms perspective, right? As far as the Americas is concerned, look, candidly, it is too large a market to ignore, right? The fact of the matter is that the American market in terms of enterprise technology is by far the single largest in the world. Just to give you an example, the top 10 banks in the US spend more than the top 100 banks in the world if you exclude the American banks, right? So clearly the spend pools there are so large, the innovation being driven is so large, the ecosystem partnerships, whether it's with the Microsoft or AWS, it is a market that you can ignore at your own peril.
Fair enough, but for what Indian IT companies provide and the requirement from this, two challenges there. One is AI, and is that going to really work for companies which largely provide services? Will the requirements reduce? And I know you're on top of your game on AI, so I see that smile on your face. But the second one also, if it's become very nationalistic, polarized, is it going to be tougher to do business there? For example, would you feel safe sending Indian employees there with what is happening with immigration, etc.?
The fact of the matter is that obviously we're picking out individual instances and building a narrative out of it. I have, lived in the US for 10 years. I've been living in the UK for the past 16 years. And by and large, right, these are very safe, welcoming places to live in. There is a real desire, if you speak to policymakers, with exceptions, to build sort of the technology workforce of the future. And they recognize the role that Indian companies play in transforming their own enterprises towards greater productivity, greater innovation. So I personally would feel very comfortable advising any young person, including my children, if they wanted to move to the US or they wanted to move to Germany. These are, by and large, a few exceptions excluded, very safe and welcoming places where I feel Indian technology industry still has a long way to go. As far as your other question is concerned, look, this business, the IT services business is always being transformed, right? You always, every single year, have to pick up new things and learn new things, whether it was the metaverse a few years ago, cryptocurrencies, Bitcoin, blockchain, distributed ledger. More recently, it is AI, agentic. People are talking about sort of whole world AI. So I feel the industry will keep changing. And as long as you keep changing, as long as you keep picking up new skills, hiring the best talent in the world, I feel the future is very safe, right? The example I'll give you, is if you look at some of the audit firms like Deloitte or an EY, they've been around for 100+ years. These firms started out as tax businesses, as audit businesses, then they became advisory businesses, they became strategic consulting businesses, and now they become technology businesses, right? They compete with us. The only reason they have survived and grown for the past 100 years is not because the business has stayed the same. It's because they have a really deep understanding of their clients and their industries, and that is more than anything else.
What is the adaptation you see in your context with AI at the bedrock?
Yeah.
Because, I mean, world calls India the anti-AI trade.
Yeah.
Someone has to go out and prove them wrong.
Yeah. Look, I think the anti-AI trade is because the rest of the world really is an anti-AI trade, right? The US is the AI trade and the rest of the world is the anti-AI trade. I do feel that for us, a lot of the work, so there are three things that we're doing, right? One is obviously we're building the tooling to allow us to enable our clients to get the benefits of AI. We're investing significantly from an R&D perspective, right? So if you look at it, we are the only GSI to be selected for the National AI Mission. We have built a number of large language models from scratch. And now we're thinking about sort of a new model to price with AI, right? So I feel that the work that we've done, which was recently published with Forrester, how do you price for human labor? How do you price for digital labor? And the age-old conundrum of the industry, how do you break out from this linear pattern of linkage to human labor? This is our opportunity, right? So I really feel that AI will be, mark my words, in a couple of years, the tailwind, like COVID, right, that propels the industry to the next phase of growth and relevance.
How do you see it working out in terms of your corporate performance? And I know you've posted results, good results, but how do you see AI becoming a tangible part of the revenue stream?
Yeah.
Because right now it's pilot, let's see what happens, it's up in the air. Are we close enough to put a number to it, to what it would mean for you as a business?
We're trying to find out a meaningful metric to report that would show the progress that we're making in AI, right?
Look, I'm already reporting.
Yeah, but my sense is that either you're applying too narrow an aperture, right, which is the work that you're doing, which is specifically to build AI models or to build AI consulting. And I would challenge anybody that it is going to be at most a few percentage points of the revenue. Or it's a very broad aperture, right, which is all the clients with whom we're working on AI projects, or where our work is being delivered using AI, like a code assist platform or a contact center AI platform, right? Which is 100% of the clients. So it's either going to be close to zero or it's going to be 100%, right? It is like the question, like I mentioned to a colleague yesterday. If you ask me how many people in India get more than $5,000 in income per year, it's relatively easy to calculate, right? If you ask me how many people in India are smart, it's a very hard question to answer.
Subjective.
Right? And so the thing with AI is that there's a huge amount of subjectivity. And so to come to that common benchmark is what we've been trying to accomplish.
Okay. We're speaking ahead of the budget, Mohit. I'll ask a couple of questions only because
Sure.
I know you have another meeting to rush to. That's how Davos is. What do you hope to see from the budget this year in the context of the geopolitical climate and how India needs to remain resilient?
So look, I think from a budget perspective, clearly some of the tax changes that have happened have given a boost to the economy, right? And I think it's very important that we build India as a significant consumption economy as well as an export economy. And I feel a lot of the steps to drive consumption have been very productive. I feel the government also has been quite forward-looking in terms of the National AI Mission. We're really proud of our part there. One of the things that our teams are doing, which is very interesting, is to build a large language model in Hindi so that students from class 6 to class 12 can ask physics-related questions and to learn physics effectively. I think it's a remarkable model, right? Because the number of physics teachers and good math teachers is very limited, especially in the vernacular languages. So to allow students to learn physics in their own language by querying a model is very powerful. And to think that this is not being done by a for-profit company, this is being done by the government in partnership with us. So it will be available to hundreds of millions of students, right? I feel that's a really powerful example of a transformation.
And last thing, if you have an opportunity to meet President Trump, what is the one thing you would say or ask him? Into the camera.
I think, candidly, I'd probably just ask for a picture with him with a big V sign and step away. I would certainly not ask him anything controversial because...
this is a hypothetical question.
I know, but...
You don't need to be so safe.
The reality is that you do not want to get to his wrong side. And so even hypothetically, I don't want to risk asking a question because I might inadvertently manifest something very dangerous for myself.
Okay, we'll leave it at that. Thank you so much, Mohit, for speaking with us.
Thank you. Lovely to see you. Thank you again.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance, where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing. I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards. Coming soon on the NDTV network.
India's auto industry is on a dream run aided by the GST 2.0 cuts, and in calendar year 2025, the industry recorded 5% jump in wholesale sales. The main jewel in the crown for the industry was the Q3 performance, in which wholesales for the industry recorded an 18% jump. But in order for a smooth ride, the industry has a budget wish list, and they believe that if the government can make certain announcements, then this dream run will continue.
Skoda Auto Volkswagen India is of the view that the upcoming budget should have announcements for the further growth of the EV segment. As the union budget approaches after the successful and welcome implementation of GST 2.0, the industry will be looking for policy continuity and long-term clarity. Sustained support for domestic manufacturing and increased allocation for road and transport infrastructure will be key priorities. Rationalizing the inverted duty structure for EVs will strengthen domestic manufacturing and competitiveness and will further accelerate India's transition to sustainable mobility. Continued focus on building the EV ecosystem alongside measures that support household disposable incomes will be essential to sustain demand momentum and reinforce the sector's role in India's broader economic growth. On the other hand, the CV and farm equipment players are of the view that the government has already been proactive with policies like GST 2.0 and RBI interest rate reductions. However, they expect the government to continue its growth-led initiatives and reforms for the agriculture sector.
So we are just a few weeks away from the union budget. What are your expectations from Ashok Leyland's perspective?
Government these days is so proactive that we don't need to wait for a budget really. One thing that the government should consider is really coming up with some program or some scheme around scrappage of the old vehicles.
The government in the past 4 to 5 years have done all the positive gestures and announcements as far as the farming community is concerned. In terms of visibility, in terms of incentivization, in terms of ensuring the money reaches the farmer. We are a 1.4 billion population today in India. We have to be self-sufficient. In many areas, we are self-sufficient. We can also become a food basket for the world. And also, as I mentioned slightly earlier, that in mechanization, we're only 47% in comparison to America and Canada at 90%. So I think that is the opportunity which the government and the industry and the farming community need to work towards in convergence.
I would certainly hope it's a consumption and a growth-led budget. As long as the domestic growth and the domestic demand continues to be robust, the industry will perform. And lastly, as we've been discussing exports, if there are some things that can be done to be able to help and boost exports, if there are some policy interventions that can be brought in there, that would be most welcome. If there are some policy corrections on duty drawback and things like that, and those conversations are on, the government has been considering a few of these things to strengthen the general capability of Indian exportability. That's the only thing we can continue to push for.
India's auto industry expects to continue its journey on the 5th gear, all thanks to GST 2.0 cuts. The industry also believes that in the upcoming budget, the government government make certain announcements through which the government can increase the EV infrastructure across the country. Besides that, the industry has also suggested to bring in a scrappage policy for commercial vehicle segment, and at the same time the industry has also demanded that the government must make certain announcements and certain policies which can increase farm mechanization across the country. The industry believes that if the government is able to support the industry in the long term, then nothing can stop India from achieving the tag of becoming the largest auto industry in the whole world. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and today we are going to discuss about two very important things. One, the budget, and two, as to how the markets are going to look forward from here on. We've seen a free fall in the past 2 days, and what can you expect going forward? How can you construct your portfolio is going to be the second topic that we're going to take up. But before that, budget is around the corner, and it's important to understand as to what should you expect from the government, what were the changes that actually took place in the last budget, and in terms of what your expectations from the budget should be. And to discuss all of this, we are joined by Anant Ladda, who is the founder for Invest Aaj for Kal, joining us now. Anant, always a pleasure speaking with you. My first question to you is, before we go on to the expectations, if you can help our viewers quickly understand the brief of what happened in the last budget and what were the highlights.
Hi, firstly, thank you so much for having me on the show. Always fun and discussing interesting topics with you. I feel the biggest thing which happened in last budget was that income tax up to 12 lakh was effectively made tax-free. At the same time, rebates and standard deduction were increased. This was the biggest highlight of last budget. Along with it, we had some other features like 100% FDI limit was increased, NSS withdrawal was made tax-free, MSME support was increased, credit guarantee was doubled to 10 crores, which was actually good for the MSME segment. Even duties were cut on EV. So we had some different positives in the last budget, but the biggest positive or the biggest highlight was tax relief up to 12 lakh rupees.
Okay, all right. Now, going forward from a personal taxation point of view, what do you think are the expectations that, people have today in terms of what changes need to be made? And, this probably, if you can, help us break it down into different categories as to, this is the most important thing that needs to be done. This, could be taken up in the next budget and so on. If you can help us break that down.
See, I'll start with the most important point. That is the capital gain taxation. It is hurting Indian market. It is hurting FIIs and FIIs are regularly withdrawing fund. I feel we need to give some relaxation, specifically in the long-term taxation. I'll also explain the logic behind it. Till 2004, we had long-term taxation in India, but in 2004, long-term taxation was removed and an STT was introduced. STT was even increased in the coming years. Eventually, what we saw was recently STT is already there. Plus income tax taxation on long-term capital gain is also introduced. So kind of we have double taxation specifically on equity investments. Any which ways, whenever an investor is investing in equity, he is taking an additional risk of volatility, additional risk of market, additional risk of company's performance. Plus, punishing him with more taxation, I think it is not a welcome step. We can probably see some relaxation in income tax, specifically on the capital gain side, is what I'm expecting. This is my first and the foremost expectations from this budget. Second important expectation is, presently in India, companies are taxed better as compared to individuals, but I feel eventually we need to have some synchronization between the two, and taxation which is applied on company and taxation which is applied on individuals have to come on a similar ground. So we might see some reduction or some relaxation in individual taxation. Obviously, they'll mange more, so we will be expecting that this 12 lakh limit will be further increased to maybe 14 lakhs or 15 lakhs, further increasing the tax bracket of India and further motivating individuals to increase taxation. So these three are, I feel, the most important pointers as far as I am concerned. Somewhat less important pointers, but which might be considered is, at times we have many families where either one of the couple is earning. So there has to be an option of dual filing of the returns, which will give them benefit of taxation, and keeping both the individuals in mind, they might get a greater deduction. So this might be on the cards. Next important point might be increasing the 44 AD or 44 ADA limit. So these might be some additional pointers, but the first three are the most important pointers. Specifically, capital gain taxation is for me the most important pointer, looking at the regular outflows which we are seeing from FIS. In 2026 also, I think more than 25,000 crores has flown out of India, specifically from FIS. Already rupee is depreciating. So we need kind of some good news in the market, and this will be a cherry on the cake.
Anant, are you expecting any changes in terms of where new tax regime is concerned, further relief for somebody who's opting for the new regime, and make it more attractable so that more people shift to the new regime?
Absolutely, yes. I think department is quite clear that they want new regime to flourish, and they kind of want to remove the old regime. So if they keep their stance, which I think they will, obviously the limits will increase, benefits will increase, and probably people will be more attracted towards filing their tax regime in the new tax regime. So yes, absolutely yes. I am very sure something bonanza will be coming for the new tax regime filers.
All right. Just one last question, Anand, because you must be talking to a lot of people, right? Just want to understand, from the last budget, the relief that we already got in the new tax regime, right? Has that actually, kind of translated into savings? Did that feel light on pocket? What is the conversation looking like when you talk to people?
See, I feel the biggest benefit was that people have started filing their returns. A lot of people were not filing their returns, but now they're filing their returns. Once they file their return, they have what we call white key income in their bank account, and they can probably get more loans. It is easy for them to process their file. It is easy for them to buy a property, buy an asset. Everything is becoming simpler. Still, I feel we have a long way to go. We need to educate people further, importance of having a proper return, filing a return. Maybe it's a nil return, but we need to file it and we need to show it. We need to further educate people. But yes, we are on the right direction. And if this limit is increased to 15 lakhs, I think it will be a big plus for the complete budget.
Absolutely. And I think all of us will be hoping for that to happen. Anand, thank you so much for giving us those details and, of course, taking us through the highlights of the budget as well as what can you expect from this particular budget. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, the second topic that we're going to discuss today is with regards to where markets stand. Now, we've seen a free fall in the past 2 odd days, and you as an investor or you as a trader, what should you do next? What changes should you make in terms of where your portfolio stands? Should this be a buy on the dip strategy? All of these questions are going to be answered in this next segment. And to take us through all of these questions, we are joined by Sachin Relekar, who's the equity fund manager at Axis AMC, joining us now. Sachin, thank you so much for taking out the time. My first question, probably a worry that a lot of investors have right now, is with the kind of free fall that we've seen. A lot of people know that this is on account of geopolitical uncertainty that's going on. We've seen European markets 2 days straight of red. We've seen Asian markets also not, cheering the kind of commentary coming in from the world leaders, but just want to understand as to what is happening, and as an investor, should one be worried or this should be a buy on the dip strategy?
So, as you're also alluding to certain things, what is happening is the genesis of that is more towards the global uncertainties. Rather than there are anything to do with the domestic situations per se. We have a very stable policy environment. We are likely to have a budget on the 1st of the next month. So those things are happening as per the expectations. I don't see any major policy changes also to happen in the near term or even in the medium term. These are something which are continuing for last more than a decade. Also, the reform direction domestically has picked up quite a lot. So those things are there. But at the same time, globally, if you see, there are a lot of uncertainties, starting with the change in the administration in US, and that has come out the change in the policy towards the trade, towards the geopolitics, and the shifting of macros is actually in alignment with that. So what we're seeing now, and some of that actually we are seeing in last year, April 2nd, 2025, when the reciprocal tariffs got announced first time. And that time also global markets reacted very in a jittery fashion. And now I think the similar things are also again playing out. If you closely see what exactly has happened is the hard currencies are actually depreciated. The dollar has depreciated against the dollar. The capital has moved into the safe haven asset like gold. It's the strongest performing asset class in the last 1 year or so. And followed by that, the industrial commodities also have performed quite strongly. The reflection of that is actually the weaker currencies is there. And this also has an impact on the long term or the riskier asset class, wherever some element of uncertainty is there, which is where the equities have got impacted. India also is going through a trade negotiation, and there is some bit of a delay or some bit of a versus expectation, some kind of uncertainty is there in the minds of investors. And that has affected the Indian markets to an extent. But however, the majority of the fall in the market in our assessment is actually explained by how the global macros have shifted and how the discounting rates or the risk premium, which is reflected in the long-term bond yields, is actually affecting the valuations over here. And the other part of your question was how investors should respond to this and how they can adjust. So basically all these things need to be taken into account. But at the same time, as I started with saying that the domestic outlooks and where our focus is, majority has remained unchanged. And we had seen in the previous major crisis also, some of these things actually sentiment-wise also change also very fast. It's unpredictable. I also have to say that. But I don't think the outlook-wise from a company position point of view has changed very, very drastically because of this. There are companies which have linkages or direct impact from trade negotiations, etc. But overall listed space does not have a very large linkage. And therefore, I think one need not have to be really defocused from the investment framework or the discipline which is there.
Understood. So then, Sachin, you talked about valuations, but do you think that the current correction that we've seen, and even 2025 was an year of consolidation, right? Do you think now there is some comfort in terms of where valuations stand?
You see, large cap valuations are closer to long-term averages. That's not a discomforting space. First of all, I'm talking about the top 100 names. The mid-cap valuations also have moved or ticked down, like they were about closer to 2 standard deviation from the long-term averages. And it has actually also ticked down quite a lot. In certain names, actually, in our assessment also, we are seeing perhaps the downside wise, unless we create a very bearish kind of outlook, they will not actually show that kind of a price correction further on a fundamental basis. Of course, the sentiments can weigh on the share prices in a different manner, but in that sense, that portion is so the valuation concern by and I'll say at least in top 100 is not very prominent. In next 150 names of the mid cap bucket, there is some improvement in the valuation comfort. Although there are expensive names, I will not deny that. I mean, there are expensive names, although they have a growth rates or the growth expectation is also very high. But from where we are, maybe 1 year ago or 2024 end to now, of course, the valuation has improved. In small cap, I think one cannot just go by one parameter because it's a very large universe. I mean, anything beyond 250 is actually a small cap, and it's a very large universe, and therefore it's actually becomes very individual company specific. And over there, if I just take that same barometer or same measurements, then perhaps the valuations are not cooled off as much. But as I said, the individual names can differ quite a lot in that segment, and that basket is much wider. Perhaps I'll not use the same parameter over there.
Understood.
So leaving aside that, at least for the top 200 or top 250 names, there is some bit of valuation comfort which is there. What is weighing on right now is more of a sentiment, in my view. I'm not calling like things are going to change in a quick fashion, because these macros shift which is happening perhaps can be a long term, because there's a policy change which has been talked about, is quite radical also. Right. I mean, some of these things are actually getting questioned there.
Right, got it. Sachin, so do you think that the earnings cycle has now bottomed out and we will now see the recovery going forward? We're already in the middle of Q3 numbers coming out, and we've seen some positives coming in, right? It's not as bad as it was in Q1 for that matter, or Q2 for that matter. What is your reading?
Certain. So I think the large caps IT numbers have been there already, most of them. Now some of the mid caps will also start reporting. You are seeing the print is actually slightly above expectation, not below expectation. The commentary wise, although it's cautious, but there is of course some kind of positivity around it. Not the great positivity. Nobody is calling out double-digit revenue growth, etc. But all that is predicated on what is happening to the budget finalization, which will get finalized for the US clients over there. So yes, there is a cautious optimism which is there. I will say caution is more than the optimism, but still that cautious optimism is there, and that is one basket. So that which has actually given a positive outcomes or positive results. Stocks might have reacted differently depending on what was built in for the expectation, but commentary wise and what number is versus the expectation when we started September was much better. I think similar thing can be talked about financial results. They have corrected some of the companies which have reported numbers, but if you look at the stability, the earning quality, so all those parameters are good. So banks have reported healthy growth, the margins have been much more stable, and the asset qualities have actually continued to be very stable. So all the three parameters which matters for the financial names or the lenders per se has been quite healthier. So those are the buckets which are reported. So in a way, the outlook on just from those names is not suggesting any kind of negativity per se. Now, as we progress, of course, more companies will report, and so I think what you're saying in terms of the bottoming out, I think they are not like any major upsets on the expectations so far. So it should move in line with expectation broadly. And as we'll see, perhaps we will also have certain things which will come into the place over a period of time, which has become a bit of unpredictability, which is trade negotiations, all those things. That will actually also improve a lot of sentiment around it. And that will give the spillifts to the sentiment as well.
Okay. Sachin, a lot of sectors have already seen a lot of growth in terms of where the stock performance is concerned, especially something like metals, right? So many counters have seen the uptick that we've seen in the last couple of months. what all sectors are you going to be watching out for 2026? One thing. And secondly, would metals still be on your radar considering the run-up it's seen in the past couple of months?
Yeah, industrial commodities are definitely on our radar. Although our ownership in that space is very minuscule as of now. The way we look at it is basically we are just looking at the bottom-up argument also for the individual companies to buy into. While as I said, the hardening of bond yields or depreciation of dollar per se is actually reflected into the precious commodities rising, and that is also followed by industrial commodities which are continue to go up. The one way of hedging that is either by the mining stocks which are into those commodities, which are unfortunately is not available in the Indian listed space, and then there is industrial commodities like aluminum and maybe to an extent silver, which is where one can allocate. We are, as I said, that is something we are watchful about, but we are also assessing the bottom-up arguments in that, and perhaps we're also looking at what is the long-term averages for the metals which have been projected by the global analyst also, and how much is factored into the valuations. These are some of the things which are weighing that will continuously be watched out for sure, and not only from owning the commodities per se, but what is the kind of impact of those will be there on the industrial names, automobile names. That risk assessment also is to be done. So there are both aspects of this. So we are watching that. As of now, our ownership is little less, but at the same time, we are also more watchful about the risk to the earnings or the margins for the users of those commodities. That's how we are looking at it. In terms of the sectors which we are keenly, or where our allocation is slight overweight compared to the index, are consumer discretionary. Within that, there is automobile, there is consumer internet also, and there are certain platform companies also are there. This is one of the key overweights. Followed by that, we are also quite overweight in defense and industrials, wherever the energy transition themes are there. Those are the places where our allocation is meaningfully higher than the benchmark. Okay. These are some of the things which are watching very carefully. Financial is another important segment for us to be watchful about.
So Sachin, then is 2026 going to be the year for large caps still, or will the recovery in mid caps and small caps take place in 2026?
I think recovery in mid and small caps, the way we are looking at, is going to be very, very name specific and a very, very selective basis. Companies have been showing a clear break from the past in terms of the earning growth or in terms of the improvement in the visibility will be the ones which investors will favor. That is how we are also looking at that. But at the same time, large caps is more steadier and more predictable space, something where the volatility and the earnings is likely to be less. And of course, as I said, the valuation comfort is better. I think that is something obviously will be a major portion where we will also allocate. At the same time, I think the uncertainty which is emanating from the shifts in the macros, that I think is likely to be a little more longer drawn out, because some of these steps and some of these agreements, negotiations are going to continue, and according to that, things are going to remain reactive to that or volatile to that. So that also need to be watchful about.
Okay, Sachin, thank you so much for giving us those insights, and I'm sure viewers will now understand as to how all of these factors are going to impact their portfolio and what they can expect from markets in 2026. Thank you so much for taking out the time and helping us understand everything that you just said.
Thank you for having us. Thank you very much.
All right, so we talked about what you can expect from the budget, what you can expect from markets in 2026, but I think it's also important to address two main things. One being the fall in Bitcoin that we've witnessed in the past couple of weeks, and the kind of fall has been drastic in nature. Now, to understand as to what is causing this fall in Bitcoins and to help us understand as to what you can expect going forward, we are now joined by Ridhima, who will give us a perspective on what is causing the free fall in the Bitcoins and what can you expect going forward. Ridhima, over to you.
Bitcoin has been under pressure in the recent sessions, slipping from earlier highs and losing key support levels. Here's what's driving the cryptocurrency lower and why investors are concerned. Bitcoin, the world's largest cryptocurrency, has slid to around $90,000 level after a broad sell-off in the global markets, with its total crypto market down about 3% and major tokens in the red. First, the geopolitical uncertainty and rising trade tensions, particularly concerns surrounding US-EU tariff threats, have pushed investors towards traditional safe havens like gold, which has hit record highs, while risk assets including bitcoins are seeing outflows. Secondly, the market sentiment has turned risk off as macroeconomic factors bite. Investors are reducing exposure to higher risk assets amid worries over interest rates, regulatory uncertainty, and global fiscal pressures, conditions that historically dampen demand for the crypto. Thirdly, the technical factors are also at play. Bitcoin has failed to hold key breakout levels and breached important averages, triggering bearish signals that can prompt automated sell orders and stop losses. Analysts warn that this could push prices even lower if support doesn't return. On the regulatory front, delays in major crypto-related bills such as the Digital Asset Market Clarity Act in the US have also weighed on the sentiment, with prices dipping after key hearings were postponed. While some large buyers like Strategy continue to accumulate Bitcoin, their heavy unrealized losses and the overall selling pressure suggest that confidence is being tested rather than restored in the short term.
All right, Ridhima, thank you so much for getting us those details. Everybody who is invested or probably trading in Bitcoin now has a view as to why there was a free fall in the cryptocurrency that we just talked about. But moving on, the other aspect that everybody wants to know about is gold, silver, as well as copper, as to how these metals have been shining in the past couple of months and whether they'll continue to shine going forward or not, and what are the factors behind it. To understand exactly this, we're joined by Shreyansi, who is going to give us a perspective on how the rally has been like, what are the factors behind it, and what can you expect going forward. Shreyansi, over to you.
Absolutely. Bunch of triggers that you're looking at when it comes to gold, silver, as well as copper. First things first, let's talk about gold prices, because you do have safe haven demand that has actually been helping gold prices quite a lot. You do have that record high that speaks for itself. And in terms of the other factors, you do have Trump's war, the trade war when it comes to US as well as the European Union, and that is actually helping bullion as well. And that's something that you're seeing in terms of the next moves when it comes to this entire conflict. That's actually helping gold prices right now. Other than that, there's also a meltdown when it comes to Japanese government debt as well, and that's also something that is actually powering gold prices. Lower interest rates is also something that you're looking at in terms of key factors. The entire debasement trade, the de-dollarization trend as well, is actually helping bullion as well, and the lower interest rates of course increase the opportunity cost of holding bullion. On the back of that, you do have a bunch of these triggers. Add to that list central bank purchases as well, and there you have the perfect mix when it comes to gold prices. When you talk about silver as well, which is a sister metal, similar updates that you have coming in there as well. Safe haven demand is actually powering silver prices as well, and the white metal is doing quite well for itself. When you talk about copper as well, there's actually a bunch of demand-supply fundamentals that you should be looking at. So there's AI-led demand that you have that is new on the back of data centers that actually use a lot of copper. And against that, you have this entire mine disruption story that is playing out for itself to copper.
All right, Shreyansi, thank you so much for bringing us those details. Viewers, I hope this episode helped with you, but do stay tuned. More news and updates on the other side.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we are
all the top voices from Davos right here at NDTV Profit, and we're speaking with Mohit Joshi, CEO and MD of Tech Mahindra. Mohit, are you liking Davos so far? We're speaking at a very sunny time, so it's nice and warm.
No, it's been wonderful, right? I mean, obviously, like anybody in our business, you have to be in Davos every single year, and this is, I've completed more than a decade over here. But this year has been nice. I think the participation has been very broad and extensive. Thankfully, it's been sunny, it hasn't snowed, and a good set of meetings, a good set of dialogues. So, yes, so far, very good.
What do you think is going to happen in the Trump address? Is that something you're looking forward to?
Yeah, that is unfortunately beyond my pay grade. My hope is that given the fact that all the leaders are over here in Davos, that we find some amicable solution and we step off the ledge in a manner of speaking. Certainly, I think the market reaction yesterday has been quite negative. And so hopefully, as always, the world finds a way through the latest crisis.
You know, Mohit, if I look at you, and I don't want to use the word turnaround, but definitely the vast improvement in the numbers for Tech Mahindra since you took over. It's displaying in the stock and everything that you've done. For you as a leader in the industry you are, do you see more challenges ahead, more headwinds ahead because of what's happening geopolitically, what's happening with the rupee, what's happening with discretionary appetite, etc. in the United States? How do you look at it?
So look, I think there is no denying it that the past 3 years have been challenging for the industry, especially in terms of growth, right? And so for us, it was doubly difficult because we were seeking to drive a turnaround and a transformation within the period. But so far, we have managed within the constraints that the market has set for us. When I look at Tech Mahindra specifically, I do feel that our geography exposure is helping because while we get about half of our revenue from the Americas, about a quarter of our revenue comes from Europe, about a quarter again comes from India, Middle East, Africa, and Asia Pacific and Japan. So geographically, we're quite well distributed, right? Again, from a sectoral perspective, our largest exposure is to telco. Telco is a very national business, right? It is largely a domestic business pretty much across the world. Manufacturing, again, has seen a resurgence across the globe. That is our second largest vertical. Financial services, healthcare, and life sciences, and retail. Again, these are businesses where we're looking to establish a very strong challenger position. So I do feel that, surprisingly for a company, of our size, the calibration that we have, sort of the spread that we have, has actually worked out quite well for us. Obviously, in addition to this, a lot of the steps that we've taken to focus the organization, to drive an increase in productivity, and to really build the organization for the future. A lot of those bets have thankfully paid off so far, though clearly too early to declare victory.
So I'm just going to come to the first part about telecom and a nationalistic business in that sense. Concerns over there from the American context. Also, do you think that the concentration of business coming from America will have to strategically shift, or you'll wait for this crisis, quote unquote, to tide over?
No, I think, look, telecom obviously has been a business that has been challenged over the past, over the past 4 or 5 years. There was that huge investment that happened in 5G. And I feel most telecom companies have really struggled to monetize the revenue from 5G, right? But over the past 1 year or so, we have seen signs of stabilization and growth in the business. Our Americas business has done exceedingly well. Telco business has done exceedingly well in the recent quarter. So after a long time, we had both quarter-on-quarter and year-on-year increases. Our European telecom business is doing really well, but that's been driven more by the consolidation, where we've been winning in terms of consolidation. And Asia Pacific continues to be a growth area from a telecoms perspective. Right? As far as the Americas is concerned, look, candidly, it is too large a market to ignore, right? The fact of the matter is that the American market in terms of enterprise technology is by far the single largest in the world. Just to give you an example, the top 10 banks in the US spend more than the top 100 banks in the world if you exclude the American banks, right? So clearly the spend pools there are so large, the innovation being driven is so large, the ecosystem partnerships, whether it's with the Microsoft or AWS, it is a market that you can ignore at your own peril.
Fair enough, but for what Indian IT companies provide and the requirement from this, two challenges there. One is AI, and is that going to really work for companies which largely provide services? Will the requirements reduce? And I know you're on top of your game on AI, so I see that smile on your face. But the second one also, if it's become very nationalistic, polarized, is it going to be tougher to do business there? For example, would you feel safe sending Indian employees there with what is happening with immigration, etc.?
The fact of the matter is that obviously we're picking out individual instances and building a narrative out of it. I have lived in the US for 10 years. I've been living in the UK for the past 16 years. And by and large, right, these are very safe, welcoming places to live in. There is a real desire, if you speak to policymakers, with exceptions, to build sort of the technology workforce of the future. And they recognize the role that Indian companies play in transforming their own enterprises towards greater productivity, greater innovation. So I personally would feel very comfortable advising any young person, including my children, if they wanted to move to the US or they wanted to move to Germany. These are, by and large, a few exceptions excluded, very safe and welcoming places where I feel Indian technology industry still has a long way to go. As far as your other question is concerned, look, this business, the IT services business is always being transformed, right? You always, every single year, have to pick up new things and learn new things, whether it was the metaverse a few years ago, cryptocurrencies, Bitcoin, blockchain, distributed ledger. More recently, it is AI, agentic. People are talking about sort of whole world AI. So I feel the industry will keep changing. And as long as you keep changing, as long as you keep picking up new skills, hiring the best talent in the world, I feel the future is very safe, right? The example I'll give you is if you look at some of the audit firms like Deloitte or an EY, they've been around for 100+ years. These firms started out as tax businesses, as audit businesses, then they became advisory businesses, they became strategic consulting businesses, and now they become technology businesses, right? They compete with us. The only reason they have survived and grown for the past 100 years is not because the business has stayed the same. It's because they have a really deep understanding of their clients and their industries, and that is more than anything else.
What is the adaptation you see in your context with AI at the bedrock?
Yeah.
Because, world calls India the anti-AI trade.
Yeah.
Someone has to go out and prove them wrong.
Yeah. Look, I think the anti-AI trade is because the rest of the world really is an anti-AI trade, right? The US is the AI trade and the rest of the world is the anti-AI trade. I do feel that for us, a lot of the work, so there are three things that we're doing, right? One is obviously we're building the tooling to allow us to enable our clients to get the benefits of AI. We're investing significantly from an R&D perspective, right? So if you look at it, we are the only GSI to be selected for the National AI Mission. We have built a number of large language models from scratch. And now we're thinking about sort of a new model to price with AI, right? So I feel that the work that we've done, which was recently published with Forrester, how do you price for human labor? How do you price for digital labor? And the age-old conundrum of the industry, how do you break out from this linear pattern of linkage to human labor? This is our opportunity, right? So I really feel that AI will be, mark my words, in a couple of years, the tailwind, like COVID, right, that propels the industry to the next phase of growth and relevance.
How do you see it working out in terms of your corporate performance? And I know you've posted results, good results, but how do you see AI becoming a tangible part of the revenue stream?
Yeah.
Because right now it's pilot, let's see what happens, it's up in the air. Are we close enough to put a number to it, to what it would mean for you as a business?
We're trying to find out a meaningful metric to report that would show the progress that we're making in AI, right?
Some are already reporting.
Yeah, but my sense is that either you're applying too narrow an aperture, right, which is the work that you're doing, which is specifically to build AI models or to build AI consulting, and I would challenge anybody that it is going to be at most a few percentage points of the revenue. Or it's a very broad aperture, right, which is all the clients with whom we're working on AI projects, so where our work is being delivered using AI, like a code assist platform or a contact center AI platform, right, which is 100% of the clients. So it's either going to be close to zero or it's going to be 100%, right? It is like the question, like I mentioned to a colleague yesterday. If you ask me how many people in India get more than $5,000 in income per year, it's relatively easy to calculate, right? If you ask me how many people in India are smart, it's a very hard question to answer.
Subjective.
Right? And so the thing with AI is that there's a huge amount of subjectivity. And so to come to that common benchmark is what we've been trying to accomplish.
Okay, we're speaking ahead of the budget, Mohit. I'll ask a couple of questions only because
Sure.
I know you have another meeting to rush to. That's how Davos is. What do you hope to see from the budget this year in the context of the geopolitical climate and how India needs to remain resilient?
So look, I think from a budget perspective, clearly some of the tax changes that have happened have given a boost to the economy, right? And I think it's very important that we build India as a significant consumption economy as well as an export economy. And I feel a lot of the steps to drive consumption have been very productive. I feel the government also has been quite forward-looking in terms of the National AI Mission. We're really proud of our part there. One of the things that our teams are doing, which is very interesting, is to build a large language model in Hindi so that students from class 6 to class 12 can ask physics-related questions and to learn physics effectively. I think it's a remarkable model, right? Because the number of physics teachers and good math teachers is very limited, especially in the vernacular languages. So to allow students to learn physics in their own language by querying a model is very powerful. And to think that this is not being done by a for-profit company, this is being done by the government in partnership with us, so it'll be available to hundreds of millions of students, right? I feel that's a really powerful example of a transformation.
And last thing, if you have an opportunity to meet President Trump, what is the one thing you would say or ask him? into the camera.
I think, candidly, I'd probably just ask for a picture with him with a big V sign and step away. I would certainly not ask him anything controversial because...
this is a hypothetical question.
I know, but...
You don't need to be so safe.
The reality is that you do not want to get to his wrong side. And so even hypothetically, I don't want to risk asking a question because I might inadvertently manifest something very dangerous for myself.
Okay, we'll leave it at that. Thank you so much, Mohit, for speaking with us.
Thank you. Lovely to see you. Thank you again.
Thank you for that. Yes, in these cold climes and in this beautiful backdrop, we're having a conversation with the State Bank of India chairman, India's largest bank, over here at Davos, where I must tell you the ongoing commentary is that India seems to have taken over a lot of the promenade. Sir, thank you so much for coming into our studios and speaking with us. Absolute pleasure. How's the trip going so far?
Thank you, Tamanna, for having me here. So far, so good. I think a lot of fruitful meetings and also a lot of fruitful discussions where you could participate and listen to the people what exactly is happening in a very difficult geopolitical environment. Yes.
Yes, I know in a few hours from now, everyone's waiting to hear what Trump says. But in terms of what you are looking at here in Davos, a little birdie tells me that a lot of your conversations are around AI and adding that kind of tech to the prowess of State Bank of India. Are you shopping here, speaking to possible partners?
No, we do have partners and, of course, long-term partners. More importantly, my conversations with them is for the last 3 to 4 versions of Davos, we've been talking about AI. A lot of proof of concepts have happened, and we have not seen adoption of AI in the BFSI space at scale. So my venture here is to understand how do we bring AI adoption at scale as big as State Bank of India with 530 million customer base, that you need to have something which will change the customer experience and also improve the productivity of our employees. I think this is what I've been focusing on. But what I believe now is that a lot of entities have moved away from POCs to adoption. And adoption also has a critical element in the sense that you need to have large-scale change management, the way how people use both of your employees as well as the customers. So this has been my focus. It's been a good conversation so far.
How do you see AI changing both the customer experience and your core requirement of financial inclusion? As India's largest bank and largest public sector bank, that's also a big part of the mission. How do you think that this can really change the game from that context?
So it's not that we have not used AI in the past, but we are talking obviously now moving from the predictive analytics to Gen AI and agentic AI. So we were one of the early adopters of AI models, both for purpose of the customer service, lending, for instance, and also fraud risk management. If you really see cyber protection of our customers, where transaction monitoring happens, and also we need to protect them from the cyber frauds. A large-scale Gen AI adoption is happening in SBI on the fraud risk management side. But we can definitely use in terms of creating hyper-personalization. Today, a lot of people receive a lot of calls on many products, right? How do we cut down on them? What Tamanna really requires, only those calls should go. I think
all Indians will thank you if this is a model everyone can
I think
adopt.
Definitely this is what AI is capable of doing, in the sense that you don't disturb or you don't trouble the customer as much because you have not understood the customer much. If AI tools can provide that insight in terms of what customer needs and when does he or she wants to be contacted for. I think these are some of the things on the customer side. More in terms of the customer protection side, I think agentic AI and AI have humongous applications going forward.
Now, let's come back to a bit of the domestic business. I know we're sitting here in Davos, but we must talk about what is your outlook on urban consumption. Some of those concerns which are being talked about there, are you actually seeing it? Because you will be in the right position to see if that kind of consumption is coming in. A lot of the conversation that after the GST rationalization, it is banks who will see that uptake as people want to go out and consume more and take loans to do the same.
So we did see, of course, I won't be able to speak about our Q3 numbers because the results are is scheduled sometime during February. But broadly speaking, I think consumption demand helped in terms of growing some of the consumer loans. What we have seen is that, since you mentioned about urban consumption, the consumption numbers which have been announced now shows that the rural consumption is picking up faster than the urban consumption. And another dimension of the consumption is that it has been more in non-discretionary items. That means auto sector, white goods have shown much more uptick than the discretionary or non-discretionary spending. Sorry, discretionary spending was more than non-discretionary. So I think GST has to help maybe the lower middle class to consume more. That consumption in the urban areas is yet to be seen. But on the discretionary spending, we have seen a significant uptick, both on the auto sector as well as white goods.
So I won't ask you about numbers because, like you said, it's the silent period. But just want to get a sense of how you're seeing deposit growth. Deposit growth has been a pain point for the industry and for several reasons. How do you look at it as the largest player?
So the kind of financialization, the overall financialization of savings which have been there, and the unconscious asset allocation which has been happening. People earlier probably used to have savings, and savings are destinations were only bank deposits. But today you may not call it asset allocation in the truest sense, but you would like to keep some money in the mutual funds and some money goes to the insurance, some to the pension fund. So which means that I personally believe that it is a kind of irreversible movement which is happening from the bank deposits to the other alternative financial instruments. It may change. If the stock market is doing, probably more flows will be there towards that. But broadly, the banks have to live with a lower deposit growth rate. That's one. Number two, I think we also have to see that how do you structure your balance sheet? Do you want to structure your asset growth purely based on deposits, or you can go to the market and some of these savings which are currently going to various instruments have to come to the real economy, right? Back to the real economy.
Yes.
They are coming in some form. But ultimately the banks have to build their balance sheets based on not only on deposits, but other alternate instruments, market instruments, certificate of deposits, bonds. I think this is inevitable. I think that will definitely happen.
There were some eyebrows raised when a bank of your size goes after certificate of deposits.
No. See, this is. I mentioned certificate of deposit to make you to ask me that question. So I think it's important to realize that every bank in India has to look for alternate sources of funding their balance sheet. This is what happened globally. If you really take my New York office, for instance, 75 to 80% of the balance sheet is built on market borrowings, not on deposits. So as the individuals and households diversify their saving instruments, the banks also have to diversify their source of funding.
A few years ago at Davos, you couldn't turn a corner without some conversation about cryptocurrency. This year it's about AI, a spirit of dialogue. But the question is there a silent movement to bring cryptocurrency back to the fore? Well, one person definitely trying to make that happen is Rachel Conlon. She's Chief Marketing Officer at Binance and speaking with us this freezing morning. Rachel, thank you so much for your time.
Thank you so much for having us. It is definitely freezing.
Okay, so just with the point that I started, where a few years ago it did seem like crypto is going to be the big revolution. That story seems to have dimmed. Why do you think that is? Is it because of a lot of pushback? A, pushback from governments, and B, the idea that it's not really changing things at the pace that people thought?
Ooh, I'm going to take a little bit of a contrarian view to this. I think that rather than dim, it's in fact become part of the agenda, as is AI, and as we're seeing, we've just, as Binance, we're the largest crypto exchange globally. In the last 18 months, we've grown 150 million users to 300 million users across 180 markets. We have a full team of 12 on the ground here at Davos, and that is upon invitation from many of our traditional financial industry partners, from the Web 2 partners, and what we're seeing, is really where we've moved from something that was about the wealth narrative and about FOMO, we're really moving to crypto, digital assets, blockchain, being fully integrated, and the merging of traditional and digital assets. And I think that's something that's been great for us this week, is seeing that take shape and really manifest itself in more actual, tangible use cases.
Now, I'll tell you why I'm asking that question, because when the crypto craze, quote unquote, started, the idea was that in a few years, no one will be using plastic or, any payment gateways or real money. Definitely not. It's going to all be crypto. That hasn't really happened. It's more a store of value, in a sense, an investment tool right now.
Oh, well, I think what we're seeing at the moment is, digital assets were never there to replace sovereign currencies. And what we're seeing now is really the growth of digital infrastructure. And, if you see from the discussions that we're having, across the traditional banking space, with many of the big e-commerce players, what we're seeing is a drive towards stablecoins and payments. Just last month, we launched MasterCard alongside Binance in Latin America. That's about to roll out globally over the next year. And these are really where we're seeing a full integration of blockchain and traditional finance, and an improvement. And that makes payment rails faster, it makes cross-border payments faster, ultimately, it's towards us building a financial infrastructure that is more in line with how the modern user and consumer lives, whether you be in India, UAE, or Ireland. So, I think that's something that we're seeing. It's becoming the invisible technology that's supporting the modernization and optimization of the financial world. So, we may not call it the financial revolution anymore, but it's definitely an evolution in terms of the integrations that we're seeing.
No, so it's definitely top of mind in the last 1 year because of the backing of the U.S. president, clearly, for cryptocurrency. Trump is arriving today in some time. What do you make of the changes that have happened in the last 1 year? It's impacted prices also very positively in some ways, and it's been quite volatile. That's something you track as an exchange. How do you think that this is going to continue? Do you think it now settles once it's clear that Trump is backing crypto?
Look, I think that the US has always had a disproportionate amount of influence on regulation across every industry. In the history of the last 40 years, if we look at regulated industries, the US policies have always informed. What I'm seeing from my vantage point at Binance is that the US clarity really made a push globally towards there being more clarity. We've been invited in to many governments to have discussions around what should be their blockchain strategy. How do they integrate it into their economy in a way that's safe and compliant? And as one of the most compliant exchanges, and one that has been pushing for regulation, because clear rules and regulation supports more user confidence, more user adoption, and ultimately, that's what we as a business and industry are pushing for. So for me, I welcome the clarity from the US, but furthermore, I'm welcoming the clarity from many other markets where we're seeing around the world, from Kyrgyzstan to increased clarity in UAE, to what we're seeing in India.
No, so are you speaking with governments, institutions in India? Because in India, policy-wise, it's quite clear. There's not much ambiguity. The gates are up, unless it's a CBDC, a central bank kind of a situation. So, having said that, you have also said India is one of your brightest markets. How do you reckon with the interest from India versus the government regulation there?
Look, I think we need to take a reality check on where we are today. The users are there in India. The technology is there. India is one of the fastest growing in terms of adoption globally for crypto. That represents a huge domestic and international opportunity. And what we're seeing from our vantage point is a lot of positive progress. And I think the best example of that is, this year we received our licensing from the FIU, and that really is a testament to us stepping in the right.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and
Good evening, I'm Vikram Oza, and tonight on NDTV Profit, we are setting aside the big question for this special global focus, which is Trump in Davos. Yes, Donald Trump arriving at the World Economic Forum in Davos in Switzerland, having already set the agenda and has already unsettled allies even before delivering his speech. So there was drama en route as well, with his aircraft forced to turn back shortly after takeoff. Once again, though, it's what he's saying that has Europe on edge. There you see him, of course, arriving right now. And yes, this is just minutes ago, but from Davos, Trump has doubled down on tariff threats against the European Union. He's warning of steep duties against the backdrop of his comments on Greenland, questioning long-standing security arrangements under NATO, and hinting at strategic control, all of which have triggered the sharpest response. France and Denmark, they've pushed back firmly. European leaders have closed ranks, and NATO allies are signaling that sovereignty is not up for negotiation. This is not just rhetoric. It's a reminder that under the second Trump presidency, trade, security, and geopolitics are once again very tightly intertwined and very transactional. So that backdrop explains why one speech, not Trump's, not yet, but Mark Carney's, has gone viral. The former Bank of England governor, now the Canadian Prime Minister, is using his Davos address to issue a clear warning against economic coercion, urging allies to stand united, defend democratic norms, and resist the weaponization of trade and finance. It was widely seen as Europe and the broader West drawing an important line in the snow. So all of this lands at a moment when Europe is reassessing its partnerships and hedging its risks. And this includes the fast-tracking of the India-EU Free Trade Agreement, which is why tonight we are breaking down Trump's Davos message on tariffs, territory and power, Europe's response to this, and what this shifting global order means for India, for markets and global trade alliances. So as a precursor to his speech in Davos, of course, I understand he's already landed over there. And we've heard from Donald Trump, but what are the issues that stand as an overhang? That's what we're discussing over here. To discuss this, let's bring in David Roche. David Roche is joining us on the show to break this down. So David Roche, just before that speech is made by Donald Trump, in your opinion, where do we stand? What should we expect from Trump next with all that back and forth that we've got from European leaders, the kind of response we've got from Trump as well to President Macron, and what Mr. Carney has said as well? What's the important takeaway for you before Trump makes his speech in Davos?
Well, I think there are a couple of things to say here. First of all, to say that you said it right. I mean, this is an American foreign policy which is about protectionism, it is about power, it is about money, it is about transactions, and it is about the president's personal ego. So you got it absolutely dead right. Now, finally, he's gone too far. He has issued an ultimatum to Europe, which basically says we will put on tariffs unless you kowtow and surrender European territory, sovereign territory, to the United States. Now, this is important because it is the first time that Trump has used economic coercion only for political ends. And this has had such an electrifying effect on Europe and on Canada and on other countries, and I presume India is not watching it indifferently, because what he actually has done now is to cross a red line. And that red line has finally got European diplomacy off its supine stance of kind of always being nice to Trump because you just accept he's crazy, but at the same time, you never want to insult him because we're afraid he'll walk out of NATO. We're afraid of what he'll do next. So we're just going to go along with him all the way. That's why Europe signed this 15% tariff deal with Trump. Now the Europeans have realized that, as with any schoolyard bully, if you don't stand up to them, you know what happens to you? You get bullied more. So finally, Europe stands up, and so does everybody else. What this actually means is this. Number one, the existing tariff deal, which is stuck in the European Parliament, which has to ratify it for it to become law and go into practice, will not be passed. So essentially, that will trigger a tariff war. Automatically, you're going to go into escalation. Now, what the Europeans will do when Trump puts his tariffs on them is essentially to put on more tariffs, more measures to prevent the United States corporations making money in Europe, which will be passed under what's called the ACI, which is basically the anti-coercion initiative, which the European Union has never used. but is an emergency power which they can use and they probably will use. So that's a very bad scenario for markets. It's bad for economies, but it is about reining Trump in, which has to be done. And I think I would put it to you this way, that we are on the verge of hostilities between the United States and Europe, which won't stop, as you rightly said, at tariffs and trade. It's going to go into the spheres of geopolitics. And I believe, personally, that it probably spells the end of NATO, which in effect is dead already. But, you know, you don't want to drop the corpse in the middle of the ballroom floor. So people kept on dancing. But in reality, NATO is dead. This is a whole new world. It's a new world between Europe and the United States. And of course, Russia is watching this and saying, gosh, you know, the weaker Trump gets, the weaker Europe gets, the greater the opportunity for us. And that'll be another chapter in another couple of months.
That's going to happen in a couple of months. But David, for the moment, you did mention that Europe is reining in Trump, at least making that attempt, because we are seeing and hearing European leaders pushing back very publicly. Mark Carney's speech calling for unity against coercion, that has struck a chord as we are seeing the virality of the speech he made in Davos. But the question still is, though you're saying Europe is finally learning to stand up to Trump and maybe this is the end of NATO, but the question still stands if Europe still lacks the economic and the political muscle to go ahead and rein in Donald Trump.
I don't think so, because look, obviously everybody gets hurt when a new trade war starts, which I believe is the outcome of what we're talking about. But you've got to understand that Europe has an enormous power over America. Americans, corporations do probably $400 billion worth of direct exports to Europe. Their service sector exports are as big again. And the actual business they do in terms of international corporations, such as credit cards, such as their participation in government contracts, particularly defense, and in terms of the kind of Googles and Metas of this world, which of course Europe has got no equivalent. So these are the companies doing that business in Europe. You're talking about 1.6 trillion US dollars a year. So Europe can hit that. And they can actually say, well, Trump, you're going to hurt us on what we do with America. And, you know, the Europeans own, for example, $3.4 billion worth, $3.4 trillion worth of U.S. treasuries, which is, you know, about, let's say, about 8 times bigger than what China owns. So they've got plenty of levers. Don't assume just because Trump is the more aggressive and he can single out that Europe does more manufacturing trade with the U.S., that Europe cannot hurt the whole panoply of U.S. business in Europe, which is absolutely vast and critical to the U.S. economy and critical to the sort of people who support Trump, the Musks of this world.
Can Trump hold out against that kind of European pushback right now is the big question. And yes, from the Canadian side, we did hear Mr. Carney make that impassioned speech in Davos. Just let's listen in for a moment to what he said, and we have more panelists joining us on this discussion. But before we go to them, just let's listen in to what Mr. Carney said.
Let me be direct. We are in the midst of a rupture, not a transition. Over the past 2 decades, a series of crises in finance, health, energy, and geopolitics have laid bare the risks of extreme global integration. But more recently, great powers have begun using economic integration as weapons. Tariffs as leverage, financial infrastructure as coercion, supply chains as vulnerabilities to be exploited.
Well, that's what we're hearing from the Canadian Prime Minister. Ajay Bagga is also joining us in this discussion. Ajay, markets are hearing what Trump is saying, what European leaders are saying, what Canada is saying. And the message seems to be clear. Tariffs on Europe, tougher trade lines, more uncertainty is what the markets are reading from all of this. But are investors already pricing in a fresh round of trade disruption? Or do markets still believe this is negotiation by threat?
I think it's the latter. Most analysts that I have spoken to or the wirehouses that have come out with analysis on this are saying this is temporary. So this is the Trump classic negotiation. take an outlier position, threaten a lot, bluster a lot, and then come away with something in the middle. So most of the market is very complacent. The moves that we have seen in the market is more on the Japanese yields rising that has hurt markets. Of course, sentimentally, there is an impact of Trump, but the sell US trade that we are seeing, as last year it became the taco trade, most of the market is still thinking Trump will chicken out eventually, and it will become a taco trade again. So I don't see this going very deep. This is all bluster. The unfortunate part is when you let a bully get away with language like this, as has happened over the last 1 year, all protocols, all international civilities have been put into the fire by allowing Trump to use such language. Imagine a US president putting on social media, showing sovereign nations as part of his country and thinking that is a right messaging. And then his whole team talks like that. Yesterday, the way Scott Bessent went after Macron or after Carney, it's just showing that even his team has got emboldened by using such language, which did not used to be the discourse in international relations. So we have gone down the rabbit hole, but it's not going to get as bad as the worst case scenarios that are being put out. If you look at Europe and US, it's $1.5 trillion of mutual trade. $4.7 trillion have been invested in terms of FDI in mutual companies. So it's not that easy to unravel this. And one Trump can't unravel this. It's good that the Europeans are growing a backbone finally. Let's see if they do that. If you see the former NATO chief's messages to Trump and what Trump put out on social media, along with Macron's message, Europe is still kneeling to Trump. It's not that they are, even in private, they are thinking that appeasement works rather than taking on this person. So I don't know.
Yes.
I don't know if Europe will stand up to it or they will let him buy out Greenland. Who knows?
David is quite convinced, though. David Roche is with us, and he's quite convinced that Europe is going to follow through. Trump, of course, threatening 10% tariffs on multiple European countries, and then that eye-popping 200% tariff on France. So, David, when you read headlines like this or the kind of rhetoric that is flying around, is it really rhetoric because there is economic brinkmanship? Or do you think this is about negotiation by coercion because Trump is testing whether Europe has the stomach to retaliate? You're saying the stomach is there, but is from Trump's strategy, do you think he's testing waters here to see how far Europe will go?
No, I don't. I think all of this ties into his now obsession with spheres of influence, which includes the conquering of land, as in medieval times. And I think he's crossed the Rubicon in threatening a sovereign state in Europe, one of his allies. That is not about the brinkmanship of negotiating economic advantage. It is about the obsession with global power and spheres of influence. That is why I don't think this is, I think this is the real thing and not just about tariffs. Now, having said that, remember that the ability of China to retaliate to the United States was called into question in exactly the same way as the ability of Europe to actually retaliate against the United States can be called into question. But there is a difference. In the case of China, the US could not do without its rare earths, and neither could it do without its consumer products. In the case of Europe, the US cannot do without its markets, particularly for its intangible software products. And that these are wide open under the ACI, that is the coercion emergency measures which are at the disposal of the EU to take measures against, and they will. Now, having said that, whether Europe has finally learned that by kowtowing to a bully, you just get another kick in the face, it certainly took a lot of lessons to teach them And I hope they have, but I can't guarantee it. But my view is, yes, they have. And this time we're in it for real.
So there is a dichotomous view over here from Ajay, who believes that this isn't something that Trump is going to follow through on, but markets now, Ajay, they're staring at the possibility of the EU activating that anti-coercion instrument. That is a possibility, according to what we're hearing from David as well. Retaliatory tariffs on over $100 billion of American imports by Europe. So how destabilizing would this be for the global markets if it actually plays out?
Just say one thing before we let my colleague reply to that, and that is that it is not only the coercion, emergency coercion measures, it is the fact that the existing agreement with Trump on his tariffs, which was humiliating enough, cannot be ratified unless Trump backs down on Greenland, because it is stuck in the European Parliament, which must ratify it or it will not be applied. That will trigger Trump all on its own.
Ajay?
Yeah, if you look at, I agree with David that mostly that trade deal will not happen. And most of those terms are anyways not happening. If you look at energy, for example, there was an agreement that Europe would buy 750 billion worth over 3 years. The energy imports from the US have actually fallen 15% post that deal. So I don't think that deal was going to be followed. It was more like the Chinese signing in 2019, and they really did not deliver their part. So the Europeans were also winging it. What will change? I think Europe will have to invest a lot more on their own defense. What Europe can do, they can tell US to pack up the bases that it has in Europe and leave. But then what is the defense against Russia? It's the US nuclear umbrella which has made the Europeans complicit. There are no standing armies worth while. You will have to go back to conscription. You are looking at UK, where they're calling back ex-servicemen even at the age of 65 to come back and re-enlist. The experience is lacking in those armies. The equipment is lacking. Ukraine has used up a lot of the armaments. So even against Russia, it becomes a question mark. That will be at the back of the Europeans when they negotiate. But public posturing will need to be done now, because it's gone beyond the Rubicon. So expect a lot of rhetoric. But let's see what Trump does tonight. He'll come out swinging. He's not going to back out. But I still feel these positions are outlier positions. He's not going to invade Greenland. He has got what he wants. There is a Chinese miner sitting in the south of Greenland, mining some of the rare earths. He will want that out. Look at what he started with Panama. It's still not done. Those Chinese companies are still owning ports on both sides of the Panama Canal. He's not been able to get them into American hands even after 1 year. So I think the objectives are much smaller than the outlier rhetoric which he has let out. And if you look at Canada, Mexico as examples, there was a NAFTA. He negotiated another deal, and promptly as he came into the second term, he extinguished both those deals, and they are up for renewal. But Mark Carney has now gone and signed with the Chinese limited trade deal. Mexico doesn't have that flexibility right now because they're too dependent, and Trump is threatening action, boots on the ground against the cartel. So that is an issue. But Carney is really afraid that if Greenland goes and there's an American flag on Greenland, then Canada is next. He's been talking of it as 51st state. Now there, David might be right that something like that comes through. It is the biggest military in the world. There is nobody who can stand up to the American military. And after Venezuela, the way it was done exceptionally well, yes. The way Maduro was taken out, I think that has emboldened this entire set of people around Trump.
Which is why we're thinking that this could be more than bluster, which is why it has set the cat among the pigeons, as it were. And Europe is now standing stronger, at least in terms of the rhetoric that is flying around. Joining us in this discussion is Sushil Singhal, former ambassador. Ambassador Singhal, great to have you with us as well. You know, as we are talking about, yes, great to have you. But look, as far as Trump is concerned, this proposed Board of Peace as well, besides the other pushes on the tariff front, on Greenland, etc., the Board of Peace is challenging institutions like the United Nations and even NATO. From a diplomatic lens, is this disruption by design, you think? How worried should allies be about the parallel power structures that seem to be coming up under Trump?
Well, it is quite a worrisome, thing which is going to happen, or at least President Trump, what he's trying to do. Well, what I have seen over the 1 year period, that he starts and sometimes he says it's a joke, and then one by one he start trying to follow it through. Be it in in Gaza, he started with the real estate development. That time, then he said, no, we're just thinking, and now he has come out with the Board of Peace. So Board of Peace is nothing but substitution of the UN. And it's I was intrigued, or rather a very interesting term, which he used for himself, that he will be the chairman of this or president of this board for life. And other members will pay, of course, $1 billion for 3 years term, and then they have to pay again. So it's a very interesting that the other countries will pay for what President Trump is planning to do in Gaza, and nobody else has any say in that. So it's clearly, in my view, his way of thinking. That's he already said that he doesn't trust, or he doesn't he used the term that only his moral compass is what stops, not the international law. So his thinking is very clear. And also, if you draw the parallel from what he is doing domestically, I think that is the playbook which he's using for the international also. Domestically, he's pushing the envelope to the extent possible in all his powers, all his executive powers. He's already issued executive orders, which I think the other president didn't issue in an 8-year term. So in 1 year, he has issued so many executive orders which are being challenged. We don't know what is going to happen in the courts. Sometimes their, court also oscillate between different arena. I will not go into that. But that is a playbook which he's using in the international relations. And again, he's pushing envelope everywhere. And he claimed, now, he's very openly assertive about the fact that he's using tariff as an instrument of state policy. And he is planning to punish everybody who's not willing to follow his rule. I think Europe or European Union has learned very bitter lesson, in my view.
Indeed. So we were just talking about Europe and how it's hardly ever used its hard tools, which would be trade retaliation and coercion instruments. David, against the US, of course, this wouldn't have been even conceived. Is this moment really different? And if you're talking about tariffs escalating on both sides of the Atlantic, who pays the price fastest? Is it going to be American consumers or European exporters or global investors? How do you think it's going to affect which party and how much first? Because does that determine who blinks first?
Well, yes and no, but once you start a war, it never turns out as the strategists say it will. It always turns out to be different. And the same is true of what Trump is actually creating as a trade and geopolitical war now. So everybody will get hurt. I think if the European Union is clever, what they will do is they will actually hit the revenues of the sort of companies which are run by the sort of people who support Trump. And if they use the anti-coercion powers, which they have at their disposal, they can really fire rifle shots at all the names, which I won't name, but you already know by heart, who are the big backers of Trump and MAGA, and who are also multi-billionaires. These guys run a political agenda which is domestic, less taxes, more Trump, and they run an international agenda which is globalized businesses. They are very vulnerable. And if I was the EU, I would be lining them up as little targets on the wall and get ready to shoot.
Will they shoot is the big question right now. Ajay, from your perspective, how do you think this is going to play out? Because a war of any kind, and much less even a trade war, is not good for anyone. But how do you think India is going to emerge? Do you think there is any takeaway for India in the kind of standoff that we are seeing between Europe and America right now?
Yeah, I think the one big takeaway is that in retrospect, thankfully, we don't have a deal. So we have suffered, and we'll have a EU-India FTA hopefully next week after nearly 18 years of negotiation. So with Trump, it doesn't matter. Even if you have signed, the paper is not worth its price as a paper, leave aside as an international document. We've seen that with Canada and Mexico. So good that India stood its ground. We have lost out to some extent in textiles, gems, jewelry, leather. That is inevitable, but we found other markets. And hopefully with this deal, for India, if you look at the numbers, China, US, and Europe are nearly similar trade partners. The complexion of the trade is different. We have a trade surplus against the US. With Europe, it's marginal $10 billion odd. With China, it's existentially poor. They have $100 billion surplus against us. So we are very dependent and we have nothing to sell to China apart from some raw materials. But in terms of material numbers, those are equal blocks for us. So getting an FTA with Europe is quite interesting for India. I don't think an Indian deal will be a very possible in the scenario that's coming out because Japan, Korea, Australia, all will be watching Europe now from the sidelines, apart from Mexico and Canada. Yeah. China is very clear from 2018-19 onwards. I remember Global Times had taken out 35 big articles, Vikram, where they did self-criticism on how do we get out of being so dependent on the US economy. And they worked on it for the last 5 years. They have a dominant position. They are dumping goods around the world. They've increased their exports into ASEAN, into Africa, into LATAM. Even into India, we have $100 billion more that we import from them. So clearly, we are also victims. China is very dominant. Europe is very dependent on the US, mostly also for defense. So what does Putin think of a weakened Europe? It is a weakened Putin also, but they will have to put their defense industries on a very strong front burner to make up for this lack of Trump, for them being able to depend on Trump in a crunch. I think that's the big thing. And would agree with David that the backers of Trump, right from the farmers. So if you look at the $100 billion worth of tariffs that are being mulled, they're hitting soya farmers, they're hitting all the constituencies, the Republican states where these exports are based out of, and companies which are close to the MAGA loyalists. So very carefully they did this.
Ajay, we are just getting these live visuals right now of Trump arriving in Davos. Of course, he landed not too long ago. Remember, his flight had a delay. It had to turn back to Washington. So, yes, there has been a delay of about 3 hours. And then he landed in Zurich, and now this is the helicopter landing that we are seeing in Davos. That's where he's going to make his speech. That is widely awaited, what he's going to say over there. It's going to be a very important speech to watch because there is so much at play right now. So, Ambassador Singhal, if you can tell us, with all these alliances straining, institutions are questioned, what is the single most important diplomatic call that India must get right if Trump's worldview begins to dominate global decision-making?
Well, we have to play our cards very carefully. And I think the government is playing very carefully. We are not reacting. I think that is very important. And we need to see what he is doing without reacting to it, because that is what he finds very, very, infuriating for himself, because he's not able to get the target. And then that's why, when you see, he differentiate between India and PM Modi. He said PM Modi is my friend and all, but he keeps saying he doesn't talk to me. So what we are doing at the moment, I think, is just wait, and we are playing the waiting game with him, and which he finds in very disconcerting. So be it trade deal or any statements which are coming from his guys, I would say people from administration, they are making all kind of statements against India without any base, but we are not reacting to it. We are working behind the scene with them, and I think that is what we continue to, in my view, continue to do that, because that is the only way we can handle it, and keep. We have to be very patient in dealing with it.
Fair enough. I mean, this is an ongoing discussion right now until we hit the speech. And of course, there will be much more to talk about. I want to thank my panelists for joining us. Ajay Bagga, Ambassador Singhal, David Roche, thank you for joining us with those sharp insights. Of course, we'll circle back once we hear more from Davos, from President Trump over there. We'll take a very small breather. We'll keep this discussion going. Ajay had a word to add to what you were saying, Ajay, before we say goodbye.
Yeah, just before closing, Vikram, Venezuela might have worked, but Iran did not work out because the Arabians refused to give overflight permissions. So I'm saying it's not a given what we are assuming. And that's what most of the market is assuming, that when we get through this rhetoric, it will be the Trump tax cuts, the Trump stimulus, and the AI story, which we will be back to. Might take a couple of weeks, might take a week, but we will be there back on the ground in the markets. This will blow away without causing serious harm.
That's a strong takeaway for the markets. We are going to watch developments very closely, but we'll take a small breather as we continue our special coverage of Trump in Davos. He's landed over there. You're seeing his chopper landing in Davos. His speech is going to follow. A quick break, and we'll be back with more on the flip side. Don't go away. We'll be back.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री।
All right, our continuing coverage of Trump in Davos, and we have an entire team of NDTV that is present in Davos, covering it from different perspectives. Right now, of course, we are watching Donald Trump's arrival in Davos, and he's going to make a speech over there. But even before he does, the stage is really set because there has been so much rhetoric that has been flying around about what we should expect next. All we wait for is the American president's speech at the World Economic Forum. But before that, let's go across to NDTV Network's editor-in-chief, Rahul Kanwal. Rahul is joining us from Davos. Rahul, this is happening at a time when Trump is threatening to acquire Greenland. So from this visit to Davos, from that speech that he's going to make over there, what can we expect from Donald Trump?
The World Economic Forum Congress Center is packed to the brim. I've been coming here for several years now. Very rarely are the halls quite as chock-a-block as they are, and as high profile. I just bumped into Commerce Secretary of the United States, Howard Lutnick, while I was walking up to the NDTV studios here in Davos. Former Ambassador Richard Verma, top businessmen, economists, they're all there. And the only thing they're talking about is what will Trump say. And the interesting thing there is no one's quite sure. So if you listen to those who cover the White House, the top journalists, the editors in the American newspapers whose job it is to cover the American president's office, like it is for many of my colleagues to cover the Prime Minister's office, they're saying that Trump will try and come across as an international player. He doesn't want to come across as somebody who's off the rails. He'll probably try and dial down and appear reasonable and talking to a global audience, talking about the globalization project and saying that it's not over. That's those who cover the White House. However, there's a lot of trepidation and concern amongst those from Europe. I was speaking earlier to the Secretary General of the NATO, the President of Finland, Alexander Stubb. Many of them are hugely concerned, with very good reason, with everything that they've heard President Trump say over the past few days, particularly on Greenland. When he was asked that question about Greenland, he says, how far will you go? He says, wait and see. What we're seeing very clearly is Europe trying to suggest that they will push back. They obviously realize that without American support, the ability to push back is very weak. In fact, that was the conversation in one of the WEF sessions this morning. Can Europe defend itself? And the unfortunate reality is, while defense spending has gone up from, say, 1.5% to 2% just in the last year, they've promised to take it up to 5%. The fact is that at this time, Europe is in no position to defend himself. Zelensky is here tomorrow. We're going to be in a session with him. And the critical concern is, with Russia already occupying about 20% of the landmass of Ukraine without support from the US, and with whatever little support Europe can continue to muster, can Ukraine defend itself? Those are the critical questions. It's never been as complicated to cover the World Economic Forum or even to cover geopolitics, because geopolitics in some sense is being replaced by ego politics. So much happening so quickly. It's almost as if you're watching a surreal television opera rather than decisions which influence the fate of nations. And the man who's literally at the center of that storm, creating that storm himself, Donald Trump, he'll be here at the World Economic Forum very soon, and we'll be bringing you live coverage all across the NDTV network.
But Rahul, this is also, like you said, it's becoming a battle of egos, and in Davos it's likely to play out. It certainly is when it comes to the European Union and the United States right now. And there seems to be a showdown of sorts that is happening in Davos. I understand there is a slew of protests also taking place over there. So this is a kind of messaging that is going out. How is it going to be read?
Oh, as I was walking into the Congress Center, in different places along the promenade, there were people protesting, down with Trump, go bad, all kinds of protest messages. And that is part of the surround sound. The critical thing is, in the bilateral meetings that he has, in the meetings he has with the heads of state, remember, 6 of the G7 countries are here. There's a massive business delegation that Trump is meeting. Many, in fact, had to change their flights to be able to be part of this meeting that Trump is doing with 100+ global business leaders. So the conversation there is, how do you deal with this man? Nobody wants to get on his wrong side. We saw Mike Carney, the Prime Minister of Canada, push back very strong. In fact, he got a very rare standing ovation inside the Congress Center yesterday when he was speaking. And a lot of people appreciated, especially off record, his very stern message. But they don't want to be on Trump's wrong side. So they're saying, you know, they're trying to deliver in as firm, in as polite a way their sentiment. They're trying to communicate that, but they don't frankly want to get on his wrong side. These protesters, of course, you know, trying to convey their message. Trump clearly immune to protest, immune to what anyone thinks. He even went out to say, I didn't get the Nobel, which is why I now want Greenland. There's no point in pursuing the path of peace. It doesn't get me anywhere. And he's indicated that he's willing to go any distance. Now, how much of that is rhetoric? How much of that is filibuster? How much of that is reality? We don't know. We saw what he did in Venezuela with Nicolas Maduro. At this moment, and nobody in Davos quite certain of what he'll do.
You're absolutely right, Rahul. Of course, huge question marks on what he's going to do. Also on what he's going to say there in that speech in Davos. In fact, Tamanna, my colleague, who's also there, right outside the venue where Trump is going to speak. She's standing there with her handheld camera. You're at the venue, Tamanna. What's the mood like? What's the expectation like?
I'm going to apologize in advance, Vikram, for my filming capabilities. It's not my strong suit, but this is too exciting not to cover live. So what you're seeing behind me, this Congress Hall is where Donald Trump is going to speak. And the lines to get in have been formed since about an hour and a half. Now, there was a lot of speculation over the last couple of hours. Is he going to be on time? Is he not going to be on time? But he absolutely is. In fact, I'm going to just flip around and show you some of what we're seeing around us. So this tells you, and this is where they're actually going to broadcast for those of us who don't get in, that 2:30 to 3:15 is going to be that special address from Donald Trump, and only official participants will go in. I just spotted Jensen Wong walking in a short while ago, and we sent you those pictures, so maybe those will be up shortly. But this is kind of the crowd, cheek to cheek, to get in right now. And for the last few days, look at that. That staircase is where, you know, the elite, the VIPs and the regular folks are also just jostling for a sight of the man who has, at this point, enthralled the world with what is going to come next. So that is really what's going on. It's insane, to say the very least. I think over the last 3 days in Davos, no matter who you speak to, whether it's an Indian corporate, it's a global voice, it's whoever it is, or someone from the government, the conversation's only been about what does it mean for the world and what will Donald Trump say. I mean, speculations are rife. I've heard various versions. I don't know if any of them are true, but one of them being that he's going to announce that there has been a peace deal between Ukraine and Russia. Maybe. The other is that, remember, all of the G7 leaders, 6 of the G7 leaders are here. The European Union leaders are here. And this venue where I'm standing, this is where all of the sound bites are being shot, where they come and actually talk about, you know, pushing back against what Trump is doing on Greenland, on tariffs, on that kind of escalation. There's also the announcement of the Gaza Peace Board that is being reported. In fact, one of the people who is named on that peace board, I caught up with them on these very steps. Yeah, I don't know if you can spot some of those celebrities coming down. There they are. Okay, I caught up with them on these very steps, and I actually asked that, you know, what are you going to do on this Gaza Peace Board? And he said, you know, I'm not even sure. I'm not even sure that I'm on it and what I'm supposed to do. So it's really minute by minute that things are changing. And all of that speculation about the snag that Air Force One hit and came back, I mean, people have been wondering if it was at the end of the day also a kind of a power play where Trump is keeping everyone guessing.
Tamanna, as we are the only channel who's getting all these live visuals right from the venue where Trump is going to be speaking not very far from now, I'm just wondering, with all the pressure that perhaps is building on this entire event, on what Trump is likely to say on many subjects, and there's so much speculation, there's so much buzz over there, I'm wondering if you think Trump is also feeling the pressure of having to deliver a huge announcement. Like you said, it could be a peace deal with Ukraine. Do you think the pressure is on him to deliver some big ticket announcement over there?
I'm yet to see any evidence of Trump feeling pressure on anything. If one thing must be said is that this man plays by his own rules. We've seen that across the board. Everyone else has to figure out what it means for them. But I don't know if he's feeling any pressure at all. But definitely, it remains to be seen what he's going to say at this point. I don't know if I can get a couple of people to pitch in and tell us what you think. Ishan, you have a minute? I'm live. Do you have a minute? I'm live. You want to give us a quick comment what you think Trump is going to say? Okay, I have Ishan Tharoor. He's a global journalist. You're live on NDTV Profit. Sorry for doing that. That's okay. That's okay. What do you think Trump is going to talk about? And my uncle just asked me, do you think with all of this pressure, he's going to be nervous? My take was he's not nervous about anything.
Trump advisor. Someone I expect Trump's
Now we seem to have a very patchy line. I can't hear what Mr. Tharoor is saying over there. So perhaps we'll try and reconnect with you in just a moment. Tamanna, I don't know if you can hear me.
Yes.
The line is very patchy.
Let me just try and flip it. Let me just try it. Ishan, come here. The line is patchy. Okay, that's okay. No, wait, you know what? I'm going to try and get Ishan maybe to a spot. Remember, viewers, we're doing this on the fly. My camera is not my best suit. My hands are also too short to give a proper frame. But there, can you hear Ishan better?
Yes, go ahead.
I think, yeah, that's fine. My anchor says it's fine. Go for it, Ishan.
I don't know. For this respect, from this
needs to be on Ishan.
You were saying you think he's going to sound more conciliatory.
No, we're not able to hear him.
Okay, thank you so much for that, Ishan. Thank you. That's very sporting of you to just jump into our broadcast. All right, so there you have it. So many voices coming in, and at this point, really, it's anybody's guess. But I think we're going to start any minute.
Yeah.
Meanwhile, we'll try and get you as many updates from here as we can.
Tamanna, if I can ask you just before you leave, those protests that were happening over there, I was asking Rahul as well. Did you witness those, and what were the protests about?
So there are so many people with signboards. I think you pick the issue and there's someone who's protesting against it or rooting for it. So I have seen people outside the USA House even talking about children's rights and, against transgender people. There are protests against the rich, which always happens every year at Davos. So I would say that's part of the color. But here, the moment you step into the Congress Center, what you need to understand, Vikram, is there are two parts of Davos. One is outside the Congress Center and one is inside. And, you need a badge which gets you in. So if you are on the outside, it's a whole different Davos. And once you're on the inside, it's then you have the people who've been invited, the movers and shakers, who really aren't too worried about the protests, let's be honest. They're worried about the conversation that's going to happen in there in a few minutes from now.
We're waiting, we're on standby right now to hear from Trump. And of course, you'll be getting us the very latest from there, Tamanna. We're looking forward to all the live updates. Of course, NDTV Profit, like I mentioned, the only channel over there at the venue where Trump is going to be speaking and getting you live footage right from where the action is about to unfold. Like we said, Trump has landed in Davos and his chopper is over there. Now it's onwards to the speech and what big ticket announcements he's going to make over there is going to be extremely critical to watch. Meanwhile, we are carrying on this conversation and we've got Arvind Sanghera joining us, managing partner at Geosphere Capital. Mr. Sanghera, great to have you with us. You think this is the clearest signal yet that the transatlantic relationship is entering a structurally unstable phase under Trump?
Yeah, I think that train has already left the station. I think at this point, the rupture was well explained by Prime Minister Carney. I think it is very hard to put, as they say, the proverbial genie back in the bottle. I think at this point, nobody in any major country can afford to trust anything that Trump says because it's subject to change of mind. So I think the answer is yes. I think Trump may talk nice, but he's not backing down on Greenland. I don't think he's going to back down on his strongman image or on his view that, his Donroe doctrine, which is the modern Monroe doctrine of spheres of influence, all of those are now cast in stone. How that plays out in which sphere, where, remains to be seen, but it's essentially destabilizing. And that's something that, markets, investors, business people have to get used to, and companies and governments have to get used to.
Are they going to get used to it? Richard Harris is joining us, Chief Executive at Port Shelter Investment Management. Good to have you with us as well, Richard. Richard, what do you think? How sanguine would the markets be? Knowing Trump's ways, yes, you wake up and then there is this headline that will grab attention and markets will react. But how much of all that is being talked about, all that becomes a rallying point between Europe and America right now on several critical issues that are at play because of the tariffs playing out, how much of that is actually getting factored into the markets? How is it being seen globally?
Well, I think the markets are still trying to figure out what's going on, just like everybody else. As your last speaker said, we wake up in the morning and Trump's contradicted something he said just before we all went to bed. So it is very difficult to see what's happening. But I think that Greenland, this issue is really quite fundamental because you can look at Iran, you can look at Gaza, you can look at Ukraine, you can look at Venezuela, but they are relatively small in terms of global market issues. We're talking about a real rupture between the US and Europe. And don't forget, you're looking at 1/3 of the world's trade between those two. So if that's disrupted, you can imagine exactly what's going to happen to the global economy. We may well see global recession. We'll certainly see some real issues in the markets. If nobody has any money, who's going to buy all those AI products that are going to be coming out? So that's why I think Greenland is significant. The other thing your speaker said a moment ago is the train's left a station in a lot of these things. People don't trust Trump now geopolitically. They don't trust him for the independence of the central bank. He changes his mind on a great number of things. He ignores the checks and balances with the presidency. So it's extremely difficult for market participants to really figure out where they are. A lot does depend on the speech today, but I think you're right. I think he will be conciliatory, and I also think that he will also dwell quite a lot on domestic issues. Remember that politicians often give speeches overseas for their domestic audience, so we may well see more on domestic issues such as affordability than we actually do on Greenland.
Do you agree, Mr. Sangir? What are your expectations from Trump's speech? Do you think this is going to be about domestic politics? Because Mr. Trump has a lot to gain from speaking directly to his voters at this point in time. But of course, Greenland is top of mind, and that's the buzz in Davos. So in terms of the disruption that any kind of Trump statement can cause in a speech of this kind, which is being so widely watched, where are your expectations pegged?
If the question is from me, I agree. Yes. I agree that domestic is, affordability and the midterm elections are top of mind for Trump. And it's ironic that in the last couple of days, he's focused on foreign affairs with Greenland coming to the fore. And then he's going to go to Davos and maybe talk a little more about affordability. And I think Trump likes to, mix things up and be unpredictable. So it would not surprise me at all to see a focus on how he's making things more affordable, and in a global sense, how he's helping Venezuelan oil get unlocked, how he's helping other affordability issues, including a kind of claiming victory on foreign policy. But the idea that he will not touch on some of his grievances globally or some of his views, I think is probably too much to hope for. But hopefully, we don't get too much dwelling on that and more in domestic, because that would be a sigh of relief for global markets and for countries around the world if he's focused more on domestic affordability and can, focus on how he's going to make that better.
But how concerned would exporters be, Richard, at this time? Because this could be really damaging, this constant uncertainty. Tariffs today, counter tariffs tomorrow. for long-term contracts, for pricing, all of this is up in the air. And it's almost always up in the air. So for them, how do you see what is playing out right now? How is it likely to affect their future?
Well, I think obviously uncertainty is bad for markets. You know, that's a truism. But don't forget, I think that one of the key truism is TACO. Trump always chickens out, TACO.
Yeah.
And by that, I mean that the Europeans have been really exercised by this. There's clearly a lot of opposition. I'm sure he will continue to talk tough for a little while, but if you see time and time again, when he meets real opposition, he chickens out. He'll know just as much as anybody that a real split with Europe is going to cause serious damage to the US economy. So I think he'll push it as far as he can. The big danger with that, of course, is how much damage is done in the meantime. We've already said that there's a real credibility issue with the Trump administration and pretty well the rest of the world. There's a lot of damage there. There's a lot of concern in the economy, as we're mentioning about the independence of the central bank, interest rates, the use of the judiciary against some of his opponents. All of these things have actually undermined credibility. And the key thing is how much damage is going to be done before he finally backs out and puts his spotlight somewhere else.
In fact, former diplomat and High Commissioner Veena Sikri is also with us. She's joining us on the phone line. Veena Sikri, what is your expectation? Is there a TACO that is expected over here from Trump? Because part of the expectation is that because European leaders, they are pushing back and doing it strongly and doing it very publicly. So is this coordinated resolve, or do you think we're likely to see divisions within Europe once that economic pain sets in? And that's a little bit into the future. But do you think that could happen, or do you think Trump is going to retrace, seeing the kind of pushback that the Europeans are gunning for?
I think this is part of the Trump bargain. I think what he's going to get what he wants in Greenland minus the sovereignty. I think he will want this to be a breaking point with the Prime Minister Carney's speech was very significant on this point. It is in many ways a path-breaking speech, signaling that countries are just not going to, roll over and wait to see what happens to them. So I think that there is going to be free and frank discussions. Already, America has a military base in Greenland. He will be able to get more military bases. He will be able to get the sole rights for exploitation of the rare earths and perhaps gold and other material. He will be able to get the real estate development that some of his friends like billionaire Lauder is already doing. And I think all that will happen, and there will be an agreeable settlement on on Greenland. And I think that it will be in Trump's interest to appear conciliatory. He cannot come on a global stage like this and again appear to be, taking on the entire world, because that won't help America's image at all in the rest of the world. And this is the important point that I think he has been told to watch out for. Back home in America, there has been a lot of murmurings from within Congress among the senators and the others, and I think that too he has to take on board. His popularity ratings are certainly not going up. They're only headed in the wrong direction. So I do think that he will make some important statements. I think as it is, his own proposals for the border peace haven't really been welcomed in the way that he thought they would have been welcomed. And we've even had President Macron declining and so on. So the pushback has started. President Trump will appear conciliatory. He will get everything that he wants on Greenland except the sovereignty, and that will be the way out.
So in that case, Europe may not activate or may not even to the point where they need to activate their anti-coercion instrument. Mr. Sanger, what are the chances that that could happen, this anti-coercion instrument that Europe may not have used? Is there a possibility right now that it could be against the US if the Americans do push through and Trump is not as conciliatory as Veena Sikri is pointing out that some of you have been telling us? Does that materially change how global trade flows pan out?
Well, I'm not so sure that Trump is ready to call quits yet in terms of pushing. He may not push it too much in the speech today, but the reality is that if you look at the European side, the Germans already came out against that, that extreme measure which Macron from France has suggested. So I don't think the Europeans are divided. I think the Europeans are divided on how strongly they want to push back. They definitely want to push back. But what the nature of that pushback will take, there's been many thoughts about trade retaliation, about even selling US treasuries. So, there's a lot of stuff that's out there. And Trump's speech will, I think, to some extent, determine as to how aggressively Europe responds or how they take it a step at a time. I think the minimum that's going to happen is that the trade deal that was signed with the US or that was agreed to with the US, which is supposed to pass the European Parliament imminently, will be put on hold till this whole 10%, 25% tariff threat is resolved. So I think that that all bets are off the table, and I think things are going to get worse before they get better, because I don't think Trump is going to completely back down, and I do believe that Trump is kind of more about history books, about acquiring Greenland like former presidents got Louisiana and Alaska and what have you. So he's been offered the full defense option, and he's refused.
Yes.
It's going to take serious pain before he agrees to that. The pain hasn't come yet.
The pain hasn't come yet, but can it anytime soon? Tamanna Inamdar, my colleague, is at the venue where Trump is going to make his speech. And Tamanna, if you can hear me, I'm having this interesting debate over here, Tamanna, where there is one side that believes that Trump may go conciliatory right now. He doesn't want to stretch too far. He's going to talk to his voters back home, and he wants to perhaps really, smoothen out the ruffled feathers as of now. He may not go too far in this speech. The other side believes that he would, because there is that much more grandstanding that needs to take place when it comes to Greenland and tariffs, and express the American point of view very clearly, or the Trump point of view more than anything else. What are you picking up there?
Look, before I tell you what I think, and frankly, either here nor there will be correct, or we'll just know in some time, I want to just give you a sense of where we are. So if you can see the Congress Hall, the sign there which says Congress Hall, that is where Trump is speaking. It has a capacity of about 3,000 people, if I'm not mistaken, and it is packed. This entire area has had people queuing up for the last hour and a half. What you're seeing on the side, it was people waiting to see a glimpse of him. Because we're not sure what side he's going to come from. So, or is he coming right from inside? Everything has been very hush-hush. Since this morning, there's been speculation that this session would be extended.
Sorry.
That's all right. This session would be extended. Sorry, we're going on the fly here, so viewers should understand this is not maybe going to be like a perfectly produced piece, but we're trying to get to the live action from where we are. His flight got a snag. A technical snag on Air Force One, so what we were told, and had to go back. Meanwhile, he's come 3 hours later, but even so, well in time for his session. And you can see the full school here. I don't know if you got it back in the shot, but that was Chandrababu Naidu just passing by right now. Yeah, there he is. There you have Chandrababu Naidu over there. You have over here, all coming and listening into what maybe Trump is going to say. You're going to have everyone here. So the plenary session and that main hall is packed. They have 3 overflow sessions as well. People have made their way there. I think those are also full capacity. But no, everyone's started to hear what he has to say. Now, coming back to your question about what the fuzz is there, many theories. I don't know different. One theory was that this idea of arriving late, maybe there was a technical snag, but a bit of a power play, because he kept the world guessing about when he was going to arrive. The second part of it is whether he was conciliatory or not. Let's look at it logically. Has he shown any signs of being conciliatory in all of the commentary and the social media posts in the last 48 hours? The answer is no. Is there any reason for him to be conciliatory? The answer is really no. And the fact that he reached the text that Macron sent him, that shows me that Trump is trying to give I don't really care what I'm going to get my way. Also, what we're picking up, some of the sessions, because remember, the key Trump team has been here for some time. Eric Trump was here last evening. We were at an event where someone was heading to the East. Eric Trump, we know Howard Lusnik is here. He spoke earlier today. So his top team is already here. And what they're saying is on point. Nothing is changing in what they're they're saying. So there seems to be no real reason for Trump to go conciliatory at any point, is what I would add to the debate that you're having right now. But I must tell you, the atmosphere is completely exciting. Everyone's waiting with bated breath to see what's happening. And we're the only channel actually getting you the feel of what's happening here from the ground, just meters away from where Trump is going to talk. And maybe deliver the speech that the world is waiting for.
And very quickly, Tamanna, because you said the who's who is over there and you've had a chance to speak to some of the who's who of India Inc., you asked them to look into the camera and have asked them to ask Trump a question. What was the trend question that you got from them?
I think some very interesting ones. One person said, Trump, India loves USA, India loves Trump, so let's try and watch this out. I think that was Amit Kalyani. You had, Mohit Joshi asked that question to him today. He said, I'm not going to say anything to Trump. I'm just going to give a victory sign and ask for a selfie because it's best, not to manifest and you don't know how he will react to what anyone will say. So people have been pretty candid with their responses of what will happen. One response from someone who said, the one thing I would tell Trump is take a break. So I don't know if that's going to happen at all. And that was really on the lighter note to think about, to get a sense of how India Inc. is looking at what Trump is going to do. Remember, from that standpoint, and you've seen what's happened in the markets also the last couple of days, not just Indian markets, in the US markets as well. This whole brewing of tariff rhetoric is putting everyone at an unease. You've seen gold prices zoom as a result, etc. Now, for some major Indian corporates here, and I was speaking to someone in the pharmaceutical sector today, who was saying that I don't know, from what Howard Lutnick said at one of the sessions which happened right here at this venue, it seems like the US may cut down on the pharma sector. If that were to happen, it's a problem.
Thank you so much.
So those are some of the comments which is going on. The World Economic Forum. Wait, if you just hear that.
The Fusion Room, Sonata, Aspen 2 or Aspen 4 for the overflow. Thank you so much for your cooperation.
So here's what she just said. The session, the hall is filled to capacity, and now there are 2 additional overflow rooms that have been opened up to seat people. I think at this point, it's every man, woman for themselves to find a spot to sit down and just listen into what Trump is going to say. He literally has the who's who of the global elite with bated breath waiting for his speech. And I know we're going to cut live to it as soon as it starts, so our viewers can stay on with it and listen to it there as well.
Absolutely. We had a brief look at the venue, at the exact spot where Trump is going to be speaking. And of course, all eyes and ears are going to be trained in that direction. Tamanna, we'll keep coming back to you for more of the action as it unfolds. And the speech, of course, we'll be watching very closely and hearing very closely as well. So indeed, as far as the action unfolds, this is for India going to be a delicate balancing act as well, because at one level, we're trying to deepen ties with Europe without antagonizing Washington. Is this a real balancing act, Veena Sikri? What do you make of it? We seem to have lost connection with Veena Sikri, but in your opinion, we're looking at this entire development where the Indians are trying to do a deal with Europe. So, Richard, in your understanding, this kind of FTA that India is trying to do with Europe, how important a play and timing is this? Because we haven't been able to get that piece moving with the Americans, and that still lies in the balance. At that point in time, to deepen our ties with Europe, what do you think is going to be at play? Is going to be an important... sorry, before I come to you, we've got these live visuals from the center, the Congress Center, where Donald Trump is about to make his speech. He's arrived on stage, as you can see, and he's about to make that speech that everyone is about to listen to. So let's just tune in.
Larry, it's great to be back in beautiful Davos, Switzerland, and to address so many respected business leaders, so many friends, few enemies, and all of the distinguished guests. It's a who's who, I will say that. I've come to this year's World Economic Forum with truly phenomenal news from America. Yesterday marked the 1-year anniversary of my inauguration, and today, after 12 months back in the White House, our economy is booming, growth is exploding, Productivity is surging, investment is soaring, incomes are rising. Inflation has been defeated. Our previously open and dangerous border is closed and virtually impenetrable. And the United States is in the midst of the fastest and most dramatic economic turnaround in our country's history. Under the Biden administration, America was plagued by the nightmare of stagflation, meaning low growth and high inflation, a recipe for misery, failure, and decline. But now, after just 1 year of my policies, we are witnessing the exact opposite. Virtually no inflation and extraordinarily high economic growth. Growth like I believe you'll see very shortly our country has never seen before, perhaps no country has ever seen before. Over the past 3 months, core inflation has been just 1.6%. Meanwhile, fourth quarter growth is projected to be 5.4%, far greater than anybody other than myself and a few others had predicted. Since the election, the stock market has set 52 all-time high records. So that's in 1 year, 52 records, adding $9 trillion in value to retirement accounts, 401ks, and people's savings. People are doing very well. They're very happy with me. Since my inauguration, we've lifted more than 1.2 million people off of food stamps, and after 4 years in which Biden secured less than $1 trillion of new investment in our country. Think of that, 1 trillion, substantially less than that. In 4 years, we've secured commitments for a record-breaking $18 trillion, and we think when the final numbers come out, they'll be closer to $20 trillion of investment. That's never been done by any country at any time, not even close. Just over 1 year ago, under the radical left Democrats, we were a dead country. Now we are the hottest country anywhere in the world. In fact, the United States economy is on pace to grow at double the rate that was projected by the IMF just last April. And with my growth and tariff policies, it should be much higher. I really believe we can be much higher than that. And this is all great news, and it's great for all nations. The USA is the economic engine on the planet, and when America booms, the entire world booms. It's been the history. When it goes bad, it goes bad. You all follow us down, and you follow us up, and we're at a point that I don't believe we've ever been. I never thought we could do it this quickly. My biggest surprise is I thought it would take more than a year, maybe like a year and 1 month. But it's happened very quickly. This afternoon, I want to discuss how we have achieved this economic miracle, how we intend to raise living standards for our citizens to levels never seen before, and perhaps how you too and the places where you come from can do much better by following what we're doing, because certain places in Europe are not even recognizable, frankly, anymore.